you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knucklehead. Happy Thursday to just you, my son. How are you this morning?
I'm good. How are you?
Good. Got my watch on. Feel better.
Good. You feel better now?
Yeah, I feel complete.
It's one of those things like you feel like you're not wearing underwear. It's like that sort of level of like
Yes,
when you wear a watch every
speaking,
day.
yes.
It feels like you're like naked a little bit.
Yeah, it feels like the universe isn't in line. Although everything was in line yesterday, if you're talking about the universe. I mean, the market did absolutely nothing yesterday. It was basically a reset day.
Yes.
Volatility actually looked like it was contracting for most of the day. We had like SPOOs down small, NASDAQ down small, Russell down small. Volatility was also down. It seemed like market was actually kind of maybe something. And then, you got the oil war and everything else going on.
After hours, yeah. We called it a breather.
A breather day.
Vecchio and I. Like you had like 2 days of just wild volatility in both directions.
Yes.
You got all sorts of geopolitical stuff. You got oil going crazy. And yesterday was kind of just like let's just chill out for a sec. Yeah. We'll attack each other in an hour.
No,
tomorrow we'll attack each other in the markets. We'll make our bed.
From there? Well, that's good. That's good.
It was a little bit of a crazy day. But it was interesting to see volatility come in slightly, or at least stay where it was. I mean, Vecchio, I kind of raised that question to Vecchio as well. Like, are we in for a higher volatility regime for the foreseeable future? And he was kind of on the same side as me, as like, I think we're going to see persistent volatility for a little while. But markets were basically unchanged. So you would have expected to see a little bit more volatility come in had the news series not be as crazy. Yeah. If it wasn't as crazy, volatility would have been, a couple points lower, I think.
True. You mentioned Chris a couple of times already. Chris is going to come on the show in about 15 minutes or so. Are
you saying something like he's like my bestie?
No, I mean, he seems to be on your mind, so I figured I would mention he's going to come on the show around 7:15.
Well, he's the last person I talked to.
Before you went to bed?
Before I went to bed. Yeah, it was at 2:30 to 3 for last call.
Nice. We got trades from the research. We got Johnny trades for smaller accounts at 8:40, and then we got our market measure coming. For earnings, you got Adobe. I mean, we've traded Adobe kind of on the tips, kind of in a defined risk way, usually some sort of iron condor or one side vertical spread kind of thing. Markets are a little bit wide in Adobe, but we can take a look at it for earnings. DG and LEN. That's all I got.
DG this morning, trading down about $8, $9.
Gesundheit.
Let's see. Also had Dick's Sporting Goods, DKS.
Oh, I didn't know that one. Okay.
Yeah, we had a trade idea. Somebody posted it for What's Your Assumption yesterday. We were looking at those markets. You mentioned that there's no weekly options there, so that's kind of just like a tell-all for liquidity. If there's no weekly options, it's usually not a very liquid underlying, despite what you're looking at. And into an earnings event, you're at peak liquidity. Like that's the most interest that stock is going to have.
The most eyes are going to be on it at that time, and very little after.
Yes, you have dollar-wide markets in April and March here. I imagine after the first hour or two, you'll see those widen out to $2.
Sure.
$1.50. They're going to be pretty wide markets. So
you really got to have some conviction, and it's up about $2-3, a little bit of a bucker on the market itself, basically down 0.5% or more across the board. Maybe the Russell's the weakest of the group so far. You got the Russell down just about 34, which is about 30-ish, 40-ish handles off of its low, so it's down twice as much. You got the NASDAQ down 140 and change here, about 140 handles off of its lows. You can see the NASDAQ kind of hanging in here when you look at the Russell being the weakest of the group here for the last 2 weeks or so. Even the S&Ps have been following the Russell too, also weak relative. You can see they too have been selling off about 30 handles off of their lows. Dow down 300 and change. about $150 off it, so it's been low too. So Nasdaq's actually been the star of the group here. If you're looking at Nasdaq, ES, Russell, and Dow, volatility's up by 72 cents, flirting with 24. I know it's 23.60 and change. What are you doing already?
It's a quick start, but we're going to get back into. So I was scalping out of NASDAQ so yesterday we got back into what we did with Craig on Tuesday, which was a really great session. I think we did 4 futures trades. We did the gold silver pair 2 ways.
That's right.
We did it with 2 MGC to 1 SIL, long 2 MGC, short 1 SIL, which are the smaller size, the middle size, I should say, now that we have the 1 ounce gold and the SIC. So we did those basically 1-to-1. So
gold silver ratio spread, bought it pretty good.
We did the NASDAQ, long NASDAQ micros, short the NASDAQ call spread. We did 2 micros to 1 call spread. So we put that on again yesterday, and I was kind of scalping out of the NASDAQ as like the micro NASDAQ as a static delta position.
A couple hundred points on them. I mean,
multiple times. It was a great day because you were having 2-sided action. And so I went home with only 1 of the micro NASDAQ contracts, which obviously taking some heat today, but it's been a great. I think we're probably
the position is bullish. We're lower, but you went 1.
But I scalped out throughout the day.
Yeah, 1 future to the spreads. You really should be having 2 futures to the spread. So you mitigate a little bit of the move down, but you still want it to go higher.
Yeah, you still want it to go higher from here. So now I'm adding it. So now I'm I'm back into 2 micro.
It would be like having 50 shares of ABC stock versus a wide spread versus having 100 shares versus the wide spread to be delta neutral.
Yeah. Right. So now I'm more neutral.
Yeah.
Than when I was yesterday.
Perfect.
And then we did the bond position. We sold the strangle in the bonds.
Yeah, how's that working? Because bonds have been pretty weak. They almost traded under 114, 114.04 on the low, 114.13 is where they are right now. I'd be curious to know how that spread is looking. I haven't looked at it for you.
It's down a little bit. We're short the 113, 118.
Right, and the 113
puts we're out about $200.
Got it. I would think that would be the way it would be. You got a little bit of long delta on that trade. Bitcoin hanging in there, 70,000 and change. Kind of a tight range in Bitcoin last night. It's about $500 or $600 off of its highs. Ethereum been hanging out here at this 2,050 and change, as you can see here, for quite some time in this really tight little channel here from around 19 to just about here, maybe a little bit higher. Oil's the big mover. That's the one that spooked the market last night for sure. Oil traded up almost 8%, up to almost 96. It's under 93 right now, still up $5.60. IV rank is high. Volatility is high. It probably warrants a trade. It probably warrants a trade best in /CL as opposed to USO. But either one is pretty good. I think the /CL markets mirror the oil markets a lot better than USO. Gold, basically unchanged, good-ish type market from top to bottom. Silver is actually up 1.75%. Net gas is trading 3.2 or so, in the middle of its very wide range for the last month or so. Net gas has been kind of wild, but too big of a product, and I don't like the markets in the options themselves. If I take a look at even the S&Ps, you got just about a 52 handle move so far today. Yesterday, if you remember, it was about 45 or 46. And we're a little early in the show. It's just after 7 o'clock here. So we'll take a better look at it.
Yeah.
About 8:15 or something when the markets kind of tighten up and get a better look at everything. What you smiling about?
I'm just laughing. Not to bring Chris up again. I mean, it sounds like
a little crush on man Chris. Got a little bit of a man crush going on. You could do worse.
He posted, you remember the game Minesweeper? It was an old Windows 95 game where you'd click on the little buttons and it would either have it would be like a safe space or it'd be like a
blow up. Yeah.
Yeah. Mm-hmm. So you had to clear the whole space. And if you hit a big pocket of if they were connected spots where it was not a bomb, they would open the whole thing up so you could just was like a, a search and find type.
Sure.
He posted one. They made it. They made a remake that is the straight up her.
Smooth. Yeah, it makes sense. Makes sense. I knew that was coming.
Creative. That's creative.
Yeah, sure. Very creative. Very creative.
Yeah.
I don't want to get into it. Never mind. I'm not going to talk about it. It was totally off topic. I'm not going to talk about it.
Yeah.
But this AI stuff, like,
gotta be careful. I've already said it.
No, I'm good, bro. I'm good. I'm good.
Not.
Yeah, no, I am. No, bro.
Not.
I'm good. But now, like,
does Vinny send you stuff?
No, not yet. But now,
where are you? Oh, I'm at church, Dad. And then it's a picture.
you can do that. Like,
I did that yesterday.
I remember you said with your hail on your car.
Yeah.
I mean, but now they've got, like, they'll show you pictures of something that you're interested in, whether it be a male or female doing something in a bikini.
See,
okay,
Beth, this is why you can't leave us.
No.
The two of us alone, because it's 10 minutes in and we're talking about
hold on.
Yeah,
and you'll see them like dancing or walking. Nothing, just walking. On a beach kind of thing. And then in the lower left-hand corner, you'll see a guy. It's like it's a guy doing it, but the picture you see is of a beautiful creature that you are interested in, whether it be male or female. It's crazy. You got to be careful now.
This is going to be
creature.
We don't need him to expand on the details of each part of this video. If you think it's bad now, you are in for, because this is everything moves at a multiple. So, right now you think it's crazy. Next year it's going to be twice as crazy. The year after that, the next year it's going to be a double on that.
Yeah.
It's all, raise it to the second power every single year. It's
crazy.
Going to be that crazy. It's
crazy stuff.
Nuts.
Anyway.
Yeah.
How was your night last night? I didn't ask you. I'm so sorry. Before we take a quick break.
It was good. It was good. It was cold. It's we had one day of nice weather, and then
it was 74 degrees at one point.
I was sitting on my balcony.
There was ice on my windows that I had to scrape it off this morning because it snowed in the middle of the day.
Yeah, it's crazy.
It really is. It really is.
It ruins our St. Patty's Day this week.
Yeah.
Not that I participate. I'm gray-haired now, so it's not part of my repertoire, but
you could probably sit outside your balcony and throw beads or do something. Or
that's Mardi Gras.
I know, but I mean, you could do something for St. Patrick's Day. Throw down green glasses or something like that you get from the dollar store. No?
I don't think so.
Yeah. All right.
Yeah.
All right, listen, let's take a quick 90-second break. Let me go over the market real quick one more time. Even the S&Ps really haven't moved in a couple minutes. I've talked about it. When I go look across the board here, I would say that now oil's back over 93. It was under 93. Not 93 is a special number, but it's just a little bit of movement there. The rest of the board, Russell's still the weakest, down 33, and the Dow, NASDAQ, and even the S&P slightly stronger, still down by 0.5 percentage point. We were down. We opened down 25, 30 handles pretty quickly, went down around 60 handles pretty quickly last night. Since I've been watching since 5:30 this morning, we've been down around 25 handles and down around 45 handles right here. So I would say it's the low end of the range for the last hour and a half or so. I've been tentatively watching the market, and volatility actually closer to its highs for this hour and a half than its lows, although it's mid-price for the overall day. What do you think about volatility? What?
Are you spooked?
Even the S&P is down 60 last night when I went to bed. I did not think I was going to wake up and watch them down 30. That wasn't encouraging to me. If they were down 80, I would have thought the market would have been a little bit better for a reversal.
I know, we still haven't got the washout.
Yeah, I thought we'd get that 2-3 days ago when we really sold off. You were a little bit more bullish than me. You were right. I was wrong.
Story of the last couple months here. Jeez.
Yeah. Man, we've just been a wide, tight range. We've been
everybody's hedged.
Violently unchanged.
Everybody's waiting for the big down move.
Yeah. Yeah.
Can't come.
Yeah. We had 68.50, which is pretty much the mean in this market, 72 hours ago.
Yep.
We're 100 handles off of that right now. You got a 50 handle expected move per day, so 100 handles isn't that much. You saw a little bit yesterday if you had positions on where volatility came in pretty nicely, especially when even the S&Ps were up around 15, 20 handles. If you had 200-300 handles of good delta, meaning positive delta because the market was higher, you were making 3-4x what you should have on your delta. And then when we quickly reversed, if you had bad delta, meaning long delta still and the market was a little bit lower, you were unchanged, actually up small when even the S&Ps were down 5 or 10. So volatility looked like it was coming in. It certainly looks like they're going to take that back today, but we'll see. Listen, we'll let this. He'll explained it to me yesterday about how I should have all.
Yeah, I got some things I want to tee up to him. I'm interested.
Oh, okay, good.
He says. Yeah.
Oh, we're talking about Mr. Chris Vecchio,
well.
your man crush. Well,
yeah.
We're gonna come.
My brother from another mother.
We're gonna come back with him in just a moment. You listen to Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
There's a beast in the financial world. It's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means. Here's your man crush, Chris Vecchio. What's up?
He was giving me flack because I was saying I was recapping what we were talking about on the last call, and he was like, "Oh, you guy Chris, you talk about Chris all the time." Yeah, he's like giving me one of those. Like, is this your guy? Is this How are you, sir?
Seeing some things that we discussed yesterday play out today, which it's a very fluid market. So tomorrow the situation could be totally different. But oil prices
tomorrow, the next 3 hours could be different, right? I mean,
we're all in the monitoring the situation group.
That's right.
We're monitoring the situation. We have ears and nose to the ground. We're monitoring everything.
Yeah, they put a new bar in my town. I was hoping it'd be like a bar that had like CNBC and Bloomberg and Tasty Live and like Polymarket odds and like the Pizza Tracker. and instead it's a Wogie's, which is a Philadelphia Eagles sports bar.
Ooh.
I have no idea what these people think they're doing in my town, but
hey, listen, if there's anything, I have a couple Philly bars that are close to where I am, and I've watched games there. You got to be real careful. Like the Philly people, they have really good hearing. You say something wrong, and you are fighting with a table of very, very drunk Philly fans, and they got
Passionate.
They're passionate. They're passionate. They're loud. Philly, and the scariest part is the women might be scarier than the men. Philly women, ooh, they will get you. They will go. They're low blows. They'll get you. They will get you.
You sound like you're speaking from experience.
Yes. Oh yeah. The Philly fans. They get wild. They get wild.
Nick, you started this off with talking about how Philly people have great hearing, and you just said this all on camera. You know they're going to be coming for you today.
That's true. That's true. But they know. They're a proud people. They're also, they know exactly who they are. So, I've many a Philly friend. So, not throwing any shade. I don't want any smoke from my Philly peeps.
To be clear, I am throwing shade. There's a reason it was passed over as a capital for the country.
Wow.
You're going further
also,
back.
I live with the Philadelphia Phillies fan in 2007, 2008 when they went on to the World Series, and more importantly, when the Mets were in the division lead in September of those years by like 5, 6, 7 games and collapsed. And one of those guys, still very good friends with him to this day. But I made a bet with him that if the Phillies won the World Series that year, I would move out and have to find a new place to live, so he would have an apartment for himself.
And
so the second half of that year, I had to find a new place to live because I bet my living situation on the frickin' Phillies in college. My parents weren't thrilled that they were paying the school for housing that I wasn't using.
That's very good. That's cute. What are you betting on? What are you betting? That's right. What are you betting your house on in the market now if you had to? What would you put the house on now or your living quarters?
Yesterday, the only thing I really operated in was oil and getting on the long side, a little bit of a short put spread, a little bit of long call spread. That's out of the money. And now today it's in the money. The rationale, there's a nice technical chart there. If you were to look at an hourly chart, a little beautiful inverted head and shoulders pattern, we love to see that if you're looking for the market to swing higher. But then, over the course of yesterday, I was kind of pulling my hair out, doing the math on all of this, looking at simple supply demand models that come from economic textbooks, Tony. But even so, using that, you could substantiate that crude is going to be sitting above $65, $70 for a meaningful period of time here. Saudi Arabia is talking about
$65, $70. I mean, that's 25, 30% below where we are right now.
And look at a short put spread down there. You could still get something that's below even this week's lows or the February lows. That's close to a 2-to-1, maybe a 3-to-1 risk to reward, right in that typical 60-odd% tasty probability of profit. The market still has a ton of vol priced in here. I mean, it's another day with a new high in IVR for a new high in volatility for crude oil. But there are ways to express bullish views where you don't need to just simply get long out of the money calls or even long crude oil itself to take advantage of something that's probably going to stay afloat for many weeks at this point in time.
I will say the one caveat here is that because of the volatility and because of the massive skew, those put spreads or even naked puts, you're going to be holding them for a long, long time. Just to give you an example, I sold the 65 120 strangle and the 65
in April.
In April,
35 days, which is actually tied to the futures are going to roll.
Yeah, which is tied to a lower
tomorrow, right?
Yeah, which is and I want to go there in a second,
sure.
But and that's tied to a
92,
just under 92,
as opposed to 93
oil.
Where we're trading now.
Yeah, but oil has rallied about $6 or $7 in that contract. The 65 puts have gone from 230 to 167. I mean, they really haven't moved all that much. Right. The call has 3x'd
right
on that same $6 move. So, I'm with you that it definitely makes sense to be on both sides here, but you got to be careful thinking, that 100 oil is going to be, an amazing trade for a put spread. The put spread might only move 20 or 30 cents because it's pricing in that we should be at 100 right now.
Yeah, and you definitely
that's
good.
Yeah.
Go ahead.
No, Tony, sorry.
Okay, you definitely have. You just talked about, how futures are. we just talked about the future that's going to expire in the next week or so. You got 5 days left, going to roll soon tomorrow, start rolling. But when you go out, and you don't go out that far, you look at how you've got oil priced a year from now, $70 and change versus the $90 plus that it's trading right now. And Chris, you said something kind of interesting, like, you're looking at an hour chart, and then you're looking at some technicals and everything else. I mean, it's news driven, right? I mean, the news that we got was the Strait was fine, and then all of a sudden maybe 2 ships were on fire or something like that. And that's what was the catalyst to this move.
For sure.
So I think you could throw out volatility, which I like to look at right now. When you get markets that are so headline driven, and I love to fade these kind of headlines, especially on extended move. But when you get these news driven, you can throw out volatility because that can change in the blink of an eye. And you can throw out every line that you want to draw, whether it's a minute line, hour line, or monthly line.
Minute line.
Yeah.
Don't do that. We don't go down to the minutes.
Yeah,
for
don't
that.
go down to the minute. That's
Are you kidding me?
But Tony,
I've got people
like
that write into me. I got a W pattern, with on a 5 minute chart. I've got which is
that's
great.
very unhealthy.
Yeah, I mean, it's you guys get a little granular sometimes.
Yeah,
it takes.
We're not going that far, but hey, for those people actually today, Helene Meisler.
Okay.
She tweets everything. She's been tweeting charts for years on Twitter. I think she's one of the first 100 people in finance on Twitter. We're going to be interviewing her today. We're putting together a video. We're going to be talking technicals and how to operate in markets like this.
Awesome.
So that's going to be recorded around noon. I think we'll have it up later on in the day for folks over on
I don't know
YouTube.
how much weight I put in everything she does, but I'm going to give her some props because she does everything still with paper and pen. If I remember her correctly. Am I remembering her correctly?
You are, and so I
got to give her props because I used to do it when I was a clerk for Kenny Weiss a long time ago, when I was under the age of 21. I think it was closer to 19 or so. He would make me do X's. I would do 3 X's when the stock went down like 30-ish cents or something.
Like 10 cents an X.
Yeah, three down ticks in a row. And then I'd have to do an O if it came back up. And then we would do an X. And then he would look at those and he would figure out exactly what was going to happen next.
I love that. That.
So if she can do that to this day and not embrace the computers, she's my kind of gal.
I love that you're out there just doing like point and figure charts with your hands and just making them in real time. That's something.
Yep. That's what we do here.
That's wonderful. So, with the technicals, could I just say, I think of it like a place setting right now. If the chart looks, this looks really bullish and it's in oil, given the news flow, we probably should put our chips in on it. It feels like if you just need a catalyst then to give us the kick that other people may be looking at. So I hear you though. You got to throw away a lot of you have to be flexible. You're adaptive right now. We're not sticking to anything, too significantly, but hey, the setup was there, took a roll on it. It's working out. We'll see what happens. But Nick, I want to, I'm happy writing that out for the next 20, 30 days and just letting these sit in my book. And it may take more time for them to realize, but 62 oil is not coming back, my brother.
Okay. I think that's a fair assessment, but I want to put this one out there because I was in this discourse on Twitter yesterday, but and kind of just going down the oil rabbit hole. But my question being, so you look at oil and you look at kind of the curve in oil, and if you just look at across the board, you got mid 90s here in the front, and as you go further out, you're at the end of the year or into early next year, you got oil trading in the 70 handle. If we were looking at something that was projected to be a
70 handle with a $20 expected move.
Yeah, with
just
to
give you.
Yeah, but that's a big difference. I mean,
huge difference. I'm supporting what you're saying. Just giving you the math behind.
So my question to you is, if the market was thinking that this situation was about to be a year, 2 years, 3 year long problem for oil / maybe the war goes on for longer, whatever, would you expect the curve to be a little bit flatter / higher in the back?
Yeah, exactly. So the shape of the futures curve in a temporary supply disruption, which is what the market still is pricing in when you look at the shape of the futures curve, you're going to have steep backwardation.
Yeah.
That's that actually is good. If you're holding something like USO, that's good because you're generating positive roll yield right now. You're selling your March oil and you're buying your April oil. You're selling your April oil, you're buying your June oil, right? And so you're collecting that difference. And ultimately, it's one of the reasons why these oil ETFs tend to outperform. Like USO, for example, tends to outperform even CL itself if you're trading it during these periods. So there's that going for it, one. But two, if we do see this coming into a bigger, longer time horizon, the curve should not be as steeply backwardated. And so if you think that it's going to be, given how prop spreads have blown out, it's not unreasonable maybe to pick up a little bit of crude that's later on this year with the possibility of generating some positive roll yield along the way. It's going to be something you're going to hold, ride out. It's not for everyone. It may not even be for the typical tasty trader, but there is this mechanics right now in the market where, given the steep backwardation in the curve and the fact that it's only being priced as a limited supply disruption, you could generate positive roll yield if you're correct in your assessment that this thing goes on longer than 2 or 3 weeks, as the administration has suggested.
Yeah, I mean, I think the way the curve is right now, it's telling you that, this is over in the next 90 days.
Yes.
I mean, that's what it says right now. So, I look at that and I say, yeah, sure, the market can be wrong. They're in hindsight, we usually look at it and say, okay, well, that was a little cheaper than it should have been, or that was a little bit more expensive than what it was. But right now it's telling you that, this could be pretty short term.
The curve is not exactly giving you the signal that this is going to be a significant long-term disruption. But Nick, you and I on last call yesterday were starting to talk about how other names adjacent to energy that transit the Hormuz, those are starting to perk up. This morning with the latest developments, those fertilizer names are going off the chain, and I don't have nearly enough exposure. So not capitalizing my own idea as well as I should be, but CF, Nutrien, Mosaic, Intrepid, right? You're looking at 3, 4, 5% higher pre-market here. And these names are behaving in a manner that's consistent with what happened in 2022 with the Russian invasion of Ukraine. You may be starting to see some of these energy equities struggle. Like Schlumberger yesterday didn't have a good session because they said they have to stop sending personnel into the region. If you don't have people pulling the oil out of the ground, then you can't sell it even if it's at $100 a barrel. So the fertilizer names are the most interesting ones right now. Maybe we have to go over into the soft commodities, the ags, corn. Corn's primary fertilizer is urea. Urea, 40% of that makes its way through the Strait of Hormuz. This is not just an oil problem anymore. This is a problem that's going to hit the economies of a lot of regions and other sectors. It's like COVID meets Russia, Ukraine at the same time, effectively.
So you think obviously looking at the fertilizer companies, though, that's a way to play this, but you think ags in general could see a little bit of a bid here if this continues for a period of time?
Yes, and my primary efforts this morning, now that I have the oil that I want, my primary efforts this morning are going to be looking to deploy capital and the adjacent names that would benefit from continued supply disruptions.
I mean, Mosaic has decent markets.
We got in there yesterday.
Yeah,
I did it with Vecchio on the close. Sorry to throw his name out.
That's okay.
I know you're feeling.
I know you love your man crush.
You're feeling a little replaced. I know you're feeling the heat a little bit. It's okay.
I'm waiting for the day. Mosaic up $2. So you've got a good. You got a good play there so far. Of all the stocks that you mentioned, that was the only one that I think you could make an argument on price to play it from the long side. Those other stocks you mentioned, you're buying high and trying to sell higher.
For sure.
It's a slippery slope.
Yeah. But as a trade, I mean,
I get it. It's a trade.
The market has been super news driven.
Yes, 100%. Be nimble is all.
Be nimble. And if you don't want to do it via options, you could buy shares just kind of scalp it as you would a NASDAQ future, something else.
Mm-hmm.
Yeah, Tony, that last point you just said, be nimble. I usually have a North Star. This is the kind of market where it's like, let's reassess everything every morning when we wake up and see if we're still, are we still on the straight and narrow path? Because if we're not, we need to make adjustments the way this thing is moving so quickly. And there might be mistakes. On Sunday night, I jumped a bunch of my oil positions, and had I just held on to them, they would have been great Monday and Tuesday. Yesterday wouldn't have been fantastic. But So then today they'd be out of the money again. And, okay, maybe I made the right decision. You can't question yourself. You have to just have a plan. If it deviates from it, throw the plan away, get a new one, start operating around it until you're proven wrong. And be flexible. Don't get married to anything here. I know Jamal took a whole thing about this last week when I said we should be speed dating, not getting married. I stand by that. We're not getting married to any idea right now.
How long you been married?
11 years on August 15th.
Have you ever been speed dating?
While married? No.
No. Good answer. Good answer. Prior to being married?
No.
I've only seen it on TV. It seems like probably the worst thing that you can do in life. But I guess in trading, I agree with you 100%. You should be speed dating and not marrying anything. I agree with you.
I was thinking like a tonsillectomy would be worse than speed dating, but
He says that, but he probably knows all the ins and outs of this because he's watching all the Love Is Blind. There's the one I've seen that with the old people now where it's like
Age of Attraction.
There you go.
I watched
he watches.
No. All right, you're outing me, but I'm going to come clean because I don't lie about anything on this show.
He's like this macho machismo guy. He's at home like, oh, that one's so cute. Like
jumps on the bed, his feet are kicking up on the bed.
Yeah. They're like eating like cookies and ice cream. Like it's, in
matching pajamas.
Yeah, he might as well be speed dating.
I want to deviate from the market because you guys are doing great here, but my wife was in the entertainment, be nice out there, industry for a long time in the past. And she had a girlfriend who was going to be on Age of Attraction, which is a new show that came out, which is basically, you don't know, the whole premise is you don't know how old everybody is, and you meet together, you do a speed dating thing, which back to what Vecchio said, and then you can go into this promise room where you can then go to an apartment where you guys try to see if you can make it work, blah, blah, blah. So she had a girlfriend that was on the show.
Are they making an Epstein Island show?
Epstein Island show for older people.
For older, yeah.
The ages were from 22 to 60. Okay? I mean, so you can imagine the producers want the 30-year-old with the 60-year-old, you know what I mean, or the 20-year-old with the 50-year-old, that kind of thing. Yeah. Well, we watched the whole thing to see her girlfriend, and she was never part of the show.
Didn't this come out like 2 days ago? You watched the entire thing?
Yeah. Well, my wife wanted to watch it to see her friend who's been tweeting out and on Instagram and everything else. She had 2 lines. So that was, yeah. Anyway, I digress. So.
I had a friend.
It's a horrible show, by the way. I mean, if you're not going to get any compensation from your significant other, so pre-plan. Okay. So pre-plan. Okay.
Tony,
and then
you want to hear something terrible?
Sure.
I had a friend years ago who got cast in a movie. He got maybe 30 tickets for the theater for opening night. He took people out to dinner beforehand. He wore a suit to the movie theater. We watched the movie. He was cut.
Yeah. This is what happened kind of to her, unfortunately. Yes.
It's brutal. I still remember my buddy was so embarrassed.
Yeah.
Because he just had no idea. They didn't tell him.
Yeah.
They don't tell you if you're like going to get cut from it or anything. Like,
they did the whole thing in a few weeks. You know what I mean? They shot the thing in a few weeks, but they make it seem like it's so much longer than that. You know what I mean? To make a story and everything else like that. No, to my knowledge, she didn't have any. She really couldn't talk to my wife. Now that it's out, I guess they could talk and you could see if she knew. But no. Hopefully, she'll be the Age of Attraction host or something for the next one. That's her only thing that she's. I think. I don't think. Oof. It was sad.
All right.
And always go on to Wheel.
You didn't miss anything. A Song Blue. Have you watched that?
He went on this. That's not got him started on.
Have you seen that one yet, Chris?
Not yet. Not
you
yet.
And the
I haven't
wife
watched much TV.
You and the wife watched that. Very entertaining, based on a true story of a Neil Diamond Experience impersonator from Wisconsin. True story. You'll love it. You'll cry. You'll laugh. Shock and awe. You'll enjoy it. It's a good one.
Oh, I like the Iraq War reference while we're back in.
Yeah. Sure.
Appreciate that.
You're welcome. All right, what else we got from you? Give me some more. Even the S&Ps, as we're talking, flirting with their lows since we've been on the show, down 50. About 20 handles off of their lows. for the night.
Sure. So we not only have oil moving back above $100. There was a
you're talking about Brent crude, right? When you say that,
Brent crude, yes. Yeah, Brent was back above 100.
Yeah.
I saw a funny article on Yahoo a few days ago, and it made its way over to CNBC this morning about tech stocks being a safe haven right now, which actually isn't that absurd of an idea.
Yeah.
Because in 2022, Nick, what happened? The Russell, the companies with the smaller moats, the companies that have less secure cash flows were the ones that took it on the chin first. Mm-hmm. Even if there's a supply chain issue, Josh, downtown Josh,
Josh Brown.
Josh Brown, right? He said on a podcast yesterday, I saw the clip, maybe it was from a few days ago, but I saw the clip yesterday, that the companies that are doing well in this environment are ones that have, cash flow stability. It doesn't matter what's going on with Apple and AI. No one is worried about their margins. No one is worried about their product quality. Everyone knows that they're going to have their sales, right? And so how are they justified trading at a 38 PE? Because of those reasons. They're not going to be growing at 38 times their earnings, but it's secure cash flows. I thought that was a really smart point because, again, in 2022, the mega cap tech stocks outperformed the Russell and the small caps and the mid caps. So right now, if there are concerns over input costs and margins going up or going down, and who knows what the cost of getting our goods from point A to point B in the future will be, who's more at risk? Is it going to be the Apples and the Microsofts and the Metas of the world, or is it going to be the, rinky-dinky, non-profitable company that's sitting in the Russell 2000? It's probably going to be the latter. So in this environment, tech may go down, but it may go down less than the Russell. And so on a relative basis, if I'm looking for anywhere to buy dips right now in this market, it's going to be in those Mag 7 names. I'm currently sitting long Tesla. I want to get a little bit Meta here. I'd like to get some more Google going because Google's been just the best.
Yeah. I mean, this is how I've been positioned for most of this year. And I will say there was a period of time where everybody was like, oh, the Russell, we're going to cut rates and the Russell's going to go up. Now it's flipped to the other side.
I may have been one of those people, and you were saying, Chris, in what world is the market going higher with small caps leading the way?
No. I wasn't going to out you
because there's always two ways of looking at everything. I'll give the Russell a little support here. What's it down? Almost 10% from its highs. From the beginning of the year, right? Something like that, isn't it? And the rest of the market's down what? 5%, maybe. Let me see. Even the S&P's high is around. Well, if you go for the year, the high tick is around 7,050. We're down. Let's just call it 6,750 on an uptick. So you're down, 5%.
Yeah,
5% on the E-mini S&Ps. 10% is typically the bear market in.
Yeah, but you usually have added volatility in the Russell too. So
10% is a correction.
Correction.
Oh, 20% is correction. We haven't had a 10% move in something in 5 years since you're quoting 25 years ago.
Oil just came out of its 24-hour bear market.
Yes, it was down 30%. That's a bear market for sure.
It was a bear market, now it's bull market again.
Right.
I love Dr. Jim when he said that the other day. He goes, guys, don't worry. It's a bear market in oil now.
Yeah, I gotta give him credit for that. That was one of the smartest things he's ever said.
That was good. I will say, Chris, to your point about these Mag 7s, they've almost been commoditized. And if you look at all these charts, besides Microsoft and Meta are at lows, but they haven't gone anywhere through this whole thing. They have $3 or $4 intraday ranges basically every day. Mm-hmm. They go nowhere. It's kind of bottomed out. But if you look at like NVIDIA or Apple or Google, they've been sitting here in the same range for the last 3 or 4 months. I mean, they're near highs
all year.
All year. I mean, NVIDIA has been, if you look at NVIDIA, I think
it's the middle of its yearly move. It's
gone nowhere since August of last year.
Yeah.
And so I think to your point, I think you're right in that the Mag 7s, you've had your kind of dip. They've pulled back. Maybe they go lower, but they don't seem to be beholden to the situation that we're in right now with oil, with war, with whatever.
Right, so time out a second. So now you like the Mag 7 holding up the market because as the market was going higher, all the bullshit that I heard was this is such a tight market. It's only the Mag 7 or the Mag 10 that's bringing the market higher, but the fundamentals of the market is weak. I mean, you can't have it both ways.
No, I thought the whole. I've been bullish this entire time.
No, I get that, but
That's
the
a
breadth of the
Sazonofism.
market wasn't strong.
One stock is too high, and this is bearish. It's not bearish.
Okay, all right.
It would just be, some of these tech names. I've been going through it. I'm continuing to do the work today, going through the list of all the major commodities that are coming out of the Gulf region and what could be severely impacted as a result. I have to follow this up more, but I saw that Taiwan receives a substantial amount of its nitrogen from the area. And nitrogen is a key input when you're making semiconductors. So what if there's the headlines that we're seeing today come out of the Gulf a month from now? What's going on with Taiwan Semiconductor when they can't make any more chips? And
But that's bullish because
right.
You move down this.
There's no inventory.
I learned in my economics class the supply demand curve, the X. Like when you move the X a little bit and you get less supply, the prices go up. Supply demand.
That'll be the spin if that's how it happens. If it goes lower, the spin will be what he just said.
Let's not choose names that are in Asia, perhaps, if we're going to be looking at some long equity plays here. Those that are American-based companies right now.
Listen, we got all the tech. Listen, when this war first started in the region, we got all the escorts out of Dubai, so it's not a problem. We'll get all the fertilizer you need. We'll get all the nitrogen you need. Don't worry, we'll find another way. It'll be okay.
You are one of a kind.
I saw that on Twitter. It was Mr. Beast Games presents Escape Dubai.
Yeah.
Oh my God.
Oh man, if you know this is all a farce if they start making game shows.
You can't take this so seriously. You'll look too close to the fire. You'll burn your eyes. You got to take a little bit of a step back.
Yeah.
And have cooler hands here and prevail. That's all.
Yeah, that's why I pithily tweet nonsense around 11 o'clock at night every night. It's my outlet.
Yeah, is it you that did the what did you say was pretty good? You hung some wallpaper, didn't you? Like some intricate wallpaper.
Yes, my wife wants to go with a forest theme for my son's room, and so
like White Lotus type. I like that. You can have like the little monkeys in the trees and stuff. I think that's cool.
I put bears in there as a reverse jinx of sorts, figuring
get him used to them, so he's not afraid of the bear.
Exactly.
He grows up a bull. He grows up just a bullish guy. He sees these little bears.
I've seen bears like you my whole life.
Yeah, I'm not afraid of you. Not afraid of you.
Yeah.
Brown bear or black bear? The one's worse than the other.
Brown bear.
Brown bear.
Yeah, I think the brown bears are the big ones.
Yeah.
Brown bears are the scary ones. Those are the ones where it's like, well, see you later.
Yeah.
Black bears, you make noise, you put your arms up.
Yeah,
they're in the woods around here.
You act bigger, right? You like bang stuff and like you make yourself wide as possible.
Arms up, yell.
Yeah.
Don't back down.
Perfect.
All right, give me some parting words in this market. Here, I'll give you this. Even the S&Ps have been in a very tight, wide range. I'm going to throw out the lows and I'm going to throw out the highs. So let's just call it 69.50 to 66.50. We're 67.50 right now. I'm giving you a little bit of an uptick. We make new lows or we make new highs from those numbers from here.
We're more likely
inside
to
the
make new
expected
lows.
range.
Yeah, we're more likely to make new lows than new highs as things stand today. But I'm playing this to do neither still. And I know that's kind of not the appealing trade right now because you have to wait, Nick. The volatility's sticking around.
Mm-hmm.
And so you're not getting that vol crush that feeds the profitability of these trades. And so you're really just banking on the theta decay and riding it out. I'm content with that. I just, Tony, my own disposition, knowing that I'm anchored to longer term things in my own trading style. I'm overreactive in the short term and I make poor decisions. So to cut myself off from that poor decision making, I'm operating on the time horizons in a manner that comports with the volatility environment and how I can sleep comfortably at night. And that sounds silly, but my brain right now is in capital preservation mode. I'm not out here trying to make every single dollar I can, like in other markets. It's more about let's make sure we survive this. And then on the other side of the storm, we can start planting some crops and harvesting again.
Last one, since you talked a lot about oil. Oil volatility has not come in. It's on its highs. It's been slightly higher overnight when we got that big move 4 days ago when oil flirted with 120. But really in the tradable markets that we trade during the day, this is about as high as volatility has come. Ivy rank is over 100. Yesterday, it flirted with going under 100 for a quick second. As IV rank is over 100, that means every day, every close has been higher implied volatility. Do you think we're at the highs of volatility in oil right now? Not price of oil, not going to put you there. I mean volatility. See, I like short units in oil.
I don't think we're at the highs in vol yet. I think we are getting close. It feels like we're getting to a turning point given the news out of the region. And I say turning point, like some of these other countries are beginning to panic.
Mm-hmm.
And, and in a lot of these places, lest we forget, they're not exactly democracies. So the social safety nets in these economies aren't that strong. So the relationship that the ruling bodies have with their people is we keep the economy afloat, you let us stay in power, and there's no revolution.
So you're contradicting what you said yesterday when I said you're going to put your money in the U.S. You're not going to put the money anywhere else.
No, I'm putting my money in gold.
I'm just teasing you.
American gold.
Just teasing you.
American-made gold.
And by the way, gold
Tony.
underperformed 11 of the 25 years of the market. So when you said 20...
Yeah, but it's only need one. Catch up.
Good job out of you, my friend. We're going to take a quick 90-second break and come back. We got more Tasty Live after this and more market talk, too. We got Confirm and Send. We'll be back in 90 seconds, Tasty Live. Great job, Chris. Thank you for coming in.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back, son. The opening bell is about 35 minutes away on this Thursday, March 12th. But right now we have Confirm and Send. Before we do, we'll take a quick look at the markets. Even the S&P is down 47, down about 0.75 of a percentage point, down near its lows for when we've been on the show since about almost the last hour or so. I know they're about 20 handles, 25 handles off of their low lows from last night. NASDAQ down 168. Russell is your weakest of the group, down $35, a 1 1/3% move compared to everything else. That's closer to 0.75 of a percentage point. It's almost down twice as much as the rest of the market. Continues to be the weakest of the group of the four, even the S&Ps, NASDAQ, and Dow. The Russell is the weakest. Dow down 400. Volatility up 87 cents to just under 24. Really thought volatility was going to come in a little bit yesterday as it was lower with the market slightly lower, really unchanged. I thought it was encouraging, but you've got volatility up almost 4% again, traded over 24 last night. Bonds have been weak. 114 is near the lows here. I think it probably warrants a trade. Ivy rank is really starting to percolate there to 30. I will look for that for option trades today if bonds are here or lower. Bitcoin up around 1,000, 70,400, just a skosh off its highs. Ethereum doing the same, actually better, up 2% versus 1.5% for Bitcoin. Oil up $5.55, now under 93. It got up to 96. It got down to around 88, trading just under 93, higher end of its high range. Gold up $10. It's been red all morning, just got a little bit of a bid. And silver's been up all morning, up 2.5%, up almost $2 or so. Went over the earnings. They were small earlier. Well, let's get to confirm and send, then we can get to trades to the research team.
Want to add up extra put on the bonds?
Sure. You want to do it in ZB you're talking about right now?
Yeah.
Or ZN you can even do?
We put the 113, 118 strangle on yesterday. And it's down a little bit, but not significantly. I'm thinking just to add a little bit of long delta. We do have long delta here, net, but it's only long, 10, 15 deltas. Maybe we sell like a 111, 112.
Sure.
And you want to do the 112? Like we haven't got.
I'd rather do the 112 personally.
Yeah, because I think that.
If you get movement, at least that'll move. I mean, if you get the right movement, meaning a higher bond.
55, right at mid price.
Beautiful. All right.
Cool. Let's do it.
Confirm and send, Tuesday, March 12th. Thank you. Sorry for running a little late, guys. First question, please. I have heard some hosts discuss Bitcoin as a way to gauge the market's appetite for risk. What do you think of a pairs trade that is long MBT and short VXM? That'll be volatility. Also, how would you go about determining the number of contracts to use on each side?
So I think this is a pretty abstract pair trade.
Yes.
I don't, off the top of my head, I certainly don't know the ratio here. And you would have to do a lot of math and then a lot of assumptions here.
Volatility assumptions on MBT.
Yeah, but these are, so I think I've said before that in the overnight sessions and specifically in the weekend, I've used Bitcoin and crypto as like a proxy for the market's appetite for risk.
It certainly hasn't behaved like that all year long for the last
because
3
it's
months.
It's not anymore. It was like last year was kind of an indicator of just liquidity and kind of risk sentiment. I think now we've had, you've obviously had the pullback, but it's become like gold and silver and oil. Commodities have kind of been the one that is kind of speaking first, so to speak. So the short answer being, I don't think this is really a pairs trade that I would consider a pairs trade. I don't think you're getting this is far different than gold silver ratio. You're in a different world.
Yes, you're in a very abstract world here. I'm just going to add exactly what you said. I'm not going to add too much to it. You can make a pairs trade out of anything you want. If you look at the notional value of each product.
Correlation in the beta.
Which is the volatility of each one of the products, 100%. You can make a pair out of anything you want. I would strongly suggest not making a pair out of this, but you can do whatever you want.
Or just
I'm not going to do it for you.
As independent. I don't mind.
I'm not going to be a part of this. I'm not going to be a part of this. I'm not going to.
I like these.
I'm not going to enable you.
Independently, I like these trades. Like
independently, I like the trades.
Bitcoin, I have this on. Like I'm short volatility and I'm long.
I've been trading / VXM all the time. I think it's
but I would
as good as the market, if not better.
If you're looking to trade this for like a week as a pairs trade, I don't think there's anything you can take from this.
Totally agree. Next one, please.
For 0DT trades, do you roll the untested side or just close it and hope for a reversal so you can close the tested side? So basically legging out.
I'll only go by our past performance, us on the show, trading it very, very small for our size account.
We haven't done it in a while.
We haven't done it in a while.
Do that today.
Should have done it yesterday. We talked about it. We never got back to it. We usually just leave it. I mean, that's been us, but we've been taking profits a lot sooner. We haven't waited for 50%. We haven't even waited for 25%. A lot of times we've been making 10, 15% in the first half hour or so and running like a thief in the night. That's the way that we've been doing it. I've watched on Twitter where a lot of my friends who I trust trading these almost exclusively, and they do a lot of rolling and they do a lot of adding, and it seems to be working out over the long run for them. So I just think it's do it whatever you want. Keep your delta as comfortable as possible. Watch your unit size. And by keep your delta as comfortable as possible would mean you would start to roll. If you were doing this exclusively and not doing a show and talking to everybody else, I think I would be rolling and adding a lot more. But that takes a larger size account. So this is not for the, $15, $20, $25,000 account. This is for the portfolio margin accounts. And that's over $100,000 at Tasty Trade now. So if you have over $100,000,
good call.
Maybe you can, look to roll this and adding more because you're doing it for the day. You're not adding units for 45 days.
I just did another.
What'd you do? Oh, /
MCL. So I did this out in the 30. We have this sort of trade on in the short term in the 5-day, but I went out into the 35-day. So the monthly expiration, next contract.
Yep.
Wide ratio.
Yep.
I bought the 95-100 call spread, and I sold these 175 calls, and I did this for $1 credit.
Yeah, see, this is units. This
is units, short units from what you were talking about with risk.
Exactly.
And short units is risky. There's a lot of risk. If you have an explosion in volatility, if you have a big move, you're going to see these get very big. You have to buy the wing if you are not small enough.
You'll look at it right now.
That's why I'm going to MCL.
Yeah, you'll look at it right now. The delta is basically delta neutral. If we sit here, this will actually become a long position. If we go up small, meaning another $5, $7, over the next 20 days, it'll become a long position because that out of the money option will have little delta to it. If we go up extremely fast, this will become a very short position pretty quickly. So it is not one without its risk.
For sure.
Next one, please. But timely for what you're doing here.
Yeah, I think it makes sense. If the crowd, this is you.
Yeah, don't step on my cue.
I'm sorry.
If the crowd is overwhelmingly positioned one way in options markets, does that increase or decrease your confidence in the direction?
So, skew kind of tells you this. At least tells you where
the perceived velocity of the move is.
We trade on such a short duration that we're not, and most of the trades are not purely directional. You don't need the stock. It's not 50-50. So I think skew is I made that trade in MCL not because I'm playing for 100 oil. I'm playing what the market is pricing. I am trading these options. Right. I'm not trying to make a proclamation that we're at 100 in 35 days or we're at 120 or whatever. This is just trading. And so
you've had a 20% plus move recently over the last couple of days.
Volatility is at 120% in oil. You got to do something. And this is how I do it. So
for right or wrong, this is how you're doing it. Yes. I'm going to answer this a little bit differently real quickly for you. For every buyer, there's a seller.
Yeah.
Think about that. For every buyer, there's a seller. So how can the market be overly positioned to one side? And then the second part of that question is, how do you know what side they're positioned to? Next question, please.
Is delta exposure more dangerous during volatility compression or expansion? So when volatility is going up, do you get worried more about your delta, or do you get worried more about your delta when volatility is low?
I don't know, but I'll tell you this. You can have a delta neutral position with high implied volatility. And when volatility contracts, that position will have long delta to it. Yeah. Because what happens is you're out of the money options when volatility is high or near or inside the expected move. When volatility contracts, that means the expected move contracts. And your options are now outside of the expected move. If you're trading something like SPY, your puts are going to have more delta to them than your calls. And if you're short both of them, you're going to have long delta in there. Let's take a quick 90-second break and come back. We've got an amazing team that want to show their faces. They're called the research team, and they'll be on next with trades from the research
We
team.
only let them out for 15 minutes a week, so if you miss them right now, you're never going to see them.
This is your chance to shine.
It's your chance.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means? It's time for trades from the research team. Who is our first researcher?
No, I can't go turkey.
Don't go turkey, go shark.
Mess it up.
What's up, Shark? How are you, my friend?
Not much. How are you guys?
Good. Good to see your smiling face in the studio.
How was the family time?
Family time was good.
Yeah.
Oh, you're talking about the legendary India.
Yeah.
You went to India, right?
You all survived. You
survived.
Stayed, yeah. It wasn't a like a.
One question: did you eat any fast food while you were in India?
No. You can't
You
eat
made
any.
the parents
you can't
proud.
eat any
You made the
fast food
parents
when you're
proud.
there.
That's all I got to ask. You made the parents proud.
I thought, I was like, because I kind of have like an iron stomach.
Uh-huh.
Like I never have any
Iron
problems
stomach,
in that
okay.
realm.
Uh-huh.
And I like spicy food. I eat everything.
Dave's hot chicken spicy is not India spicy. Okay.
I know
Yeah,
that.
I
get
agree with you
that.
there.
I get that, but I really, I've always thought it would be a fun trip to go to India to eat like a lot of the food.
Uh-huh.
If he has problems,
Did you?
no, but just in general,
You're getting so westernized.
No, I didn't have problems with the food. I had problems with the air.
That's the
Yeah.
see that's the intangible.
I think you'll be fine with the food. Honestly, if Tom went over there and he was okay with it, I think you'll be
Okay.
okay with it.
He's going to stay in somebody's garage, okay? Tom was staying in some five-star
Tom was eating like
hotel that never, that
He stayed
imported
at
their
the-
food. He had French food
Yeah.
while he was in India, okay?
It's the hotel breakfast.
This guy.
The giant hotel breakfast that has every cuisine from every country.
Yeah, it's
No.
like a continental breakfast. He's eating like
see.
yeah.
No, I'm sorry. He's not. I forbid
You seem like a
I forbid
street
you.
food guy. Okay, you go.
Oh,
Just gotta
that's
be
what I
careful.
want.
Gotta
I
be
want-
careful with the good street food with the line, and then the bad street food that has the flies.
Yeah,
all around
I
the
don't
food.
want that.
You don't want that.
I don't want that. But I am a street food guy. Like, I think that Thailand's the other one I got it. I want to do like a Thai.
I can see Taiwan, Thai food. Yeah.
That's different.
All right.
Thailand.
I learned that a couple of months ago.
Yeah.
Never mind. You caught
Kai
it,
is
though.
over here losing it. Kai's like, this guy. Oh, HR.
I learned that a couple of
nightmare
months
over
ago.
here.
Thank you for
Yeah.
reminding me. All right, what kind of trade you got for us, Shark?
That was good.
Thank you.
Some Asian
I tried.
country.
Yeah, whatever.
Yeah,
Both
begin with the T.
Yeah, I mean,
you got to be careful with him.
Yeah, I mean,
I know you're just playing up.
I can claim senility
You're just playing
soon.
up the
I mean,
character for the show, right?
They need to give me like a mute button. Like anytime like I click it, it just like turns his off.
Full disclosure.
Yeah.
I signed up for
Oh no! Did you click a phishing email again?
No. I signed up for AARP or something like that, so I can get a discount on something else that I bought. Like you get 20% discount on something else I bought, maybe insurance or
You
something.
are for a guy that you're a sucker.
He doesn't see the.
Oh my God! I am starting to take
external on the
advantage of
emails, you know?
all of these things.
Yeah,
For years I
he's
did.
gonna pay for that for like 15
I'm gonna
years
start
and be like, "What's this
movie
$12?
tickets? $16, $18, $35, depending on where you go. I'm getting mine for 50% off. You suckers could pay.
Oh, you're talking for the senior discount?
Yeah.
You don't have to sign up for that. You just have to be freaking old.
I know.
There's no sign up for senior discount. It just is what it is.
What do you got for me, my brother?
It used to be when you went on the phone, you heard an Indian voice. Okay, you're like, that's a scammer. But now all the companies are outsourcing. Okay,
Yeah,
Their customer service to India and Nigeria and all these places. How can you tell?
Yeah. So my 16-year-old son's credit card got frauded, and I had to call the number, and I thought I was speaking to the people who frauded my card because they were all from overseas. I didn't understand a word they were saying. I was like,
all right, what do you guys want?
In
What do
the
you
back
want?
of my mind, I've got my son saying, "You're going to get phished. You're going to get scammed." I gave them everything. The last 4 digits of my social security number, my mother's maiden name. I mean, I went through everything.
Yeah. I mean,
my garage code. I mean, I gave them everything.
Too trusting.
I still haven't gotten the replacement card, so I think I was scammed. Go ahead. What do you got for us?
All right, let's get to the trade now. Microsoft. A nice skewed iron condor in Microsoft because it's been on that downtrend and it had that spike up. And now it's kind of sitting in the middle of its low and its highs right now. So it's down. It's down 1% right now, I think, or $1 or something.
Yeah,
down $1.
Okay,
Yeah.
$1, not 1%. That would have been a much bigger move. I saw one and I was like, which one is it? Okay, so still okay
Ivy
to
rank
put
is
it on.
30,
It's
no-
skewed just to make it a little bit more bullish. We call this a poor man's jade lizard as well.
I like it. I like it. So you do like a wider put spread
Yeah,
to a tighter call spread. I like
Take
that.
advantage of that skew, you know?
Yeah. I like it. I like it.
We've got a bunch of Microsoft positions on.
If you don't have one on, I would do this.
Yes, I agree.
say-
Good job out of you, my friend.
Thank you, Tony. Was the trade more interesting than the story?
Can I?
No, I like the story.
I'm gonna give you the contact's number to make sure that it was good. Okay, you talk to him. I don't understand a word he was saying. Let's go to our next researcher.
Do they have educated English or not?
Another person I can't understand a word he's saying. My man Gad, but I know he's coming from a good place. What's up, Gad?
Say-
What's up?
What's up?
I saw some beautiful pictures of you.
Oh, yeah.
You are photogenic, and that woman of yours is very photogenic too.
Hey,
Thank you.
whoa. Let's
It's okay for a man to
Thank you.
compliment
Yeah,
another
it's
man's
okay.
woman, for
You
sure,
are wrong
100%.
of course.
Yeah. Thank you. I appreciate it.
You're welcome. You're welcome, my friend. What do you got for us?
So today I got AMD.
AMD.
Yeah, it's
All
a
right.
nice and cheap trade. So earnings coming in April, I guess, in AMD.
Okay.
All right. All right.
So I got a short earning candle.
Ivy rank at 33, not bad. Earnings are until May.
Yeah, it's May. Yeah, sorry.
Yep.
It's May.
AMD, you have positions on too. Haven't come to fruition yet. What do you think about this defined risk $10 wide iron condor
Yep.
classic here? I don't know if you're going to be able to get 370 and change, but we'll see when the market opens. The market could be a little bit wider.
I'm with you. I'm right here.
Okay.
Yeah. Which one do you have on?
Yeah, I
Which
think
position do you have on?
I have the 180, 230 strangle on. So just a naked version of this exact trade. So
Yep.
we're on the same wavelength here.
I made this because of my account size. So
Yeah.
Yes, I get it. I
A
get
little
it.
smaller sized.
Yes.
I like it.
Nice.
yeah, sure.
Good job out of you, my friend.
Thank you.
When am I going to get to meet this Philly?
Near future.
All right. Near future. I love it. I love it. Very good. Very good. I'll be very respectful. You know that.
Yeah, I'll invite you. So
I'm going to put my inside voice.
Do you know, like, my waiting list is like 1,500 people?
1,500?
Yeah, to 2,000.
And I didn't make the cut?
A wedding?
I mean,
yeah.
Seriously.
1,500 of your closest friends, and I didn't make.
I don't know those.
What are you
people.
competing with the Indians now?
No.
Is that what you're trying to do?
It's my family.
I don't even know 50. I got 5 people on Twitter.
Yeah, seriously. I don't
mean,
think I can fill like
even my imposters only have 5 friends. Like they don't even have a couple of 100 friends.
Yeah, that's how it is.
That's
the
good.
culture. Yeah.
Oh.
Wow.
You invite like a family. They invite also the cousins. They invite the relatives. So that's how they pack the place.
If I was invited to a wedding with 1,500 friends, I would think it was some sting operation that I owe somebody money or something like that. I'm going to get arrested. I wouldn't go.
And you have to feed them. You have to do everything for them. So
wow.
Yeah.
Wow. All right. Well.
All right.
I'm going to save you $1. You don't have to invite me. I'll still send a present.
I'll have to invite you.
Okay. No. I'll send a present. That's all. All right. Good job, out of you. Who's our next researcher?
Thank you.
Wow.
That's
1,500. I don't even know 1,500 trainers.
You know, that tells you. It tells you that's a loved man.
Absolutely a loved man. Another loved man is Kai. How many people did you have at your wedding?
No more than 200.
Oh, you really are westernized.
1,500 is even, that's a large number even in China.
That's a large number anywhere at anything. If there's 1,500 people in the room, I don't want to be there.
Because I don't remember a number of guests, but I remember probably how many tables we ordered, right? So
all right, of the 200 people you had at your wedding, because I know your wife a little bit. It was 150 her side, 50 your side, right? I mean, I know she wears the pants. I mean, let's be honest, right? Mine too. I'm the same way.
1,500, 2,000, that's a lot of people. Yeah.
Good.
Yeah, probably you have to invite your whole village in China somewhere. I saw those on the videos. It's not.
Yeah, I mean, I couldn't invite 1,500 people to my wedding because they'd have to all be out of jail at that time. Like, it wouldn't be enough people.
You also didn't have enough Quaaludes for
That's true. That's true. Very expensive. Very expensive.
You need to hire a team of the cooks.
Yes.
To prepare for a whole day, right?
Right. We would have to cater it from like what's
Pizza Hut.
No. I was going to go more
Domino's.
I was going to go to Panda Express is where I was going to go. I'm going to go that way. Yeah. All right, my friend.
And you know those tools? The tools they use to cook for like 1,500 people is probably this big.
Yeah.
The wok, and they use the shovel. Probably.
Yeah. No. Yeah. Use a snow shovel. All right, what do you got for us, my friend?
Whereas the hymns, Strangle, really good premium IV and buying power. I was surprised to see the premium is almost the same as buying power.
Mm-hmm.
It's made the top 20 list a few times now this week when we get the guys in from the Tasty Trade trade desk there. Hims has had quite a rally. We talked a little bit about on one of the little clips that we did. Hard to buy up here at $25, $26. Now $27 this morning, up $1. What are you doing here on yours? Strangle?
Yeah, Strangle.
21 to 33.
Yeah, so distance-wise, that's actually even wider on the call side, but the delta is much larger on the call side. So huge call skew, huge.
Yeah.
Not even close.
I don't think you have a Hims position on.
No, we could look at that.
I just tried to
really high.
collect a similar dollar amount on both sides, but we still have what? I have $7 on the upside and the $4.50.
Yeah, that's just call skew.
Right? So yeah,
I would like short units in there too. That's the way I would kind of play it too. May 4th is earnings. Good job out of you, my friend. Thank you for bringing that to our attention. And even the S&Ps go down 51. They were just down 53 a moment ago. Russell's down 1.5%. That's almost $40. Even the S&Ps are down 0.75%, a little bit more. Good job out of you, my friend. Thank you for coming on.
That.
Who's our next researcher? What's up, young lady? How are you? Julia in the house.
Oh, what's up? I'm just dancing, having a good
Good.
Thursday.
Good.
Almost the end of the week.
Almost the end of the week. You just saw your team out there. Give them some words of encouragement. How'd you like them and their trades that they picked? Pretty mechanical?
Oh no, mechanical, top notch.
Good.
Like I don't know. I don't know. You can't really beat that.
Good. You're all fired, guys. That's what I read between the lines.
No, we got the best in the biz.
Good. Good job. Good job. Good job.
Young minds. They're
Julia,
beautiful
best in the
minds.
biz.
Yes.
Let's see if we can continue the trend. I don't know about this one. Okay, I picked Broadcom. I was really looking for something because there's like a high vol kind of all over the place right now. I wanted to maybe think of something that you guys didn't have on. So I was looking at Broadcom. This is one I do not normally trade. It's had a little bit of chop the last couple of weeks, but actually we're in a little bit of a vol contraction this month. So decided to go around the expected range just with like everything even remotely adjacent to this sector. Went to find risk 290 to 390 short strikes, $10 wide. Collects 265 in credit for 735 in buying power. So you could tighten it a little bit to collect a little bit more, but I don't know. I'm feeling expected range with this one, 36 days out. IV rank at 31 now. I think a little bit higher than that and down a couple bucks this morning, but this should be adjusted for that.
I think if you're going to play AVGO, you play it in this manner, defined risk trade. It's at $337, down $3 or $4 this morning. Stock with a almost $35, $37 expected move for the next 36 days. You know, that's a decent sized move with a 30 IV rank. IV rank has been higher in there, but if you're going to play this stock, this would bring you below the most recent lows, above the most recent highs, flirting with all-time highs here. I mean, it fits.
We'll look at something.
Yeah, definitely.
It gives you, a lot of room to play with. And then the IV index on this one is 51 right now. So like even the IVR is like not as elevated as it could be, but the IV index is high
It
enough
just had
that if you wanted
earnings
to go,
too, which was probably
just had
skewing
earnings.
that IVR a little bit too.
Yep. So with the IV index being so high, you can usually, if you wanted to go tighter, you can collect like significantly more. Just decided to go wider on that because you can still collect a decent amount. And just having like, I don't know, for whatever reason, having a really wide range on one something like this just made me a little more comfortable with it.
Yeah, I totally agree with you. Markets are actually okay out on the tails there too. Like when you get closer to at the money, you're going to get much wider, bigger options, much wider markets. So I like the width of the markets too. For
20, 30 cents wide on a $300 stock.
Probably tighter after the market opens too, especially out on those wings. So good job out of you. All right, Gina, thank you so much for your time. Even the S&P is now down 57 or so. That's about as low as they've been. Matter of fact, as low as they've been, if you throw out March 9th, that's the lowest they've been since November of last year. So let's take a quick 90-second break. We'll talk about this opening here, which is weak. No argument about it. We'll be back in 90 seconds. It's Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past.
Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live with the opening bell here in about 4.5 minutes. Even the S&Ps just making their recent lows down 52 or so. I know they're about 20 handles lower than that last night, flirting with last night's low. NASDAQ down 190. Russell, the weakest of the group, as it has been for all year, down around $40. It's about a 1.5%. Everything else, it's about 0.75 to 1%. On the Dow, down 450 and change. Volatility up a buck. It was just over 24 a moment ago. It's 23.95, up $1 in volatility. Bonds are down 14. They've been 5 ticks higher. They've been right around here on the low since we've been on the show. They've had a low of 14.04 and a high of 14.21 for the overnight session. And the rest of today. Bitcoin hanging out at 70,100. It's in by about $200 or $300 since the last time I quoted it. Ethereum is in a little bit from the last time I quoted too, still up $35. 1.75% move in Ethereum, just over a 1% move in Bitcoin. Oil, I think that's the problem in the market right now. Oil up almost $7, $6.85 to just over 94. It flirted with going up to 96 in the overnight session, down to 88. If you take a look at oil volatility, it's giving you about a $3 expected move, $4 expected move now, almost a $7 expected move in a day, almost a $14 expected move for the next 5 trading days, and a little bit of oil at trading 92 when it rolls here. Here's what I think about oil. Probably going to stay bid. I'm short it. Short units in it. Won't be a good day today with volatility expanding. It's over 100 IV rank. That means every day volatility is going higher. You're probably going to stay elevated until the roll, if not more. It almost is trading a little bit like volatility trades as it gets closer to its expiration. Kind of stays in the direction that it's been going. If it's been depressed, it stays depressed. If it's going higher, it goes higher. That's the way I'm looking at this right now. But being so news-driven in the market, I think volatility across the board is watching oil. So if oil is going higher, market's not catching a bid, and volatility is not going lower here. I don't think that's anything more than the obvious. Gold, I'm a little surprised not catching more of a bid with everything that's going on in the world, basically unchanged. Silver up $1.50 or so. That gold-silver ratio that we've been trading is trading around 59.5. We've been buying it in the 56.5 level. It's pretty much mid-range.
Yeah, it's not moving as much as you would expect with the numbers here today because of yesterday's move. Silver was really the gold was basically flat and silver was down like 4 or 5.
Right, it's just catching up to it. Yep. Since Chris mentioned corn, wheat, and soybeans, they're all up. They've been all having a rally. Corn up $5.50, wheat up $9 and change, and soybeans, which used to be one of the depressed ones, is up $15 also. All of those having monumental moves off of their lows. Even more than during the Ukraine war that started. When that first started, if you remember, all of these commodities went lower, not higher. Everybody was talking about how they were going higher, but today they, with this environment that we have been going higher. No rhyme or reason to it all, in my opinion. All right, son, we've got less than 30 seconds to go in the market. Do you think we test these lows from overnight Do we break through 6,700 today?
Ooh, that's a good question.
Well inside the expected move of 45-ish handles, almost 50 now as volatility keeps expanding.
It's been interesting. I've been watching this the last couple of days. We basically closed at where we opened for the last week or so. Like, you haven't had any big like flush outs.
Yep.
So
not during the market. Like, we've had it overnight.
Overnight. Yeah, that's what I'm saying. It's like during the market, it's kind of been not that volatile.
No, but you've got it right now. Volatility up almost $1, which is a 4% move in volatility. There you go. It's up $1 right now, 23.95 at the high end of the range. Volatility clustering up here and staying bid right now. When if it ever goes down, I think /VX is almost a better sell than buying ES on the dip. That's the way I would be looking at this right now. Even the S&P is down 58. NASDAQ down 190. Russell down 43, and Dow down 530 and change. Bonds down 19. They just sold off there about 2 ticks off of their lows. As bonds go lower, rates go higher. There's no. That's a pure math model. They've got to catch a bid, or rates are definitely going higher. Bitcoin up $700, cutting its rally in a half. Ethereum cutting its rally by about a quarter. Oil hanging out at $94. Gold down 5. Silver up $1.30 and change. Let's see what's moving this market all across the board here. Let's go to the downside first. The Goldman Sachs down 23. Has earnings on the 13th, about a month from now. Good Ivy rank. Volatility expanding in there pretty nicely. Goldman Sachs markets pretty much stink. Almost untradable here. You can see the volume is untradable, and the market's just the $5 wide. Good to talk about stock. Horrible to be able to trade stock. DG, which had earnings or lack of them, down $15 in DG. That's Dollar General. Making new lows, I believe, here, or recent new lows for the year at least, back to where it was in December earlier last year. Even the S&P down 62 here, continue to slide. Volatility hanging out at 24. SanDisk down 10. MU down around 8 or 9. Taiwan Semiconductors down around 8 to Ilya's
Not
credit.
Thailand.
Not Thailand. That is correct. Meta down 6 or 7. Let's see. Coin surprisingly down 4 with Bitcoin higher. Let's see. Apple here down $2 and change. Let's see what's bringing this market higher. As you can see here, not a lot. Oil, which you would imagine, I think has a reverse indicator to the market, is higher. Crowdsource, I guess maybe some of the cyber attacks and stuff like that. I guess crowdsource catching a little bit of a bid up 260. BE Energy catching a little bit of a bid up $2. It was higher yesterday, but trade up to 161, low to 156 and change. Oracle finally staying bid. Palantir also staying bid up $1.50. There's your Mosaic up $1 and change, and then volatility in oil-related products. Pretty broad-based sell-off right now, son.
Yeah, I just sold the strangle that Julia was looking at. The same strikes for the shorts, and just did it naked. I think that was an interesting one. So
you sold the strangle instead of going into the defined risk trade. That's fine.
I think
your oil trade that you did.
Tim's was another one I wanted to look at.
Okay. Your oil trade you did, that MCL hasn't moved. It's sitting right there with oil trading just under 94 right now.
Yeah.
You said HIMS?
Yeah. What about doing like a one by two, 1 put to 2 calls?
In HIMS?
Yeah.
1 put, 2 calls. Let's take a look at it. HIMS basically unchanged. So you can do this in April, right?
Yeah. I was thinking the 23 and then the 35. You do 2 of the 35s, 1 of the 23s, and nets you about 20 short delta.
Yeah. I like it. Meanwhile, you're $10 away on the call side and only $3 away on the put side. That's definitely call skew.
Yes.
Yeah.
Yes. Well, the put is a meteor delta option. The put, I guess not even that.
I mean, 24 to 29. I mean, it's not huge. I mean, if you go one strike below that, we can make the argument that it's completely delta neutral.
380.
They both have the same delta. You're only what, $4 away on the downside and $10 away on the upside. Definitely call skew no matter how you slice it.
Okay.
We got Fielded Hymns at 380.
Yes. What else do I have here?
Even the S&P's down 55, volatility off of 24. Oil, I think you have to keep a equity eye on oil. If oil goes higher, I think the market will sell off a little bit. If oil catches a little bit of a pressure to it, probably go a little bit lower, right?
I would think so, yeah.
I would think so too. Yep. Talk to me, Goose. What else?
I don't have anything jumping off the board at me.
Okay. You're allowed. Not to have anything jump off the board. That's a good thing usually.
Yes.
That means you don't have any problems, right?
Mm-hmm.
Okay. Even the S&P's down 56. So far, it's been pretty tight little market here, right?
Yeah.
I mean, we haven't made too much movement one way or the other. Right?
Yes.
Yep.
We have
even the S&P's down 56.
Okay. I'm back.
Are you back?
Yeah, I had a little.
You had a little
kerfuffle.
That'll happen.
Have me all.
That'll happen from time to time.
Yeah. Okay. I don't know. I know Gad was looking at this AMD position, but I've had a strangle on in there that I've rolled a couple times, and it's a couple $100 winner. So I feel like I'm just going to take this off, and I just put on the AVGO position.
Okay.
So that's kind of I think I just take this money and run, and I can always put it back on too. So I just closed out of that strangle. We've rolled it a handful of times.
Sure.
And I've rolled up and out, and I've done all sorts of management on that. It was it ends up being a good one.
Okie dokie. I like it.
Yeah, nothing going crazy today.
No, nothing
like
really.
I know the E-minis are down about 1%, but it doesn't seem like it's that big of a deal today.
No, it doesn't, right?
You got Apple
it's
down
almost,
a couple.
It almost seems like volatility has it priced in. I mean, you certainly, if you have long delta, you're gonna suffer. If you have if you have short delta,
but it's not a super painful move.
Right. Agreed.
At least it doesn't. Like I don't have the stuff that I'm trading. These, Amazon's down $2. That stinks. I have long delta, but it's a small move.
Yes.
Apple, Microsoft was basically unchanged. It was up $1 at one point. Meta again. We were talking about these Mag 7 stocks. They're down $2 or $3.
Right.
It's like nothing. If you're trading those sort of stocks, the down move in the overall market, you haven't really felt it because they've kind of already had their down.
Yes, most definitely.
Okay. Oh, I'm going to do something in MU here because
something new here. I like it.
No. So I'm going to take off some of this risk because this bad boy
in MU.
Yeah, but we're going to play it to the upside into earnings next week. Stock's down like $6 or $7 today. I've done these call ratio spreads. So I have 2 of them on for $4 total, and they're 50 points wide into earnings next week, wrapped around 450 to 500-ish is like my spot if we can get a little bit of an up move there. But that was buying that call just turns it into a butterfly. So I've got the 25, the 425, 450, 475. I have that on for like $2. I have the 440, 480, 520. I have that on for about $2. So I got a $4 wide, $2 wide, $2 debit butterflies that are like $25 and $40 wide. And we hit those last month mega home runs.
Yep.
We hit those bigly. And
Bigly.
so,
You definitely did. No
and
doubt
I'm
about
taking
it.
off the risk. It frees up the buying power. It gives you a little shot. If we open lower in MU, we'll lose a couple $100, no big deal. But the upside is bigly upside.
From your mouth to whoever's listening. Bonds down 16. Let's take a little bit more look at the overall market as we're 10 minutes into this market and see if anything's helped us to the upside. Not much. CRM up around $5. Oracle now up $3.50. Palantir up about $1.50 higher than where I quoted it last time. B at the same price. Adobe up around $2. Mosaic up $1 and change. Volatility in oil-related products after that, and Uber up small. On the other side of the coin, downside, quite dramatic. Goldman Sachs down 24. It's moved about $1. DG down around $10. It was as low as 128, high as 135. It's just about 133.34 right now. Market's stinking there, in my opinion. MU down around $9. Semiconductors down around $6. That's something that had been catching a little bit of a bid the last couple of days. Still well off of its lows for all of the semiconductors. Just taking a look at the whole sector here. And as I look at the rest of the market here, you've got NVIDIA up right now. Let's take a look at that.
Down $2.
Oh, I'm sorry. You got NVIDIA down around $2. Yeah. I apologize. I didn't refresh there for a quick second. My bad. I was looking at stagnant numbers.
Yeah.
I was surprised at
volatility.
that too.
You've had a little bit of, you had a tiny 20-point bounce. Minis. Volatility staying high. I think it's going to be yet another scalper's paradise.
Yeah, it does.
I think it wouldn't shock me to see the NASDAQ flat on the day at some point in the next 2 hours.
Right. It wouldn't surprise me if we if we flirted with the lows down another 100 from here, right? You know what I mean?
Yeah.
Yeah, totally agree with you. At least if we take a look at the E-mini S&Ps and their expected move, you got about $44 expected move, equal to yesterday's expected move on volatility. And if you look at volatility across the board here, we're just a little bit higher than where we were yesterday near the lows. All right, my friend, you ready to take a quick?
Yeah, I wish I had more to do. There's just nothing. My biggest position is the oil position. That's what everything else is kind of. I got a couple winners, but there are profitable, a couple losers. It's pretty. Besides the oil position, which vol is expanding pretty significantly. Let's see what OVX is at. Yeah, so we're at new highs. Just to put this up, OVX colon CGI. That's your oil volatility, 30-day implied volatility, VIX style volatility here. You got 122% implied volatility here, a couple ticks higher than yesterday.
Volatility, you can look at it however you want. That's a great way of looking at it, and it is very accurate and up to date. You can always look at IV rank 116, which means that it's been going higher today, higher every moment, meaning if it was wrapped around 100, it would be as high as it's ever been. As it goes to 116 intraday, if it goes to 120, OVX will be going higher, IV rank will be going higher. You can see that right on the same page or anywhere else. As a matter of fact, oil up $7 now, 94.33. NASDAQ just made recent new lows, not as low of the session, but it is well off of its lows from the session. NASDAQ traded down to under 24.7. It's 24.770 right now. It's sold off about $30 from the last time we mentioned it. E-mini S&Ps about 15 handles off of their lows. They are not going to make this easy for anyone across the board. Let's take a quick 90-second break and come back. We've got more Tasty Live. We've got Johnny trades.
Yes.
We're going to look at smaller size accounts and put on 3 trades, hopefully 1 bullish, 1 bearish, 1 neutral. We'll see that immediately following these messages. We'll be back in 90 seconds. Tasty Live.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually, this year's American is 3.1415. I've never before, but this year there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. We're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're gonna wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Rational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. Oh, just circles are great.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live. That's right, with Johnny Trades. But before we play any music or do anything like that, let's take a look.
We played the music.
Oh, we played. I just heard it. Yeah, I'm so sorry. Well, let's digress for a quick second. I apologize. Even the S&P is down 74, just making new lows.
Ouchie.
From the overnight session. Big ouchie. NASDAQ down 300 and change, making its lows from the overnight session. But you can see the NASDAQ been going sideways in a relatively tight range. But every day, that range is being met on the top and the bottom. We're near the low end of that range right now. Russell down 49. That's the weakest of the group, down almost 2%. Everything else down around 1.25%. So basically, the market sold off 0.5% since the opening bell or so, or just before the opening bell. Dow down 600. Volatility 24.17, up $1.17. Kind of hanging in there to the upside, not really expanding, not really contracting as the market goes lower here. Bonds, they've been weak, and no doubt about it. We got a little bit of long delta in there. Bitcoin up 400 or 500. The real culprit here is oil, now flirting with 95. Hasn't made its highs from overnight. We're flirting with 96, but it certainly seems like it's acting that way. Even the S&P's expected move is 46. Volatility expanding in there. That's all I got, my son. Let's go to Johnny Trades. I apologize for taking that.
Yeah, let's do it.
Let's go. Let's go.
So we currently have a couple positions on here. We have some that are kind of on the dance floor here in terms of profitability, and then some that are coming off the board here in the next week or so. We have this AMD strangle that's pretty close to. I'm trying to get $100 out of it. It's marked at 228 here, so we're going to hold that one a little bit. Amazon, we have a call left over from a diagonal spread that we did on the 26th. So that one, not really a profitable one there. We have this DraftKings long stock position. If you remember, we sold a put into earnings, and we said we were going to wheel into the stock. So we sold the 25 strike put at 75 cents. Stock dropped. We took the shares, and then we sold the 25 strike call against it as kind of our wheel position here. So that call expires next week. It's a little bit in the money here. We sold that at 93 cents, sold the put at 75 cents. So we've collected let's just say $1.50-ish. If the stock stays here through expiration next week, the position will be gone. We'll keep that extrinsic value. We've got an at-the-money call spread in Microsoft. So obviously the positions we have left over are leaning long because we've been taking off some of the short delta. We have a little bit of short delta in Netflix, which has been whippy. And then
whippy is a good way of putting it, yes.
And then the Qs, we have an iron condor that's kind of in play here. Still out of the money. Hopefully get $100 out of that. So we're pretty light on positions. I think the three, I wrote down a couple stocks. We'll see what you're thinking here. I think the HIMS one is an interesting position because of the low buying power.
Yes.
I think we could go to gold.
I agree with you in gold. Matter of fact, I did that for option trades today a couple of days ago, selling premium in there. It's worked out nice.
So let's look at, we'll go to gold first.
Sure, GLD?
Yeah, so I'm looking GLD. I'm thinking with an IV rank of around 50, we go into April, we can do a wide iron condor, maybe even a 15-point wide put spread to a 10-point wide call spread.
Sure.
Just to lean a little bit directional. This will be a little bit more capital intensive than I normally put on because you'll use more closer to like $1,000 in risk because you've
been using less than that, usually maybe somewhere between 400 and 800.
Yes.
I mean, you know what I mean? So using 1,000, you're there. What you're doing really here and demonstrating in a smaller account is any size stock is on your plate. Like you don't have to trade just the HIMS of the world. You can do, $25 stocks is what I meant, or $20 stocks, or meme type stocks that have huge implied volatility, which are actually harder to trade, in my opinion, than, a GLD or a Microsoft or something like that, higher price stocks by using the right strategy. And that's what you're doing there. You're making the strategy small enough to fit the small size account, a $470 stock here. Go ahead.
So I am thinking something like here. So what I'm looking at is I'm going to around the 30 delta on the put side. So the 455, 440. So it leans you a slightly long delta there. You're long about 12 deltas on that position.
Yep.
On the upside, we'd go to somewhere around the 20-ish delta. So the 510, 520, which is a $10 wide call spread. You look at this on the curve view just to give you an idea of what your risk profile looks like. So you have more risk on the downside. Your upside, you still have risk, but if you have this sort of move to the upside, and we can show this here on the Theo, just when we go to the analysis mode here. So I'm just going to make this a little smaller for everybody. So as time passes, you could see it's a bullish trade. Your P&L is better if you do get the upside move, even though you still have some risk there. And as you get at the money on the call spread, because there's going to be extrinsic value here, it's not going to move all that much. Like if you're collecting a $5 credit here, the most this spread is going to trade at, if it gets to 5.15, is probably $5, which is what this chart is there. This risk profile is showing you is that into an up move, you're at worst a scratch at 520 on gold. Like your risk is really on the downside, which you can see in the put spread. When you get into the 450 handle, you've got some risk there. And I'm just moving this out in time. I'm not doing any changes on volatility here at all. But this is just kind of like what we would call a dynamic iron condor.
Yes, that's exactly right.
You have more risk on the downside. You're kind of playing into the skew. I think it makes sense here.
Very good. I like it.
All right, so we're going to try and route this.
Gold is kind of taking a back seat to the rest of the market here as oil has put gold to the back burner right now.
Yeah.
Even the S&P is making new lows here, down 72 or so. NASDAQ down 300 at 1.25% move. Russell down 47, about a 1 7/8% move. And the Dow down 555. That's a little over one, just 1 1/3, 1.125%. Sorry, there it is, almost 1.25% now as it down ticks a little bit. Volatility 2407, up a full point and change, up 5% for the day. What do you think about volatility in this move?
It's big. I mean, it's moving with gold. I just got filled on the gold iron condor, 15-point wide on the put side, 10 points wide. I did it at 515.
Perfect. You just have to push that through, and then I'll be able to put it through on the Johnny Trader in the follow page. And I apologize that option trades today follow feed.
We're gonna fix it. We got it. All right.
I know.
Working on it.
That's what I heard. That's what I hear.
Program so.
That's what I hear. But we hear you. I've heard you. But you can always see it on YouTube when we push that out.
Yes.
Even the S&P is down 77.
Oof.
I think volatility right now, and this is why I said volatility I think is a better sale than buying the E-mini S&Ps. I mean, volatility's moved about 15 cents as the E-mini S&Ps have gone down about 25 handles. I think volatility's gotten to a point where it can go higher, of course, but the moves are going to be a lot smaller than if the E-mini S&Ps continue to go lower. That's just my opinion if you're trying to play something with a little bit of reversion to the mean on the long side. Right now, you haven't had an uptick. NASDAQ down 350 handles. That's a 1.5% move in the NASDAQ. Dow down almost 600. Volatility hanging out at 24.14. Go.
Johnny Trades. Back to Johnny Trades.
Yes, sir.
So I think we do what we did in HIMS in this account as well. So HIMS had a big move to the upside in the last week or so. It's on the lower end of where it's been trading, but the skew is just off the charts.
Yes.
I mean, this stock is, you got 110% implied volatility. I think we do the 1x2 like we did in the early part of this session here. So I'm looking at the 22 strike put and selling 2 of the 34 strike calls. And so you'll see this uses about $400 in buying power. That's because you're naked 2 units on the upside. If you were to do this 1-to-1, you'd only be using about $250 in buying power here. To go into the risk profile here. So what you'll see here, and I have this today. Let's see this, and then this is our at expiration. So what you have here is a little bit of a buffer, extra buffer to the downside because you're selling 2 units on the upside. Your break even on the upside is going to be tighter. If you were just to do this 1x1, your break even on the upside is going to be more towards 38.
That's correct.
Give up some of that room to the upside because you're selling 2 units here, and you have more risk on the upside. You can see the steepness of the risk profile here, but it does give you a little bit of extra premium. Now, when we look at this in the same way we did the other one, and we go to the Theo chart, and you move this in time, you could see your risk, your short delta here. Even though you're selling both sides, you're leaning short delta. And so if you get this kind of choppy / downside move, even if you're tested on the put side, you're still going to have potential profit over the next couple weeks here.
Perfect. I like it.
All right.
Coupled with the gold trade that you put on, where's your next place you're going to go?
Oh, let me get this one. I'm going to
try to put it on, right?
Yeah. 360, no fill. You got HIMS going down, which doesn't help. So I did it at 358. So your break even on the downside is going to be at, let's call it 18.5.
Okay.
On the upside is 35.
Perfect.
36.
Yeah, good job.
So that one leans a little short delta. We did the neutral delta in GLD. What do you think about going into one of the banking stocks? I was thinking JP Morgan.
Oof.
These
they've definitely I like it. They've definitely gotten beaten up. There's no doubt about it. JP Morgan going from even this year $330 down to around $280, down $7, a little over 2% this morning. If you push that trade through, then I'll push it for you.
you.
JP Morgan does have earnings on April 14th, which is 3 days before.
I think we're going to try and play into that.
Yeah, which is before expiration.
You think we get back to 300?
In what time frame?
In the next 60 days.
60, you said? Oh, yeah, 60 days. You've got a $25 expected move or a little bit more. That puts you inside the expected move. So
yeah, it's right at 300 on the upside.
That's correct.
Inside up.
Yeah, okay.
So if you're bullish inside up, you didn't want to have as much downside risk, you could put on a diagonal spread here.
Sure,
I think it's an interesting play. You have April implied volatility is at 38%, 38.5%, because you have earnings coming up. So you got a little extra juice there. And just the overall market and the move that you're seeing in the stock. The stock's down $6 and changed, a little over 2%. It's had a move from, $340 down to $280 in a pretty swift manner here.
Yeah.
I think if you're looking to play for a bounce here, let's say you're trying to play for 300, which is right at the expected move, you could go into May. I like to buy around a 40 delta call. So we'll say the 290, go to the 295. You want to be a little bit more delta heavy, you go to the 285. All about the same. It's going to just change what the debit is for this position. I think you go into April and you sell somewhere around a 20 delta. You could go to the 300 strike. You want to be a little more aggressive. You go to the 305.
Yeah.
You're going to use that. It's the same sort of risk in terms of buying power and capital outlay that you would have for a 10-point wide short put spread. If you collect $2 or $3 on a short put spread, it's going to use $700, $800 in buying power, depending on where you get filled there. You obviously, if you don't go anywhere here, you might lose a little bit of money, whereas the put spread would be profitable. But this, if you're playing for a move $10 up, $15 up, you're going to make $200 or $300 or $400 on this. Whereas a put spread, you might only make $50 or $100.
It's a better use of capital, in my opinion, and you have highlighted that really well on this show, whether it be in a smaller sized account or even somebody who has a larger account and is just broadening their horizons on. You've got movement in the market on both sides here. And if you want to take advantage of that movement, going nowhere, but taking advantage of that movement, an iron condor is a good strategy, but it's really slow moving.
Yeah.
Double diagonals, we've proven, show time and time again.
Double everything. You can't,
phenomenal looking picture.
Yeah.
Phenomenal looking picture on an Analyze tab. Absolutely horrible practical applications. The real good way of using volatility, contraction, and expansion and using buying power is through the diagonal spread that you have done ad nauseum sometimes, but it has been a great strategy, and you just did that in JP Morgan. You turned a $380 stock into
$800 over 60 days, because your long option is 60 days out in time. So if you're worried about the position being too big, obviously if the stock falls out of bed, you're actually happy that you only lose the $400 or $500 on this because you don't have naked puts or a wide put spread or whatever. But this spread over the next 3 or 4 weeks, if the stock stays where it is, it's not going anywhere. Like you might lose or make $50, $100. Like it's not, when a lot of people get caught up in the amount of capital or the buying power or the max loss. Those are very binary. It's in the future.
Yes.
If you're planning on holding this for 60 days, yes, the max loss is $800. If you're going to trade this at $100 profit, your max risk is probably $200.
Right. Good job out of you. All of those came through on the Johnny trade page.
So we did a neutral / slightly long delta gold dynamic iron condor. That's a wider put spread to a tighter call spread. So you have a little bit more risk on the downside. In HIMS, we got short delta via a neutral trade. So it's neutral to short delta. So we got one that's neutral to long, one that's neutral to short. So we did a one put to 2 calls, short delta trade. And then in JP Morgan, we got long delta via a call diagonal spread, 60 plus days out. The May long call at 290, 64 days out in time, selling the 305, 36 days out in time into the earnings cycle.
Good job. Good job. Even the S&P is down 58, about 25 handles off of their lows. NASDAQ down 250. about 100 handles off of their lows. Russell down 37. That's the weakest of the group, but they are about...
With oil at highs.
Oil...
volatility coming in a little bit.
94.50 volatility has come in. It's up 75 cents. It's moved about 45 cents since even the S&P has made their lows. You are correct. Bonds...
This is just more of the same. It's a trade.
Yeah, bonds have rallied 114.16 off their lows too.
Okay.
But yeah, it definitely is a trader's market. I don't think it's necessarily even just a stock picker's market. It's just a trader's market. Stay nimble out there. Don't marry into anything.
Don't be a pig too. It's the other thing.
You're right. Watch your sizing. Watch your buying power usage.
Yes.
So all the way on the right-hand side of the Tasty Trade platform, it'll say BP usage percentage. Yeah. Watch that percentage for your count.
You could put the capital requirement on the portfolio page too, which is a really good one. You'll see where you're a little bit too big.
That's correct.
Yeah.
Good job out of you. Let's take a quick 90-second break and come back. We've got pretty orderly, down, depressed market, equity market, pretty orderly oil.
Does that make you feel good though?
Say again?
I think it makes me feel good.
I'm old and cynical. Nothing makes me feel good until
a down day where everything's kind of just like down a little bit. Like that's good.
Yeah, see, I like capitulation. I like pain and.
No, I know, but it's good for like
for a rally.
That's what I'm saying.
Let's see, volatility is encouraging at 23.75. I think that was the play there to sell short volatility. We'll take a quick 90-second break. We'll come back. We got more Tasty Live after this. We've got. A market measure. Let's talk about skew drops in high IV. So we'll talk about those units that I've been talking about all morning long, how they drop or not when you get high IV, right?
Yes.
We'll take a quick 90-second break after this.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, son, and you know what that means. Time for a little more Tasty Live with a market measure. But before we do, let's take a quick look at the market. Even the S&P is down just about 60 handles. You'll see here that they're at the low end of the range. Well, if you throw out March 9th, right, which was just a few days ago when we traded all the way down to around 65.90 or so, which is about another 150 handles from where we are right now. Same thing with the NASDAQ at its recent lows here. If you throw out a couple of wicks down here at the end, especially just a couple of days ago too. So we're not out of the woods here making new lows or anything else like that. We're violently unchanged on the low end of those violently unchanged markets. Russell down 37. It's actually caught a little bit of a bid relative. I know it's the weakest of the group still. It was down around 1.75%. It's down around a little under 1.5%. Dow down 400 and change, just about 1%. Volatility 2375, hanging in there. Didn't make new highs as the even the S&Ps, Russell, NASDAQ, and Dow made new lows this morning. So if you're a bull, maybe that's a little bit of encouragement, small thing to hang your hat on. Bonds catching a little bit of a bid, relatively low at 114.15, mid-range by far, 114.04, 114.21. They're trading 114.15 right now. Again, maybe a little bit of, maybe we found a bottom here as markets were making lows. Bonds stayed bid, encouraging. Bonds, Bitcoin up 900 and change, catching a small little bid there. But you've got the other side of the coin, some of the stocks that have held us up there. NVIDIA was just down a moment ago, trade down this is the lows, 182 and change. There it is, down $4, $3.50. Apple is another one, down around $5. It too tried to catch a rally last couple of days, has sold off back there. So you've got a lot of stocks that have held up, not holding up presently near their lows, not on their lows, but near their lows.
I will say one of the things you gotta keep in mind in this sort of market, and what I mean by that is just higher volatility than what most people are used to. And I even just was experiencing it with I just closed a strangle in UAL.
Okay, I see that now.
UAL is something that in the past has been super, super liquid. We're talking a couple penny wide markets, maybe a nickel wide. These markets are 30 or 40 cents wide on this strangle. I worked that order from 490 up to, I think I got close at 510.
You did get filled at 510, yeah.
And that's something that, UAL is a very liquid underlying, generally speaking. But that example is going to be across the board. So you're going to see, volatility and bid-ask spreads and liquidity are all a function of volatility. So when volatility is high, you're going to see wider prices. That is natural, and it's not no way around it. There's no way around it. But when volatility is low, you have very, very tight markets. So you gotta, when you look at stuff and you look at your P&L and you see the change in your P&L, you gotta chill a little bit, first of all, when you're seeing changes in your P&L. But also when you're going to close stuff, price it. You gotta understand pricing.
Go above the offer if you're trying to sell something. Go below the bid if you're trying to buy something. And work the order. And watch how it's moving. So if you're trying to sell something and it's going in the direction that you need it to, maybe you sit or you only move it a penny or two instead of 3 or 4.
Yep, for sure. And
price on entry is king. I mean,
and that was a naked position, so it's a little bit easier.
Yeah.
This is especially the case if you're trading spreads. Iron condors, put spreads, call spreads. If you have at-the-money spreads, they're going to trade around half the width.
Yeah.
That's just what it is, okay? It's across the board in any underlying. It's always going to trade half the width, 50-50 shot. You're going to see those spreads widen out, especially if you got stuff that's expiring next week or, that's still in March. You got to be careful with your pricing and understand what it should be trading at. If you got something that's 30 days out and it's $10 wide and you're selling a 30 delta and you're buying a $10 wide wing, it's probably going to trade at $3.
Yep.
$2, something like that. But just watch your prices.
Beautiful. Let's get it. Market Measure talking about SKU, sponsored by our friends at the SIBO.
Yes. So this is a good one. This is kind of a follow-up on, we've been really talking about a lot about skew this week. And so this is kind of a parlay on that. So skew drops in high IV. So why do losses grow?
So why do losses grow? Well, we're talking about being short volatility, right?
Yeah.
I mean, so you have an existing position and skew drops in a high implied volatility. Your out of the money call is going to come in significantly. Are you talking about SPY here? Or are you talking about equities?
We're going to look at a number of different things.
All right. Well, it's going to be different-ish in each one of those. I mean, if you get it in SPY, you're going to need an up move.
Yeah.
In equities, you're going to need a down move for this to happen.
Well, let's take a look. So skew measures how lopsided a distribution is compared to the normal symmetric curve. So normal distributions are equal on both sides. The skew will skew to one side, and we'll give you a visual for that. And so you'll see with a lot of equities, specifically like an equity index like SPY or Qs, individual stocks can vary, but with an index, you're going to see a negative skew, a negative tail risk priced into the options. The options that are 100 points wide in SPY on the downside are going to still have value, whereas on the upside, they probably are very, very, nickel options, cheap options.
Sure.
That is negative skew. It's the cost for protection is usually more expensive than the upside speculation for the same amount of movement. So how does the P&L skew of an early managed 16 delta SPY strangle change as implied volatility and delta shift? So we're going to look at basically volatility regimes. So we're going to see what happens when volatility is low versus high, because that's really when you're selling premium when volatility is super high, the negative skew is still there. The tail risk is still there, but that tail risk just inflates. And so you're going to see that in the numbers here. So first, we're going to look at just skew. So skew can generally be positive, negative, or zero. The most common time you see no skew is in something like an earnings event. Earnings can be different skew. So like a Tesla, for example, will typically have positive call skew. Into earnings, you might not see that skew. It might be pretty flat there. You can have negative skew too.
Right, and it'll quickly change right after earnings. What is this saying? During earnings, and it's not all the time, but it's a phenomenon that happens a lot more when earnings are looming. This is what we talk about when volatility expands. It doesn't have to be just calls or just puts. They're just buying protection on both sides.
Yes.
So when that skew goes away, what they're saying is they're just equally weight. Yeah.
We don't know what's happening.
Yeah, because nobody knows which direction it's going.
Exactly. So a distribution with negative skew will have more potential events, or at least pricing in events. Positive skew. A distribution, more events on the positive. No, if you have negative skew, it's going to be on the tail side. Positive skew on the upside. So we have those flipped a little bit, but essentially, if your skew is to the upside, the options are pricing in that there are more events that will be on the upside of the stock price, current stock price, just based on option prices. Negative skew, like you have with SPY or Qs, is pricing in more events on the downside, or at least more risk on the downside, more velocity of movement.
Right.
So the larger the magnitude of the skew, the more the distribution is distorted in relative to normal, right? So more skew, the higher the number of skew, the wider that tail is going to be. It tells you, how wide your distribution is to whatever the skewed side is. And we're going to look at some situations here with the study that we're looking at. So we're looking at SPY from 2015 to 2026. So we've got 10, 11 years of data here.
Okay.
We're going to look at a short 16 delta SPY strangle, 45 days, managed at 21 days, and we're looking at the study here, guys.
Okay. Next slide.
The skew of the P&L distribution is really what we're going to look at here, and the largest loss for trades placed when the IVR and the IVR are are changing from 10 to 40%. So like we're going to break these into buckets. Basically going to tell you low vol, kind of 2 buckets of medium vol and 1 real high bucket of volatility. And then we're going to look at delta changing from 10 to 50 deltas across the curve. And so this will be kind of just a look of at the P&L specifically and how that skews during volatility, because it's going to show kind of counterintuitive that, when volatility is super high, people think there's a lot of risk, and there is. It is priced in. Of
course.
But generally speaking, that risk is way more inflated than what actually happens, even if something bad happens. Usually inflated.
Directionally bad is what you're talking about.
Yes.
Right? Mm-hmm.
So as the VIX rises, the magnitude of negative skew in the P&L distribution generally becomes smaller. What we're saying here is that as volatility increases, and you can see our IV buckets here of 10 to 20. I'm sorry, we did 5 buckets. I thought we had 4.
Okay.
But it was less than 10, which is a small amount of occurrences. This goes back to, and our study does incorporate this, but like 2017, 2018, 2016, there were points where SPY implied volatility was 10, which is shocking. 10 to 20, 10 to 20 and 20 to 30, I would consider our more normal range. 30 to 40, you're getting into the really higher end of the range here in terms of implied volatility. And 40 plus is pretty up there. Just to put some context into it, SPY right now, 30-day implied volatility is about 27%. Or I'm sorry, March is 27%. 30-day is around 25%. So we're in the middle bucket here, which is kind of on the higher end. Most of the occurrences are going to be in the 10 to 25 range, I would say. 25 to plus would be kind of on the higher end.
Sure.
That middle bucket, 20 to 30, is kind of like middle high, so to speak.
Yeah, middle high.
So you can see across the board, and the skew number that we're giving you here is the skew of like the P&L, right? So you're having you're getting more profitable on your mean P&L, but also your losses are tightening up. Your big losses, tail type losses when volatility gets really high, tighten up. And so the skew, you have a much tighter distribution despite volatility telling you that the distribution is going to be super, super wide. And it's because implied volatility is generally overstated to what actually happens. And you can see this across the board in the mean P&L. When volatility is super low, your large losses are much lower than what you would see when volatility is in the middle range, but it stinks trading that. You're seeing not a lot of positive trades because you're not getting paid to take that risk.
Agreed. Even the S&P is down 70 and change as oil goes up
$8,
up $8 to over 95.25.
So here we're looking at breaking this down by delta. So as delta increases from 10 to 50, the P&L distribution becomes noticeably less skewed, and skewed magnitude drops by about 57%. At the same time, the largest losses rise by 38%, and the average P&L increases by 24%. What we're looking at here is that as you get to a meteor option, when volatility is relatively high, you're obviously going to see bigger swings in both directions. This gives you kind of it shows you that the same sort of risk applies to when volatility is super high, to a 20 or 30 delta option as it does to a 10 delta option. But you're getting paid a lot more on that 20, 30, 40 delta option. What it's telling you is that when volatility expands, you should be getting a little bit more aggressive with delta as opposed to selling the 10 delta option, because your loss is basically the same across the board. The tail event is priced in to that position. So the 50 delta now, when volatility is at a 40 or 50 handle, is pricing that you can get a 30 or 40% move in the stock. And so you're getting paid that risk here. Your loss between a 20 delta option and a 50 delta option is, a couple $100, whereas your reward is double. So you're 2x the reward with the meteor option with about the same loss or a similar loss as you would with a tail type option.
You explained that really well. Really good job.
So comparing to periods when IV is between 10 and 20 and trading in a 40 plus IV environment reduces skew magnitude by roughly 85%. So when you look at low volatility environments, your win percentage is going to be lower because volatility is pricing nothing in, and so therefore a lot can happen.
Yep.
When volatility is pricing a lot can happen, it's very hard to have all of those things happen. And so when volatility is high, your distributions actually tighten up, which is counterintuitive to what it feels like in the moment.
It does. It is counterintuitive.
It's hard to look at it and be like, oh, volatility is super high. I got to lay out risk. It's the exact opposite of what anybody would ever tell you in normal media finance.
Yep, you're right.
So the skew and maximum loss measures are entirely different things. Skew is a shape statistic, which is looking at the distribution of the option prices. It doesn't really tell you, much about the wins and losses here, and that's kind of what we were trying to do here. So why skew falls in high IV? In high IV environments, premiums are large. That's the whole point. You're getting paid to take risk, and that risk is usually always overstated, right? Even when IVs...
Usually always? I don't think you can put that together.
Implied volatility as a general statement is usually overstated.
Overstated, that is correct.
So even if it's 10, you could say, well, IV is usually
You're getting paid for taking the other side of the risk is what it's saying by some small multiple. And if you get a move in the direction you need, you get paid in a bigger multiple.
Yes.
On entry.
So delta will influence your max losses. You're going to have a higher number for max loss when you are at a higher delta because you're closer to at the money. When volatility really, really expands, the difference, because of how much you're getting added value you're getting from those options, the difference between that 50 and 10 delta option is not that wide. Whereas when volatility is at a 10, the difference between the loss on a 50 delta versus 10 delta is going to be a lot wider.
Good.
Couple takeaways, and we'll get to the boys on the trade desk.
Mm-hmm.
Skew measures asymmetry, not the loss size. It shows how lopsided the P&L distribution is. It tells you where the risk is priced in. Higher IV reduces the magnitude of that skew loss. In a 40 plus IV range, skew drops by 85% compared to the 10 to 20 range. There's a lot more skew in a low volatility environment versus a high volatility. The distribution is much wider when volatility expands. Lower skew does not equal lower risk. It doesn't mean that if the skew is to the upside that you have less risk on the downside. That is not the case here. And your average losses are going to be much wider when volatility is low. Skew drops in high IV because premiums rise. That's the main key here, is that the distribution between your losses and wins actually tightens up with higher IV, higher delta. But those occurrences are rare.
They are rare.
You get them a couple times.
They are rare, and you might be getting...
it's scary.
You might be getting some of them today as volatility trades just about $24. Even the S&P down 74. We haven't done an SPX trade.
Oh, yeah, shoot.
You want to do, expect to move $42. You want to do something on just the put side. You want to do the puts at a 20-ish delta, 22 delta. I'll put up on the screen, and the calls at a different delta, meaning a little bit wider out if you're expecting a little bit of a rally. What do you want to do here? You want to go $10 wide? You could do a 55.45, or you can go $15 wide. What did you do?
So we'll put in the Qs 30 days out, or in SPY, and I'm going to do the same thing in the Qs, around a 25-ish, 30-ish delta.
So you're just basically
putting money where my mouth is.
Playing. These are both be long delta trades.
Yeah.
Got it. Not in the 0 day.
No.
Gotcha.
Well, these are 30 in April.
I got it. I know.
Yeah.
Just making sure. Awesome.
Do you want to do a 0
No.
day?
We're all good. We're all good. No worries.
Let's do it. Let's do SPX. Come on.
Well, you can go smaller in ES if you want to. That would make it half the size. You
No, let's go $10 wide. Go $10 wide. That'll make it smaller. Johnny.
Okay, what are you looking at? Are you looking at a delta neutral one? Are you looking at okay?
Yeah.
Let's take a look. You said $10 wide. You want to go to the 55.45, 66.55.45 on the put side. It's about
I was going to go 40, 60, $10 wide. Yeah. 66.50, 67.50. 50 points on either side.
Okay, sure. Let's do it.
I would think it'd trade about.
And you're going $10 wide. Looks like it's trading for around 305. I believe that's where you
fill that.
Just got filled. Is
Below 6,700. We're low of the session.
We are at the low of the session with the high, the high for the session of volatility since we've been on 2406. Even the S&P is down 82. NASDAQ down 1.5%, 366. Russell down 2.25%, down 54. We'll take a quick 90-second break and come back. We've got more Tasty Live after this. We've got Q and Glenn from Tasty Trade. We'll be back in 90 seconds. It's Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live. That's right, with this man. Tasty Trade World Headquarters, your friend of mine, Mr. Q. How are you, brother?
Fellas, how's it going? I'm doing well.
Good to see you.
Oh, thank you.
Slow clap. How's your day going today? How's the desk?
Yeah, it's good. It's actually a lot calmer than you would think with the SPOOs being down 70, 80, wherever we're at right now.
Down 85 at the moment, down 1.25%. Russell's the weakest, down almost 60, 57.
Yeah, I think a lot of like the, implied volatility was sort of pricing in a move like this. Mm-hmm. And so, yeah, I mean, it's just the volatility being realized right now. So the the customers were more prepared for a move like this because volatility's already been elevated. A lot of capital is being allocated right now, but you're prepared for moves like this typically.
Yeah, it all comes down to directional risk here. What you're talking about is volatility is up 5% today to 24 and change, but we've been hanging out between 25 and 22 for the last couple of days, week. Any positions that you put on that were fairly delta neutral, and if you stayed on top of your deltas, they haven't moved that much because volatility hasn't contracted that much. If you were short premium, hasn't contracted at all. And if you were long premium on there, they haven't really gotten paid too much there unless you had directional bias on there. So volatility hasn't helped you yet, is what you're saying. So I will.
Long little MGC.
MGC. It's you. I like it.
Like typically when it comes to like premium selling, a lot of the time when you're getting very aggressive, a lot of customers will carry a little bit of short deltas to, combat that short vega that you have because typically the volatility expands to the downside. So even if you do get an up move, you can still make money with the short deltas, right? And so, even though like 80 points is a lot on the SPOOs, right? But volatility's sort of already been pricing a lot of this in.
Yeah.
Like it. Good job. Good job out of you, my friend.
Yeah. How are you guys trading this market?
We're a little all over the place.
Sometimes good, sometimes bad.
Yeah.
Is that a
little bit of everything? I think.
No. It's been great. I mean, we have some short vol in oil on the upside, short units as we've been calling it.
Yes.
Via MCL and crude, but keeping it in line. Not a ton of risk on the table relative to the account size, but definitely leaning into the upside volatility. I've been doing a lot of like call ratio / butterfly type trades where I'll buy an at the money, like MCL is a good example. I've done this in the shorter duration and in the 35 day. You can buy a call spread like right at the money, let's say, or right out of the money at the expected move, somewhere around 100. And you could buy a $5 wide call spread. It trades at like maybe $1.50. You go out and sell a $1.50 call on the upside against it as like a small credit, right? So I sold the 175s, 35 days out in crude. So you're talking about like almost a doubling. And I did that for a net dollar credit, which is, a big wide range to hit. It's not exactly short delta, but you're short the upside volatility where if oil stays kind of choppy, or even if it goes up like $10 in the next 20 days, and there's some time that passes, the calls that you're selling on the upside are gonna you basically leg into a free call spread.
Yeah.
If you get volatility but not realized volatility, like you get a $10, $15 move in oil, that would be your perfect situation. It just you want it to happen over like a 20 or 30 day time frame, not all at once. All at once, then you're kind of you got some
timing is everything, as they say.
Timing is everything, yes.
You have a little omnidirectional, and you love that trade too, right, Tony?
Yes. It's my style trade. It's not for the faint of heart. Definitely has some risk to it. So, keep your powder dry. Watch your buying power percentage when you're looking at those kind of trades because they get a little capital intensive at times.
I got my Taiwanese sources in the chat are saying OVX at 123. The last time we had this was March of 2020. That was the kind of the craziness and
and you look at IV rank just to go to the other side there, 119. It was 116 last time we looked at that, so it's as high as it's been too. Two trades are definitely complementing each other. I mean, they're running in concurrent with each other, which you would expect. Beautiful.
All right, very nice. Let's get to my list here.
Let's do it.
Top 20 symbols going through the system, and their IVR. Number 1, Tesla, 9. Microsoft, 32. Amazon, 28. NVIDIA, 18. SLV, 58. Micron, 74. GLD, 50. IBIT, 58. Netflix, 30. Google, 21. TQQQ, 40. TLT, 33. AMD, 35. Palantir, 20. Meta, 23. DDOG, 50. Spotify, 28. SNDK, 57. Oracle, 58. And SoFi, 27. Oracle, vol really coming in there.
After expiration, after earnings, for sure. And, even though it was going higher, it's now unchanged, down 50 cents. Volatility came in quite nice. Still elevated, though. IV rank of 59, good in there. a monthly implied volatility around 60-ish or so. So if you still like Oracle, you want to play Oracle, it's definitely one that's still valid.
Yeah, a lot of higher IVR names out there right now.
Yes.
Nice to see for a premium seller.
Volatility is expanding across the board in just about every product. And you don't get paid selling premium when that happens. You get paid for it setting the groundwork today. Like a lot of times, I've never been more lucky when I prepared for something, and preparing is putting on trades in a staggered way, and then getting the move you want, whether it be volatility contraction and no movement in the stock, selling one side, playing a directional bias on it. But I think two-sided trades right here are the way to go, as opposed to trying to catch a falling knife or pounding into the selling of the market here, at least in the short term.
Yeah, and that's the nice thing with options, right? You can choose your direction or choose no direction if you want as well.
Yep. All right, well, I got a direction for you. I'm going to have to let you leave right now. And I'm going to have to bring in my next friend,
Victim.
My man Glenn. How are you, brother? How's things?
The self-proclaimed crushing it.
When he walked in here, that's what he said. We'll get to that in a minute.
Yeah.
Do you wear that Aura ring when you sleep?
Yes, I do. That's the main reason I wear it.
So do you sleep, when you sleep, do you sleep with your hands anywhere near your head? Because I sleep with my hands near my head. I do not have an Aura ring.
I sleep like this.
Please, no more, no more.
Yeah, I sleep.
Yeah, don't hurt me.
No, I sleep like a starfish usually. So
like a starfish?
Yep.
Okay, good. Because whatever that emits, I don't want it near your brain, man. Because I got to protect the head. You got to protect the head.
That is the most boomer thing ever.
Yeah.
No problem putting the phone to his ear.
Well, I don't have it there for 8 hours while I'm sleeping.
That's true.
Is a point.
And this you hear it goes.
Oh yeah, it has
Yeah.
All right,
but
I stopped though.
I'm just trying to give you a little public service announcement.
Thank you. I
boomer talk. It's like chicken soup kind of thing. You know what I mean? It just makes you feel better when you're sick, even though if you don't believe it, it does.
Haven't been sleeping so good either, but I'm feeling good, so that's good. And
what's your sleep score?
Today was like 74. We like it in the 80s.
Yeah, that's not great.
That's all right.
74.
I was tossing and turning.
Mikey is like, if he's not in the 90 range, he like takes off the day.
He's not playing.
Yeah, like
he's not in the 90 range.
Mike
he's not
is
playing.
a 90 or
that's soft.
Yeah,
that's all right. We thug it out. But Tony, I do going to dinner tonight. A bunch of friends in town for the weekend.
Ooh,
all dudes. So no dessert. Green Street Meats.
No, you can have dessert.
Okay.
You just can't share dessert with 5 of your guy friends.
Yeah, they get weird. They like share spoons and stuff. It's really gross.
Okay, what about drinks?
See,
Everyone needs their own drink
what's
too.
wrong with you young kids?
What if I get like a really yummy cider and somebody wants to try it?
Really yummy cider?
Yeah. Can I share that or no? Do I say you got to get?
I don't know. I've never experienced that situation with my friends before, having a really yummy cider.
All right, that's good. You gotta go early though. You don't want to miss out on because they run out of stuff.
That's true.
Green Street. So
what's your top 3 meats?
I mean, the brisket's awesome. I'll tell you an underrated thing there. The baked beans.
Where?
At Green Street Meats.
Oh, that's not underrated. I mean, anybody who's had them has to say they're the most phenomenal baked beans that have ever been baked.
Of beans below the meat.
Do you?
They smoke the meat and all the dripping.
He's never had them.
You never had it?
Can't say I've ordered the baked. Okay.
See, and they put little chunks of brisket.
Yeah,
in
they
there.
put the chunks of brisket in there, but the juice just drips into, and so it's just.
All right, I'll try it.
It's really
if I'm going sides there,
get the baked beans.
Potato salad's pretty good.
God, are you white?
Just mayonnaise. He goes to a barbecue joint and he wants the mayonnaise dish. Come on, what's wrong with you? Put some spice in your
Cornbread too. Very good. Okay, baked beans. Lock it in. I'm there.
You should get the baked beans. They're really, 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 really good.
Money back guarantee from your Uncle Bat.
All right.
You order the baked beans and you say you don't like them, I will give you your money back.
Remember when we used to get Green Street for
birthdays and stuff like that, or maybe just to make the market change. We would even get orange chicken and stuff like that. From just to make the market was going down, believe it or not, as it is right now. Even the S&P is just $10 off of the lows, by the way.
On the other side of that coin, though, we had what was the cafeteria that we would buy from? Where Tom loved the sloppy joes that were horrific.
That was,
what was
like
that
prison
place called?
food. I don't know, but it was prison food.
Does anybody out there remember that one?
K&W?
No, I wanted to say Cafecito, but that's the sandwiches, which is good.
Don't give them a bad rap.
Yeah, Beth, you gotta chat me what that was. I forgot which one it was.
I don't know, but it was prison food. It was like a trough of.
Oh my god, it was so bad.
Disgusting.
He eat like 4 of those sloppy joes, and like the whole tray would be left. He could take it home for leftovers. We all went home.
And nobody cared.
Nobody cared on that.
Nobody cared. All right, you said you've been killing it. Let's talk markets. Let's talk FX here. You want to lead with your client sentiment slide, or do you want to tell us where you've been hanging out?
Sure, I can lead with the slide if we want.
Okay, all right, beautiful. Let's put that slide up. The client sentiment. Okay. You have a pointer?
Yeah, because I know Nick's pretty far away, so just wanted to make this crystal clear here.
Okay.
Yeah.
Got it.
Here we've got client sentiments today.
Okay, got
so
it.
At TCFX on the native TCFX platform.
You can only trade this today because I actually do have the USD Canadian dollar that we put on the last time you were on. I'm up $18.
Ooh, yeah.
The other one from December, I'm down $277.
Yeah, we don't talk about that one.
So I'll take that $18. Makes me feel better.
But see, that's exactly why I wanted to bring up this slide. Because
it says today.
It says today.
Yes.
We are currently in today.
Yes.
But no, when you look at, we have client sentiment data overall, IG Group client positions across the globe. We have that for, collectively. We also have the last hour, today, this week, and this month.
You can get this on our website, right? TCFX?
Only in the TCFX platform, but it's free to open a demo account as well.
Oh.
Why I bring up today is because we tend to see if I bring up the overall positioning for all global clients, we tend to see stickier figures like yourself, who's been kind of pinned in an Australian dollar and a US dollar, Canadian dollar.
My eyes gouged out here.
Yeah. So
I'm pinned down, and they're doing the like Game of Thrones, like. Yeah, that's me.
Yeah. So Canadian dollar overall, that sentiment is very long US dollar, and Australian dollar overall, that sentiment is short, also long US dollar. But here we could see
on public. Oh no.
Yeah. You are public.
That's what the pointer is pointing to.
Now
that's what you being public.
But today,
I was early public.
You were a little early, but today we can see that clients are a lot more flexible. And these not really mapping the overall positions. And it tells a pretty good story because a lot of these active clients are trading these ranges that are presenting themselves. Like we have Australian dollar, US dollar down almost a full % today on the risk off move. That's been pretty whippy, coming off of 4-year highs back to 2022, right at 72 cents. But client sentiment today showing a slight majority of clients getting long today. So playing contrarian ranges, presumably over a shorter term time frame. And similarly, very interesting, this US dollar Swiss franc is the one of the most extreme sentiments overall at 80% long US dollar. But today we're looking at 58% short. And that is right at the top of its range. So just gives you another lens of how people are trading these markets intraday, because I know it's tough when you have some of these markets that you have a position stuck in. But the nice part about trading spot FX, you have this dollar exposure, 20 different ways. So there is opportunity to participate in other pairs. And we're seeing some pretty good back and forth. This narrative, this conflict is, of course, not what we want to spark volatility.
Yeah,
go ahead.
But when it's presented, it has on the shifting expectations, the impact to potential Fed rate cuts this year, and the inflation spike has really played out through this US dollar. We've got euro dollar back at its lows. right above 115. That'll be really interesting if we trade any lower there.
On the euro, you think that's an interesting spot?
Yeah, because I mean we're right where we were the lows of the Sunday open. I don't know how that compares to equity markets.
Equity markets are
we're lower.
We're lower and lower by a lot. Like even the S&Ps, I don't know about the opening price, but they traded as low as I don't know. Let's
67.05.
Low.
Well, the low today. We got below that today.
Yeah.
The overnight session, I think it was 6,700.
Yes, that is correct. Just under.
Yeah.
Yep.
Yeah. So for dollar markets, we're right there at that seemingly crucial inflection point. So a positive day for the U.S. dollar. If we take away the gap open, we're pretty much unch in this euro dollar and a lot of other dollar markets. So aside from that, dollar yen above 159 in the spot market. Super interesting, slowing momentum a little bit, but pretty stuck. And some traders today electing to go long right at that extreme. So,
question for you here, just looking at this slide. Is it unusual? I mean, 4 of the 5, I'm going to give the 54% being 50-50 and the 51s all being, 4 of the 5 are pretty much 50-50 across the board. Is that typical, or is that an anomaly that you don't usually see? Like usually see,
it's more typical than not, but you will see, if we were looking at less of a unanimous dollar move and one of these pairs moving greater relative to all the others, you would see a positioning over an hour today, this week, get a lot more extreme in one direction or another, presumably more contrarian to the move that's going on. Okay. But you will see this get into the 60s, rarely the 70s, but when we're talking about overall client sentiment, that can really range, like I said, this dollar Swiss franc up to 80% of clients long holding open positions in that market. So
very nice.
Got a lot of people really appreciating the pointer.
Really
helps to add, like as a viewer, they're saying it's a good focus point. The slide is there, and then the addition of the, it really grabs your attention.
That's good. And also, I don't, in certain circles, you guys respect me.
Yeah.
Sometimes I need a little help to command the respect that I think I deserve. So
yeah. And
shout out to Chris Johans. Gave me the pointer to borrow. I had to put down a pretty hefty deposit because I'm a flight risk or a risk of losing it. But he said I can get it almost all back if I return it.
It's like renting. You're like renting it.
Exactly. But I thought this would be the perfect.
Small fee.
Good job out of you. Let's talk about the market here for a quick second. Even the S&Ps down 82, trading near their lows, about 10 handles off of their lows. NASDAQ down 360 and change, about 40, 50 handles off of their lows. Russell down 58, down 2.33%. That's your leader. The clubhouse to the downside. Big move in the Russell on top of big moves on the Russell. Dow down 600. Volatility hanging out at 24, up $1.10. Volatility not really moving. Even the went higher by about 20 handles, lower by about 20 handles. Volatility is just hanging out at 24. Bonds are now down 9, 114.16, still middle of their range. Bitcoin sold off. It was flirted with 71. It's under 70 now, 69 and a half. About $300 off of its lows. Ethereum doing the same, although it is still up 1%. It was up almost 3% before. Oil is your culprit to the overall market and everywhere else. Volatility continues to expand in there, 119, and price continues to go up.
Oil moved $1 and the E-minis rallied 30 handles.
Yes. This is all
oil volatility.
This is all oil volatility. So I think wide spreads in the equities, if you're looking at SPY or anything else like that, is probably the way to play this market, especially if you've already gotten around or near your position limit on size, right? I mean, that's the way I would. That's
Wheel volatility at the high of the session,
Right.
125%.
Right. We probably should have put a bid in for your
I
trade.
did. For
Oh,
the
you did?
SPX, I just did it at 245.
Oh, gotcha. Because I was wondering when we rallied back, even the S&P's only down.
I didn't have it on at that point.
Yeah, you probably would have gotten filled there. It's trading around 285 right now. You did it at 305, so you need a little bit of a rally in there too.
I thought the same thing when we had that rally. I was like,
I forgot about
where's
it. I
my
should have been
ding?
helping you.
It's okay.
Yep. All right.
Do you know what the Jones Act is?
No, what's that?
No. What?
It's getting suspended. Trump administration set to suspend the Jones Act to tame oil prices.
What does that mean?
Federal statute: all goods transported by water be carried on ships that are U.S. built. I have no idea. We'll see.
Okay. All right.
That's the headline.
Jones Act.
From 1920 is a U.S. federal statute requiring goods transported by water between U.S. ports to be carried on ships that are U.S. built, U.S. owned, and U.S. crewed.
Do you remember where you were?
I was going to say screwed. It was U.S. crewed, meaning the everybody who works on there. Originally designed to protect national security and foster robust domestic shipping building issues, often increases shipping costs. So they're trying to again
Cut down on the shipping costs.
You don't remember where you were on the
1920?
the signing of the Jones Act?
1920? No, not at this point. Well, we're going to talk about that on this break. We're going to take a quick 90-second break and come back. We got more Tasty Live. EMSP just rallied 10 handles, volatility to move 2407. We'll be back in 90 seconds. You listen to Tasty Live. Liz and Jenny next. Great job, son. Good job out of you too, my friend. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Hello, everybody, and welcome to the Liz and Jenny Show. My name is Jenny Andrews. That beautiful blonde is Liz Deerking, and it is a Red Shirt Thursday. Happy Red Shirt Thursday, everybody.
Happy Red Shirt Thursday. I got a new Tasty Live swag yesterday, which I loved. We were at the office. Red Shirt, Tasty Live. Do you think they did it for us, Jenny? I think they did.
Oh, and made the Tasty Live red shirts? Sure.
Yeah.
Where can people buy Tasty Live swag, Liz?
I believe it's
Threadless?
Threadless?
I think it's Threadless. I think it's Threadless.
Yeah.
I believe it's Threadless. I was trying to pay. I wanted some swag. I was trying to pay. And they take no cash or in the office. No cash.
No, I know, but you can go on and do them. We were laughing so hard in there yesterday. I love the front desk girls. Those guys get a big shout out from me. They're wonderful. I love it's fun to see everybody in the office when we go in.
Oh, it was fun. And we both left with a bag of swag. My dad was thrilled. So it's been a crazy week. My dad unfortunately fell and broke his hip. Now
He's okay. We have to give that disclaimer.
Yeah, he had surgery. He's great. He's in a rehab center now, but he is going to be the best looking man in the rehab center in his new Tasty Trade apparel.
Did you give him a red shirt?
He got the Tasty Trade zip up. He's gonna look good. He's gonna look good. And think of the advertising we're gonna get with him in the rehab center, walking around in those Tasty Trade clothes.
I mean, he's a pretty cool guy. So all the girls are gonna ask him where he got his outfit.
In the hospital, he made so many friends in the hospital. His nurses, the cleaning, the man who would come in and clean his room. He left with a lot of new friends.
I would argue you are your father's daughter, because if I placed you in a rehab facility, you'd come out with a lot of friends.
Hey, I looked at all the people eating together. I would much rather be somewhere in a community like that than living by myself someday.
Jenny, and I hope Trade Small, Trade Off, and John is listening. That's why I overrun her Instagram with the villages. Every time I get a clip of it, I send it to Jenny.
I know people make fun of it. It's my kind of place.
I know. When I saw the baton, we can get back into baton twirling at the age
we can dress up in a Santa costume and be in a Christmas parade.
Yes, I'm in.
Baton twirling. I think I for sure could still do that.
I'm not going to get up right now because I don't want you to see my pants, but I've got a baton right there.
You do?
Yes. Hold on. You stay right there.
All right. Don't. I don't know why. I think we learned baton in gym. In gym back in the 80s, we learned baton. It's awesome. Why do you have that?
Because I can't even believe I'm saying this, because I used to twirl baton. I used to be on a baton twirling battalion when I was a kid. And I, a couple years ago, told my husband that I could twirl a baton. He called BS and bought it for me.
Oh my gosh, I'm going to buy one for myself too, because
I can still do it. You know what I can't do? I'm very bad. I used to be able to do left and right. I can only use my right hand now.
Okay, so we're starting to make fun little shorts from the SIBO. Bring that next week, and we're gonna film a short of baton. Yeah, I'm not kidding. Do you think they'll let us on the train with a baton?
Yeah.
Does it look like a weapon?
No, it looks like a real baton. Although we should bring it with us all the time just in case we need a weapon. But
yeah, that's not a bad idea. So bring that next week when we are at the SIBO Tuesday, and I'm gonna get some baton footage. 100%.
Things have gone horribly wrong. I can still do it. I mean, like I said, the throw up and catch is a little subpar, but the twirling still good.
Oh. I believe you. I believe you. I cannot. Same here. The toss and catch, not going to happen. The twirling, 100%.
Yes.
But I did like when you sent me that video of the ladies all in a baton parade.
Yeah, I know. It was fun. Okay, now that being said, this is a market.
A trading show.
A trading show. And we're not wearing red because the market is red, but let's jump into the platform and take a look around. So SPOOs are down 81. We opened up with them down about 55. So we're continuing a little bit of a slide. There's been they battled a little bit up, when we opened down 55, they battled their way up a little bit, but it's sliding back down.
It's so funny because now I'm loving my put spreads. I'm loving my put spreads, and with the new, the increased vol, we're getting so far in the 0 day. So when my mornings have changed. Where before a red market, I would think like, oh, I wish we were up today. Now a down day, I'm like, yes, a down day. It's better for those put spreads.
It is better for the put spreads.
So I was happy selling my put spreads this morning on the open with the down move. Now with SPOOs down 82 and on the open, maybe they were only down 50 something. My put spread is not a winner. I got out of my rut, but I did not get out of my SPX or NDX.
So I've been doing this. And I was telling Jenny on the train that I've been doing this, and I'm glad you are, because we had that question yesterday about doubling up. I actually talked Jenny into doing the same thing. I haven't been doubling up. I've been peppering the infield. So I've been doing a couple rut, a couple SPX, and a couple NDX because, and the rut comes off pretty quickly. Well, it came off quickly for both of us today. I can't say that.
That's because rut was down 2% on the open, and then it bounced. It bounced and was only down like 1%. And so we both put in 50% GTCs. And so the rut came off fast, but that was on a bounce. I mean, literally came off in like 5 minutes.
But I do want GTCs in. I mean, sometimes when there's not a lot of volatility going on, I might leave it for the whole day. But when I know the vol is high, and let's take a look at the VIX, I've been putting in orders to take small profits. And it's nice when one of them comes off.
Yeah, I mean, 50% is nothing to shake a baton at, Liz. Okay, VIX is almost 27, up 10%, so it's getting a pretty big pop. This is probably close to the high of the day, I'm guessing. You can take a look.
Oh, high for VIX? Yeah. Let's take, today it's close to the high. So the high today was 26.95 or 26.58. Getting close to the high.
Let's go to the 0 DTE with SPOOs down 82. I want to see my spread is trading for the same price. I sold it for $1.90, and I think it's still about. So I'm in the 66.35, 66.15.
Hold on, I'm going to check mine too. I'm looking to the left real quick. What are you? You're 60.
I'm the 35.15.
35.15.
And I sold it for $1.90. It's 205.
It's right there. Yeah, it's right there. You do go a little bit farther than I do. What do I have here this time? I've got I'm not too far away from you, but I'm narrower. I have the 40-30.
Okay.
Multiples.
What did you collect on the 40-30?
On the 40-30, I collected 120. So
okay, that makes sense. 120 for the $10 wide, and I got 190 for the $20 wide.
Yeah.
That makes sense. And then that kind of goes back to our viewer question yesterday. Would I have been better off doing two $10 wides? And I would have collected more than $1.90. I would have gotten 210 or I would have gotten,
260. Yeah. I don't know.
I don't know.
Who's to say? But like I said, it doesn't matter because, like, to your point, if they lose, if one loses and we get a major down move, all of them will lose. It's not, when you're looking at SPX and the difference between 40 cents moving in your break even, it's not really that big of a deal.
I think I might start doing two $10 wides instead of one $20 wide.
Come to the dark side, Jenny.
I do like the idea of some in NDX, some in RUT, and looking at what's moving. So that was the first thing I did. What's moving the most? RUT was down the most. That was, I jumped in there.
That was your first entrance. That's funny. I did the same thing. I was like, it was my first entrance point and my first exit.
Yeah. Well, now what's the percentage? What?
It's back down. Red is back down 2.33.
Yeah. Maybe I'll get back in.
Look at you. I don't want to overtrade it. That's my ultimate goal. I need you to stop me from overtrading it.
So
but that's what these the two. I mean, I know we said that these are wrapped around the same price or even a little bit better than we put them on.
Mm-hmm.
But I and we did do that study with Kai yesterday. It was great to see Kai, by the way. We did Kai's study where it could be, it's 8:30 or 9. There's not really a time. Now, 10 o'clock, in my opinion, is a little bit late, but it's still the same price right now.
I'm pretty sure, I mean, it's great to see Kai, but I'm pretty sure everyone in the office thinks we're nuts. When we come into the office, we come in like 2 tornadoes.
Yeah, 2 separate tornadoes because we're both circling. The cyclones hit 2 different groups. But it was fun. I liked that fast paced. We got a lot of stuff done yesterday. Garrett gets a big shout out. All of Master Control gets a big shout out. It was a lot of fun.
It was a lot. It was a lot of fun. It was a lot of fun. I'm just cracking up, thinking, recapping some things in my head.
2 separate tornadoes. Okay, so let's pop into our positions page, Jenny, and take a look. Oil. I mean, has that been in the news lately?
Up 840.
It's all you hear about is oil. So let's take a look at our MCL. Once again, not stressing this at all. I'm going to take a look at our baby MCL position. We've got the strangle on. I heard Nikki Batista talking with Mr. Vecchio this morning, and he was talking about how he's got the strangle on as well. I think he's got it in the big dog, but you will notice that.
You think he's got it on in the big dog?
I do.
I liked hearing Chris Vecchio say we're not going to see oil back in the 60s. So that we've got no problem with that 70 put. And if he doesn't think we're going to see oil back in the 60s, if we collected 570 on this, that means we could roll that put up all the way to the 75, and then our break even would be in the 60s. I did like hearing that. Now, is he going to be right? Who knows?
Nobody knows anything, but in Chris we trust.
In Chris we trust. Roll that put up.
in Chris we trust. I mean, the put's only what percentage is that put up?
Oh, put's up $70. What do you get if you move it from the 70 to 75? And I'm not. And I know when we put this on, we said we're never rolling these.
I don't want to roll it. I mean, honestly, it's doing its job. That's what I was going to say. Is I'm not concerned. This isn't. I don't think this is a rollable opportunity.
No, but I just want to see what we'd get.
$1.40.
For $5, that's not terrible.
It's not terrible, but I think I don't want to micromanage. I want to leave that. We've got our GTC in. We're going to leave that. I think it's going to hit. Okay. So CL, we have our broken wing butterfly in. Oh no, this is.
No, that's the downside. That's the downside broken wing butterfly.
Downside broken wing butterfly.
That's on for a long time. That's on for a long time. And we're not nothing's going to happen to it until.
I was confused because mine expires tomorrow.
Oh, because you put on a short-term one.
I put on a very short-term one. That's why I was like, why does this have 38 days or 35 days left? That was very confusing. Let's see if anything else needs to be managed. What I'm going to do for our viewers at home so they don't have to watch me scroll, I'm going to change this to P&L open and go green. Okay.
There's nothing good.
Half. 87%. For sure going to take this off.
Wait, what?
It's been on for 27 days. We have a short 10 put. We have 87% profit. I'm closing it.
Who did that come from?
No idea.
then let's look at, there's still a 56 rank.
I know, but we're not keeping this on. I mean, I'm closing this.
Okay. But let's look at this 56 rank. If we went out to April and we had the 10 put, if we sell the 10 put again, it's only 30 something cents. So they must have had earnings or something to take some of this premium out, because what did we collect on our last 10 put?
Well, Jenny, activity. Let me go back 30 days.
We got to go to Pat.
Path. Filled. We collected 57 cents on the 10.
On 213. So about a month ago.
On Valentine's Day Eve, Jenny and I sold
the path put. And so it was on for a month. Yeah. Now 32 cents isn't that appealing.
No, it was 57 cents when we put it on. So yeah, we don't want to. That's fine. We don't need to stay in path, right? No. Now taking a look, hood. I know we've looked at this. This is one we're probably going to leave because this was a roll on top of a roll, and we still have a lot of premium in there, 35%. I like to take the one thing that I will aggressively take off would be if it was over 50. When I look down these numbers, unless there's something that's jumping out at me, I'm not going to do it.
No, what I do want to look at, and we put one share in here just so we don't forget about it. That KTOS, this was a trade Fazia gave us. We sold puts, bought them back, and with it down 330. Let me see the chart. How many has it been down, or is it just?
I mean, it's right there. You know what? You know what, Jenny? Can we do something real quick? I'm going to go here. And I'm going to go to what TP and I put together, these defense stocks, because that's in there. I'm actually going to do it on this so it's bigger. Watch this.
Oh, but what I saw was up big today earlier was Firefly. I think I bought that for JD for his birthday.
You did. But so what I found, we were looking at these defense stocks only because, you're looking at oil and that KTOS was a defense stock. I'm going to put it in.
Wait, did you guys build this list or is this all defense stocks and it was just?
No, TP and I built this list.
Because I feel like you might be missing some.
We're missing a ton. We built the list. I don't know all the defense stocks, but we were just saying.
But you knew KTOS?
No, that was from Fazia. Remember?
But you knew to put it on this list?
I just put it on 3 seconds ago.
Oh, you added it.
Yes. I just put it on 3 seconds ago. So that was from Fazia. So 3 seconds ago, we just put this on because these defense stocks, I was surprised at Boeing, taking a look at Boeing, and now I know it's defense adjacent, but take a look at this decline since we've been in turmoil. Boeing is down to 205. I mean, that's pretty low for Boeing. It's got a 25 rank. Do you want to do an earnings setup calendar, Boeing?
We could do an earnings setup calendar. We can do, but before that, will you add Fly? Because
wait, is Fly a defense stock?
Yeah. That's add Fly to your list, yours and TP's list, and only because I bought, we bought it in my son's account. I bought it for your son for his birthday, and it's up 20% today.
That is a lot. Did they have earnings?
I don't know.
I bet they had earnings.
And not 20%, 18%. But it's a big move for Fly. Let's take a look at the chart.
I bet they had earnings.
And it's probably just coming back because when JD's birthday was December. So it was in December that he got it.
That was 3/3. That was on your birthday that news came out. So I don't know.
Well, I don't know, but at least hopefully the kids are making some money in this.
So, okay, now we don't have it in.
I like selling puts in there.
Okay, TFX just corrected. Hold on. FLY. I want to go back to the right thing. I'm going to go back to here. There's lots of premium.
I know.
Wide markets. So it's got, what is the star symbol here? How many stars are in Fly?
Well, I feel like this is newer. Well, maybe I'm making that up, but newer to me. A newer trading vehicle.
It's new to me, too. It's new to me. Overview. Stars. 3. All right, I'm in.
Hey.
Now it's got a 37 rank. We've seen it as low as, I would like to get my break even right around 19.
Sure. Those 20 puts, I think those 20 puts for $1.50 don't look bad. I mean, the buying power is not terrible.
No, this isn't bad.
No.
You might have just discovered the next market movers tomorrow.
Thank you very much.
Yes, you might have just done something. Okay, I'm going to sell this for $150. We're putting up $686.19, and we're filled.
Oh, look at that. We thought the markets were wide, 125 and 175. That is wide. Put it mid-market and got filled immediately.
Yeah.
So, that's interesting.
That is pretty interesting. I don't mind. I like this, but I kind of like having the defense stock list. Now, let's jump back to Boeing if you don't mind, because Boeing.
Yeah, sure.
Boeing, it is defense, but I think it's defense adjacent.
Yeah, right? and more, right?
Defense plus, right?
If you want just defense, there are other stocks. There are other stocks that would be better choices. But this is.
But so this never got the lift that you're going to look at. I'm just going to look at Lockheed Martin because I know their defense. This never got the lift that they got. This is when we went to war. Do you know what I mean?
Yeah, but you know when it's like oil's up and airline travel's down, these airlines might not have money to order new planes.
Okay, but what are we going to do on a down move like this in Boeing?
Boeing's got other issues. I I in Boeing at 205 would look at either a selling a put, but you mentioned earnings setup calendar. I'm happy to look at those too.
So I was just thinking that we could do something maybe to the other side. So let's assess both. I don't mind a put in Boeing. I think it's a lot of capital though. So we're going to put up $2,500 to get 400. It's not bad, but I do thoroughly like the other one we just did in Fly. If you're looking at return on capital, it's a little easier when you've got a little bit less of a buying power.
But I like seeing Boeing back at this, 200 level. Let me see the chart one more time.
It went from 250 to 200 in quick order.
Well, even go back in time, it was a lot higher than 250.
Yeah, I know.
Go back in time,
last year.
Go back a little bit, wasn't it? 300.
Yeah,
400,
I mean
400.
that was in 2020 though.
So and Boeing had my number for a while because I had short calls at the 135 level, and that thing ran through my calls, and I think I was rolling those 135 calls for a while, chasing this thing up.
I remember your 135 calls. We all do.
I'm pretty sure I lost 10 grand on those 135 calls trying to roll those things.
And then you finally got out. So let's take honestly, I would like to do an earnings setup calendar here. Okay. Let's see how much it is. It's going to be expensive. I'm going to go to the at the money. Can I go slightly higher?
Yeah, go slightly higher. Sure.
I went to the 220s. So take a look at this. This is a great earnings setup calendar.
That looks like the deal of the century.
So what we do with an earnings setup calendar is you buy the cycle before earnings and you sell the cycle before earnings and buy the cycle after earnings. Now we know we're buying that little bit of inflated volatility there in 42, but that should continue to inflate.
Right. As we get closer to research shows that 2 weeks prior to earnings, that cycle with the earnings in it will continue to get higher vol and higher vol and higher vol. And that April 17th cycle that's going to expire before earnings will just decay. So we'll end up with this long 220 option that only cost us $1.50. That's not bad. That's not bad at all, Liz.
No. I'm putting in all these things after we get off this show. Look at how much decay we're going to get in 36 days. So we've got $4.50 in decay. Now, if it comes up, if Boeing rallies a little bit or rallies, 10% and gets us back to this 220 level, we'll take this off for a profit.
And we will. And what I like to do with these and what you like to do with these is do multiples of them. Let's say we did 2 of them, and right before, as time passes, this calendar we paid $1.50 for is worth $2. Well, maybe we'll close one and take that $50 that we made and leave one and leave an extra, end up with that long call for earnings and leave it through earnings as a, possible, I don't want to say Hail Mary, but just have an extra long option that we got at a discount.
Look at how fun it is as well, because it's the 30s. I thought it was regular monthly. I could change this to the regular monthly if we wanted to. Watch what I'm about to do. Now I'm going to clear this. So I'm going to give you 2 options, Jenny Andrews. This is choose your own adventure. Okay. This is just for our account. Would you like to pay $157 twice for 2 of these that have a week apart? Let me show you. So they're a week apart. You have the 36-43 day. So I'm going to do 2. Okay. So just keep that in mind. Would you rather do 2 of these, or would you rather, and I don't know what the price of these is going to be yet. We're sticking with the same strike. So I'm going to sell 1 220 in the 36 day and buy 1 220 in the 64 day. So keep in mind, they're about the same price.
About the same price.
Buy one of these or 2. The other one gives you more sales against it, and it's a little bit more expensive.
I personally, when I do a calendar, I always do multiples because I like to close some if it's a winner, and I like to keep some for that extra option. Now, if this one turns into a winner, we're just going to close it, and then we won't have that extra option through earnings.
Correct. Now, I mean, like I said, I kind of agree with you. I'm just having fun here. It's just a little FYI. But so when we price that out, that option looks, this earnings setup calendar looked really enticing at 157. I'm just going to play devil's advocate and give you some other juicy facts about the one if you do the regular monthly to regular monthly, because a lot of people do this. There's extra cycles in here. Now, if I wanted to spend more in my account, I would prefer doing 2 of these.
Right, having the extra cycles. I get it. I totally get it.
But the multiples are more important to me than the extra cycles.
I think so. I think having 2 calendars, and maybe from now on when we do calendars, unless they're like
crazy expensive ones don't make any sense to do too.
Yeah. But when we do calendars, we do multiples. Now, my hope, because I'm going to guess maybe it's not confirmed, and close up this just to look again, like earnings, if earnings aren't right, this might not work out. I don't know. It says April 22nd.
It's April 22nd. Yeah. It looks like it's in that cycle.
I don't know. There's not that, we don't see a big difference. We see 40.8 and then 43, but then 40.7. I'm not 100% sure that the April 22nd date is confirmed for earnings.
Well, and do you think that because it is in the news that some of that inflated volatility is kind of like, okay, because it is technically a defense adjacent stock, right? And we've got things that maybe things might settle out by then as well. We don't know.
But I think 205 is I hesitate to say cheap because it could go lower, but I don't mind getting in here.
No, I don't either. I've got a 2 lot in queued up. I'm actually going to pay $160 for 2 to make sure we get filled.
And what's our risk here? 160 twice, so 320. So our risk is 320. If Boeing falls to 150 or 170 or whatever, that's our risk. And sometimes what I like,
it's not bad. Okay, so with an earnings setup calendar, what we've got is, I'm going to open these back up again, and I'm actually going to change my strikes down to 8 so we can see both of them. Okay, so what we've got working here is if Boeing falls, we've got a long call. And if Boeing pops up and it gets 2 to the 220, we're going to close one of these.
We have a long call that really only cost us $1.50.
Yeah.
Now
so we have a long call that's worth $600 right now that only cost us $1.50.
Now, and I hate to throw another wrench into this, but sometimes what I'll do, and if you add more strikes, that calendar was $1.50. Sometimes what I'll do, and I know this will use too much buying power, but if I bought that calendar for $1.50, scroll to a put that's $1.50 because it's far.
Wait, I'm gonna go in the nearer term though.
Yeah.
This would be a lot of capital because we just priced out the put. So
but it's something that I might do. I might sell that 175 put. That cost is going to cover the cost of that calendar.
I like this. And I think this is another thing where when you're layering options on top of one another, this boosts your profit potential, right? Because then you didn't pay for that calendar.
Right. So
now we did 2 of them, so you'd have to do 2 of these if you really didn't want to pay for it.
No, but I mean, or it could.
I know. Just like the 1 for 1, but we're not going to do that in this account. But it is something that you can do 100%.
Right.
Yeah.
That's it.
It's just kind of like, it's a little fire starter. That's not, I'm just kidding. It's not a fire starter.
All right, let's make sure we get filled on that.
Yeah, I will. I'm going to, those markets, where are we? Okay, it's 185 now. I mean, I'm fine, whatever. I'm going to go 185. That's my final offer.
Sure.
And we're filled. 171. I put it in for 185. We got filled 171.
Price improved. Okay, so that's Boeing. Now, talking about earnings setup calendars, this is the time. There's a very brief moment in time that happens 4 times a year where earnings setup calendars seem to make sense.
Jenny, hold on. There is one time a year that earnings setup calendars make sense. I'm going to pull up something for you.
Dun, dun, dun. Liz, how did you ever find this?
I don't know. When I saw it, I was like, what is happening? This is a pairs trade we put in. How long ago do we put this in? It doesn't have the date with stock.
You can go in the activity, and it seems like a while ago because I totally forgot about it.
Let's go IGV, activity. It was on
218.
Yes.
And this is 312.
Yes.
So it's been a hot minute. And I forgot about this pair.
I did too. That's why I can't believe I busted this bad boy.
Wait, type in IGV again slowly because I don't remember what it is. Tech ETF. Tech ETF. So we got short SMH, which was the semiconductor ETF, and we got long IGV, which was the tech ETF. And 5 to 1, let's pull up the pair 5 to 1 to look at the chart and see how these have moved in our direction.
So IGV to SMH, I'm just going to put it in backwards, right? I'm going to put the closing order in. IGV, I need to sell those, and I'm going to sell 5. Not 500, 5.
Just 5. But let's look at, before you get out of it, pull up the chart and see how this has come. It was probably way up there at the top of the range, and it's come down because this pair seemed to be out of whack, right?
Yes, and that is how we, and you know what? I think we got this from Twitter.
Out of whack, is that an actual term.
It is now. It is now.
The pair was out of whack, but now it's back in line.
It's back in whack.
If it's not in line, then it's out of whack. If it's back in line,
so you can't go in line or back in whack.
I don't know, but we're gonna close our SMH IGV pair. This is one of our recent pairs because the gold silver pairs have been tough. I kind of like this SMH IGV, and honestly, I think we give props to TP. I think he came up with this.
I think it was Twitter.
No, I think it was no.
Well, we put it on together, so TP was not with us.
No, TP was not with us, but TP texted us and said, "Oh, the SMH IGV pair is trading at an extreme,"
and we said, "Let's
put it on." We'll put it on. So I think TP texts us with some of his, he enlightens us with some things he finds when he's looking at the platform during the day.
And keep in mind too, when Jenny and I did this, we typed slowly IGV to see what it was. We looked at the pairs on there, and then all we did for this was take notional value to notional value, meaning we took the price of SMH and divided by the price of IGV and got as close as we could. So that's why it's a 5 lot to a 1 lot.
Okay. It's funny because I just searched my text. You know, in text you could search a word.
Yeah.
So the text came up. The SMH versus IGV semis versus software divergence is at an all-time high. TP texted us that on February 18th.
Oh, the day after Valentine's Day. Thanks.
These are the kind of texts we get from him.
I know, it's so funny.
He gets very excited about things like this.
And what do we do with this as traders? We looked at it and we placed a trade. It's a very low capital trade. I'm hitting send. Hopefully we'll get it. And we're filled.
I'm gonna text TP right now. Just took off your yeah.
He's watching the show. He knows.
He's not.
Okay, so it is 10:30. We are taking live tweets. Put the hashtag LIZJNY. I'm going to pop in there real quick. Scott Somer, our international man of mystery. Liz and Jenny and Apple sell traditional April 235 put, buy traditional May 210 put. So he is doing a diagonal. Almost in reverse. Okay, let's take a look at this. Jenny, you keep up those strikes. You keep up the strikes, and I'm going to go, okay?
Okay, I will.
Okay, so I'm in Apple. Where should I go first?
Now, what Scott Summers says is sell the traditional April 235 put, traditional April, monthly April.
Okay, which one?
235 put.
235 put, okay, and then buy
the May monthly, traditional monthly, May 210 put. So
May's got 8 days and 210. Wow.
So it's kind of like the reverse of what we would think of a diagonal. So he's selling the 210, buying the he's selling the 235, buying the 210. It's kind of
why would we buy the 210? Take a look at this in the regular March. Are you saying
May?
Okay, that makes a lot more sense. Thank you. Because you're buying the farther out one. So it's kind of a reverse diagonal. So you're taking in a total of 563 credit. You're using $5,000 in buying power because that's the distance between them minus the credit you received. And the one you're selling is farther out in time.
Okay. Yeah, you got it.
So Scott Somer, very clear the concept. When you're doing this, you are... Wait, hold on. I'm buying this. No, I put it in wrong. He's buying the 210.
He's buying the 210.
You're only taking in 78 cents in credit. So it's almost as if you're bullish to neutral short term and bearish long term.
It's kind of like the calendar where he's just getting that May 210 at a discount.
Right. So you're bullish short term, and it was the 235. You're bullish short term, meaning you think Apple's going to stay above 235 in the short term, and then you're getting that 210 for a discount. You're paying 79 cents for it with additional risk.
It's like, and if we go down, basically this trade, he's taking in a credit. So if we don't go down, if the market doesn't continue to go down, he keeps the credit. But if the market continues to go down, but Apple doesn't fall through 235 by April expiration, he's got this May. Well, this is,
it's not bad. I like the thinking because, well, number one, I like the fact that you're taking in a credit for it. So if it doesn't come to fruition, no harm, no foul.
And if people are trying to build Vega, like if they think, what if the market continues to fall and vol starts to explode? Vega's greater further out in time. So he'd have this long May, which has 64 days versus his short April. where if they're trying to, get some units out in May, if we get a continuation of the downward market and vol keeps expanding, having those May options won't hurt.
And it's smart use of capital in the fact that instead of going out and just buying the May for $250, you're using the April premium against it to do something.
Right. Because if you just did the 210 calendar, just leave that May 210 and move your April, cancel it. If you try to move it, I thought it would flip flop. It's $1.47 instead of 80-cent credit.
Right. So that's just it's a smart use of capital. If you have it on the sidelines, you're putting up a little bit more risk in here, but you're not outlaying $150 if it doesn't come to fruition.
Now, where can you get it for no credit? Like if you move that 210 up, how high do you have to move it to have where you're not really paying a debit, but you're not getting a credit either?
Right. I think he hits
right there. So
it's a $5 difference. He was the 235. I mean, it might have been there when he sent it to us. You know what I mean?
Yeah. Right.
It's not bad. I don't mind it.
No.
I don't mind it at all.
I don't mind it at all, but it holds up the buying power for naked put.
But I do like the concept. Thank you very much, Scott. I will retweet this just so everybody.
Yeah, and refresh because we've got a lot of tweets coming in.
Okay. And then there's, just because I know Frank is the last one that came, he's always our first tweeter of the day, and we love Frank the Great. Here is Frank the Great from the YouTube chat with all the information that we could possibly need today. And I will retweet these as well. Okay.
And if anyone wants to send a tweet, you just have to include the hashtag LIZJNY. That's what we're looking at. Anything with the hashtag LIZJNY.
Okay. So, oh God, the Polish Warrior. I love to see these guys. Happy Red Shirt Thursday. What's a guy got to do to get one of these red daisies? All you got to do is come to meet us because we can next time we're in there, we can grab one from Tori.
Again, are they on Threadless? I'm not sure. I think we do have a Threadless store. These are in a box in the office, but there weren't any more. And Mikey, you're a nice, slim, trim man. But I know with all the bigger sizes, I think we got smalls or mediums or small sizes. Pretty sure they were out of any bigger sizes. Wasn't that? Am I correct in?
Mikey, I am modeling in extra small men's.
I thought Tori said that they were out of the bigger. We were asking for something, and she said, "Well, I don't have any bigger sizes."
I know. I was going to try to get one for my husband, and he wouldn't.
We couldn't.
He would not wedge himself into an extra small men's.
Oh, and the funniest thing is, I was trying things on, and I was holding up a medium, and Tori was like, "Maybe an extra large.
Maybe you need an extra large." And she was talking about something else, but
she was talking about for my dad. She was talking about for my dad, and I thought she was talking, or maybe she was talking about for that.
For the viewer, because you're somebody you want to.
And I thought she was talking about me. I was like, thanks, Tori.
I was laughing so hard in there with Tori.
But while we have Mikey here, Mikey, I know you still have puppies for sale. I'm sorry, I've reached out to all of my friends who might be interested in poodle puppies, and no one can take another dog.
I know, it's kind of hard.
But hopefully Mikey, fingers crossed, Mikey sells all of his cute little poodle.
They're adorable, right? Reach out to the Polish Warrior via Twitter if you're interested, because they are adorable.
If you want to get the smartest dog in the world, if someone wants to get the smartest dog in the world,
are poodles the smartest dogs in the world?
I think they're close to it.
I don't know. I mean, mine's not real smart, and he's not a poodle, so I'm not exactly sure.
Hey, Mikey's has the standard poodles, so I think they are. I'm going to search that.
Okay, smartest dog in the world. But Mikey's also saying, are you shorting the VXM in this market dump? Let's take a look at it. Shorting VXM. I know Mikey does this all the time. He VXM. So when you get the vol pop like this, he goes in and he sells. Let me hit the wrong one. Sells it. So it's a nice little way to say the vol's coming right back in. And I know Mikey does it when the vol hits a certain threshold. He'll go in and use because this is small. It's the mini volatility. So he'll go in and short this and scalp it for a couple $100. I think a couple $100. And he's only using 651. So I like this, Mikey. I really like your style with this. And I know you've been doing this for a little bit.
And yes, I am close to being correct. The second smartest dog breed in the world. The poodle.
What's number one?
Border Collie.
Oh.
Is
that Lassie? Is Lassie a Border Collie?
Maybe.
Yeah. I think Lassie's because it's like Timmy's stuck in a well, Lassie.
And then number 3 is German Shepherd, which that makes sense too.
Oh yeah, that does make sense.
Yeah.
Where do you think Will Ferrell ranks on that?
Hey, Will Ferrell was number 4 on the list.
Yes. Okay, so thank you very much, Mikey. I do appreciate that. He does a good job with this. I had to get to this. Mikey, you will appreciate this as well. $2. I want my $2 from Better Off Dead. Jenny and I did shake down the actual
Oh my gosh,
actor
his power is out. Look at this. His power's out.
Oh.
He's in the Pacific Northwest. I didn't know that. Blue Wackadoo, I didn't know you were in the Pacific Northwest, but big windstorm and the power is out, but we still trade. How is he trade? Well, I guess if his
computer's charged.
I hope I hope it lasts. I don't know. Hopefully your power's not out too long.
He's running on Elon Juice and T-Mo Cellular. I love it.
Oh my gosh.
But Jenny and I did, in fact, shake down the actor who starred in this movie, Better Off Dead.
He wanted to kill us because John Cusack, we saw him at a Cubs game, and first did we ask for a picture or autograph, or did we just say, I want my $2?
I think we yelled, I want my $2. Didn't find it amusing.
No. And then, should I post the picture on Twitter?
Did you have the picture?
Yeah.
Post it. Because then he did not want anything to do with us. But then we went up again because we do not take no for an answer. These 2 tornadoes, Jenny, here's the call back from earlier today. These 2 tornadoes do not take no for an answer. We found them at a club later and got a picture.
You know what? I don't know where the picture is of us with John Cusack.
I mean, it's kind of hard to find.
I just searched Wrigley Field and I got all of our pictures from in Wrigley Field.
So you have the older phone. On the newer phone, it's harder to search for pictures.
It is?
Mm-hmm.
Although John Cusack's not coming up.
I think it's on my phone. I'm sure I texted it to you, though.
Yeah, it's probably on your phone.
Yeah.
You're right.
But
you're right, because only you have the nerves of steel to be like, sorry to bother you. Again, we're going to take our picture with you. I would be too.
And he's like, no. I was like, we're not taking over an answer.
Yeah, we are. We're going to get a picture.
Yeah, we are. We just No. It gets better than this because he was sitting with somebody who must have been way more famous than him. Because then I handed my phone to the other famous guy and he's like, you want me to take the picture? I was like, yes.
Yeah, we had no idea who the other guy was, but he was shocked when we asked him to be the photographer.
He thought we were going to take a picture of him as well, but we're like, will you take it of us with John Cusack?
That was funny.
It was pretty funny. Okay, Blue Wackadoo, I love it. And I hope your power outage is profitable for you today with all those.
I hope so. What else does Mikey, you are a nice trim man. I'm
new prescription. That's funny. That is funny.
I've met him in person.
You are a nice trim man. That is like the weirdest description I've ever heard as well.
And this is the funniest thing. So I was out, I don't know if you remember this. I was out by Mikey's house. I said, I'm going to be in this town for a volleyball tournament because my son was in a volleyball tournament. And Mikey said, hey, that's where I live. Can I take you out to lunch? So he took me out to lunch. And it was, by like where I grew up, we had a place where.
Oh my God, I forgot about this story.
Yes. When I grew up, we had a place called the Ground Round that it was like the thing. They had peanuts on the table and you would eat the peanuts and throw the shells on the ground. That was what you did there. And
please tell me it was early enough where you didn't see any peanut shells. You thought you'd be the first.
And so then Mikey takes me to a restaurant where there's peanuts on the table and I start eating the peanuts and just throwing the shells on the ground.
His lovely wife had to be like, who is this nut job?
And then I was like, maybe I'm not supposed to do that. Maybe I'm not supposed to throw the shells on the ground.
That is hilarious. I forgot about that. No, Mikey is the best. We love our Polish warrior.
Yeah.
Okay, wait a minute. What did Scott Sommer say here? He's responding to us. Oh, here we go. This is good. Thank you. He put our hashtag on there. IT, Defense and Aerospace, ETF top holdings. Should we put these on our list?
Yeah.
Okay, you pull this up. I'm going to go to our list and read them to me, okay?
Okay, hang on. I got to get it. Let me get to that.
Because it's going to take me a second to get to
that was like replying to.
Yeah, you got it. You got to click on it. Click on that. He just put the hashtag LIZJNY.
Okay, I got it.
Okay. Give me
have
the
it.
list. I'm going to tell you if we have it or not.
All right. So ITA is an ETF. So put that.
We have it. We have
ITA.
We have ITA. Okay.
All right. GE.
Oh, don't have GE, but I'm going to put that in.
Well, make sure it's GE. So it's GE
Aerospace. GE Aerospace.
GE Aerospace. Because like if you get on a plane, the engines, like GE makes the engines.
And we all know the commercial GE. We bring good things to life.
But those are the light bulbs.
Yeah, those are the light bulbs. Okay, next.
And Rolls-Royce makes airplane engines too, don't they?
But they're not. All right. Are you veering from this list?
Yeah, I'm veering. All right. RTX, that's Raytheon.
We got RTX.
Boeing.
Got Boeing.
LMT, Lockheed Martin.
Got LMT.
NOC, Northrop Grumman.
NOC, got it.
HWM, what's that?
We don't have it. Let's type it in.
What is it?
HWM. Yeah. It is Homet Aerospace. Okay, I'm adding it. Okay.
Okay, then so these are the top 10 holdings in the ITA Defense and Aerospace. Okay, LHX.
Is it okay? LHX.
And what's that?
LHX. L3 Harris. This has been
L3 Harris.
L3 Harris. Yes. Oh, we had that one in there. We had that one in there. Okay.
Okay. GD. General Dynamics.
General Dynamics. We've got it.
TDG.
Can you say that again?
T as in Tom, D as in dog, G as in
TDG. George. We do not have that one, and that is trains. I can't say it, but I'm putting it in. Okay.
And AXON.
We don't have that one either. So
what is that? Exxon
Enterprise. Okay.
Yeah. All right.
Got it. Now look at this little list we're creating. It's kind of fun. Anytime we want to go see the defense stocks, we can just go right here.
I like it, Liz. I like it, and thank you, Scott, for that.
So let's have some fun in here because Scott sent it to us. I'm going to sort by IVR. Now, the lovely Fauzia's is top of the IVR list with this KTOS.
Okay.
Martin. So a lot of them have a decent IVR. I mean, I would argue the ones you don't want to touch are the ones we are Boeing and Palantir because it's 25 and 19 respectively when you look at all the other ones. But those are kind of, like I said, defense adjacent.
Now, what about, there's another one. What about Aero? We don't have Aero on this.
It's AIRO, right? Or
I think it's AERO.
No, I think it's AIRO. There you go.
Oh, yeah, Aero Group. And
that's got a 73 rank.
It's AIRO. I'm just checking.
That's got a 73 rank.
A defense stock. And that's not having any kind of crazy rally. Yes, Aero Group Holdings is considered a defense-focused aerospace company specializing in drones, avionics, training, and electric air mobility for military and commercial markets.
Wonderful. Excellent description. Thank you.
Thank you, AI. Thank you very much, AI. Let's look at selling puts. Puts in Aero are this is going to look similar to Fly, where it's a low price product.
Well, it does look similar to Fly, except this one is cash secured.
Kind of.
Almost. I mean, you're getting. It's giving you $1 in margin because.
No, 744 buying power effect 744. You're looking at the max loss. So max loss is 873. So
that's what I'm saying. That's what I'm saying. It's only giving you what $100 in buying power from max loss.
140. Yeah.
It's giving you $100 in buying power, so that's not necessarily margin.
It's not. It does not quite as great because in Fly we were selling the 19 puts for $600, and in Aero it's the.
I'm just gonna go back to it because we got it. Oh, and we're up $10. So the 19 put in Fly, right,
was $680.
Yeah,
$170. And then the 10 puts in Aero are 700 and some. To Liz's point, almost completely cash secured.
It's almost. There's slight margin relief. I will give you that. I'm sorry I stand corrected, but there's.
But at $10, at $10, I feel like Aero is a bargain. A bargain. Let's put in a long diagonal or something.
So if you want to do, there's nothing you can sell on the calls. That's part of the problem.
Yeah.
There's nothing you can really sell on the calls. You know what isn't a bad trade though? If I'm looking at the 36-day, Jenny, it's not a bad trade because it is a 250 wide. You're spending $87. So you're washing extrinsic value. You're spending $87 with a profit potential of 163, which is pretty good.
I mean,
but it's got a high rank. So I guess we could flip the cards over if I wanted to. If it's got a high rank, I can sell this for 173. It's hard though.
I mean, look at the chart. I don't hate Arrow here at the $10 mark. I really don't.
I don't hate it at the $10 mark. I don't mind selling premium in it. And I didn't mind the call spread here just because you're washing extrinsic value. I mean, you're getting close. You're getting something for it. And it's got a decent return on capital. But by that same breath, we might as well just do that.
Yeah.
173. I'm going to ship it. Oh, never mind. That's
what?
Closing only. That was a real fun exercise.
Okay. So here's what I will say about that closing only. Sometimes when markets are very wide, it's a default. Like if some markets are very wide, that's a default response where you can call Tasty and see because it's not necessarily always. Does it let you buy shares? Because I have Arrow positions.
I have Arrow shares too. In an ironic turn of events, I'm pretty sure I have options.
That's what I think. It's like, let's say today there's some option markets that are very wide here. You might get that notice, but then the markets might, if they're tighter another day, you might not get that.
I'm pretty sure I have options in Arrow.
I just looked at mine. I'm just long
because I remember like going through this process being like, this isn't giving me anything. I'm just going to buy options.
Oh, I know. I used this when I taught the high school class. I had all those kids selling puts in Arrow.
Yeah.
So it's not always, but if markets are very wide and you look at that 10 at the money call, that's 110 at 195 percentage wise of the price of the stock, that might look so wide that could trigger that.
That really could trigger that. That's true. That is a very wide market. It's almost $1 wide. So that's 10% of what the price of the stock is.
So Liz, we only have 5 minutes to go.
I mean, we got our fly in. Arrow, I'm not going to put in because it's closing.
No, not with it. Yeah, not with it.
5 shares in there. SPOOs are only down 70 right now. So we've had a wee bit of, oh, that's an IGV. Hold on. We've had a wee bit of a pull back from the lows. The lows today were the 66.84 and we're trading 67.07.
Not terrible. I think. And NASDAQ's down 320. What's the percentages? So NASDAQ down 1.3%. Yes, only a little over 1.
So RUT is up from its, when we started the show, we looked at it. It was down to almost 230. It's only down 170.
Yeah, 2.3. So RUT's a little bit of a
Let's take a look at the VIX because starting our show and ending our show, it could be different prices. The VIX is only up 7%. It was up as much as 10.
Yeah. Right, because I think it got it. What didn't it get as high as like 26.94, something like that?
Yeah, the bar looks a little higher.
Now 27.22. About even more.
I mean, when we were talking, SPOOs were down, 88.
Yeah.
When the high was.
But wait, isn't this interesting? If you look at ES 3 stars, NQ 2 stars, YM 0 stars.
I don't. You know what though? It's funny because I have traded ES. I've traded NQ. I've never traded YM.
Yeah, no, me neither. And do you know what the diamonds are? Just the diamonds are kind of like dead. If you go to the diamonds, those markets, I don't know that anyone really trades the diamonds anymore.
But don't you find it fascinating that it's the most heavily quoted in the Gen Pop?
They need to get on board with reality.
I find it fascinating, right? So when people start quoting how much the Dow is down, I know they're not a trader.
Exactly. If someone's like, "Did you see the Dow?" Yeah, you know that they don't trade.
Correct. It's pretty fascinating to me because it is very true, but it is the most commonly quoted, in my opinion, from other news sources. Don't you think?
Yes, for sure. Because that's just like old. Like that's how it used to be. But
yeah.
I mean, there's nothing wrong with talking about the Dow stocks because sometimes we'll see a change. We'll see a change and like tech stocks are going down and Dow stocks are going up. And we've seen that. Like we've seen that with like Caterpillar, McDonald's. And like you'll see that change sometimes. There's nothing wrong with talking about it. But when you're quoting the market, why not quote the SPY first where it has...
Do you think that has to do with... I'm just like I said, spitballing here. But do you think it has to do with the fact that it's the biggest, right? So when they look at this, when you're talking about something being down, so you can be like the Dow is down 542. That seems a little bit bigger. Do you know what I'm saying? Versus the SPOOs down 71. So they'll quote the SPOOs in percentage and the Dow in numbers.
Maybe. It sounds more exciting.
It sounds more exciting, right? So they can't say, SPOOs down 70 because that doesn't sound like a lot. It doesn't, right?
Right. But then Dow down 800.
Yeah, and then look at the percentages here; they're almost the same.
Mm-hmm.
it's pretty interesting. I don't know. That's just Random Thoughts by Liz Deerking.
And anything that
Well, we did. So Jenny, I know we're going to push stuff out afterwards. So I'm going to go to
you know what? I can. Yeah, I'll do it right.
And I'm going to go today, all symbols. So this is what we did today. So we bought 14 call and ether. That was on the market movers, and we could talk about that.
I'll push. We can. I'm going to push that to the follow page too. You could talk about that now. We've got 2 minutes.
So we today on one of our shows, we were trying to talk about how our sons each have a trading account, and one of the ways that we, as traders with 60 plus years experience, I'm just going to keep saying that because it makes Jenny mad.
He loves to say that.
With 60 plus years experience, there's a better way. So we used $250 to try to show our children how you can control $1,560 in notional value in ether by only using $250. It was just a short, small lesson in how options leverage works. So that was our ether trade. We closed Path, which was something we had on for a very long time, for almost 90%. We sold a put in Fly. We placed a earnings setup calendar in Boeing ×2, which is fun. And then we closed our SMH IGV. So it was a close, open day.
Okay, that sounds good. And this is just a little public service announcement. I saw, and you don't have to go to it, but I saw on Twitter someone posted like a Girl Scout cookie sale. I think you're gonna get in trouble. I'd pull that down because I think you're gonna get in trouble or blocked from Twitter. I think so. Okay. So just letting her know, because we love our viewers and we don't want to lose any viewers on Twitter. Just a little PSA. I don't want you to get blocked from Twitter.
I'm not going to lie to you. I have a problem with Girl Scout cookies.
That you eat them too much?
I can't stop. And then they're selling them all over. Every time I go anywhere, there's these cute little girls that are from our town. So I have to buy them. And then I want to just throw them all in the garbage or give them away because I can't stop eating. Like a sleeve is a single serving of Thin Mints.
What? Do you freeze your Thin Mints and eat them cold?
No, I'm trying to get rid of them, but I have frozen.
But when you eat them, do you freeze them and eat them? I like Thin Mints frozen.
Oh, I just put them in the fridge. It's the same thing. There's a little, just a smidge cold. It's good.
But what is your favorite Girl Scout cookie?
Samoas.
That might me too. I think everyone. I don't know anyone who would not say Samoas are their favorite Girl Scout cookie.
They are so good and they're so unhealthy.
I do like them. It is nice. Girl Scout season is nice because the girls are set up outside the grocery store every time you're going in and out.
Every time. And I'm not going to be like, I already have those. They're out there working so hard. So I always wind up buying them. Okay.
All right, everybody. That's it. We are out of time. Everyone have a wonderful Red Shirt Thursday.
And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tasty Nation, welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and we are live from the SIBO floor, SPX pit right behind us. And because we're here, the markets are red, down 70 points.
It's a simple correlation.
Yeah.
It's a simple correlation.
Literally every time we've been here for the last month, the markets have been selling off pretty decently. So I'd like to think that it is us.
It is, and by that, I mean, look, we know the markets have been selling off in general, but honestly, real talk, since we've been coming down here since November, Thursdays have been fairly volatile. Yeah. Most Thursdays, I for whatever different reason, we know there's a lot going on in general, but it seems as though heading into the weekend, people definitely get skittish, or the news just ratchets up a notch. I mean, it's been Sunday nights and it's been Thursdays. Yep. And of course today is well, I mean, look, oil is back over 90. Damn it. Oil was a buy at 77 on Monday, bro. Like, it was an absolute buy. We should have been buying it with two hands, and we didn't. God, it's wild times. Before we get into the stuff, I do got to say, I'm excited. I'm going to see a little Big Ten basketball today. Yeah. Because I know we're going to spend the next hour and change talking about oil and bonds and all these other things. But I'm going to
throw it out there.
I'm going to check out some Big Ten basketball. I was watching a little bit tonight. Stuff. Shout out to Glenn. Northwestern won last night. We'll see if they keep winning. I'm not sure.
Yeah.
But that was. I mean, they blew out Indiana. A lot of people are saying. Get ready for this. A lot of people are saying Indiana's still basketball. I mean, still a football school. They're not a basketball school anymore. How do you guys feel about that? I'm curious. I want to know.
Yeah, let us know in the YouTube chat. We're streaming live on the Tasty Live channel. But yeah, I think it's funny because Glenn was talking about how when IU won the football tournament, how all of a sudden, all these people in our office wearing the IU hats, wearing the IU shirts. Yeah. Wouldn't it be funny if Northwestern keeps going and all of a sudden Glenn wears purple every day? He's got his Northwestern stuff, all the gear he's got. That would be hilarious.
It would be. I mean, they basically knocked out Indiana's chances of getting in the tournament yesterday. I think if they had won that game and another, they might have been like a 15, 14 seed.
Yeah.
They're out now, probably. I don't think Northwestern even has a chance to get in. So they're just out here just crushing dreams, basically. But yeah, the Marquette played last night in the Garden. That game looked super interesting. It was a close one. That kid who's a freshman, that kid's good, man. I don't think they're going to keep him. He's probably gone. But yeah, it's about to be the most wonderful time of the year real soon. Soon.
Super fun. Can't wait for it. Tons of volatility. I'm sure there'll be brackets flying around. But yeah.
And yeah, I think next week, I personally think, next week is March expiration. I personally think it might be a crazy one next week.
Yeah.
As I say that, they've gotten quiet in here, which means we probably got another big move coming at some point. Just about every time that happens, it's going to be another big move coming at some point.
Yeah, I think you nailed it with the implied volatility, the moves today. Crude oil, seeing a big rip higher. Yesterday, I actually put out a YouTube video. You can see it on the tastylive YouTube channel, but I added a bullish position in XOP.
Saw that, yeah.
Because of the new project that's being launched in Texas to basically just continue to expand the exploration and get that oil from the U.S. soil.
So what'd you do? You sold a put?
I did a long call diagonal spread.
Long call diagonal.
Yep. So I went to June, bought the 165 strike. May was a similar cost, so I was like, why would I pay for May when I can go to June, pay $100 more? Very similar implied volatility in terms of the expected move because you get an IV discount in June relative to May. So I went out to June, and then I sold the 180 strike against it. And this was into XOP's rally yesterday. We're seeing it reach a higher point today. And yeah, I've got a downside USO diagonal spread because we were playing for the washout. It happened a little bit, not crazy, but like this is also insane. This USO put diagonal spread that I have on as well, this is basically unchanged, even though USO is up 8 points today, up at 116.
Yeah.
And that just speaks to the heightened implied volatility of USO. And even the 90 strike is well within the implied range. This range is 43 points as of right now with a 90% implied volatility, which is crazy.
So yeah, so many different things there. So like with that, like I always, and for those who haven't really traded in these environments or seen a product do this, right now, it's one of those situations where the puts are going to stay bid to the downside, and the skew is higher on the upside, believe it or not. But those puts just are going to stay bid. So like you can live in that 90 put for a while, like it's just what it is. And that's and the reason why he did it so wise because again, those puts are going to stay bid, but that 75 to the downside, at some point, when you get closer to expiration, that thing will come in. So that's probably the best idea to do a diagonal right now for sure, especially doing it so far apart. I think that's a great idea. The other thing about the XOP, I like the fact that you did a bullish position. I think obviously there's that project, but it's also moving right now because it's oil, right? And look, people are always asking us about hedges. Puts are expensive to buy right now, unless you think things are going to drop just way much lower, then expense doesn't matter. But you can also do other things in this environment because of the way the relationships are breaking down. Obviously, we move lower every time oil moves higher. You can find some way to get long oil, not too crazy long, because again, de-escalation happens or things like Monday happen and the oil price is going to tank for sure. We just don't know when that's going to happen. I mean, that's really what it boils down to. We don't know when this is going to end. This is not ending Friday. It's not ending next week, I don't think. I mean, at least the way it looks right now. So I think if you get long things, like if you get long the market, you get long SPYs, you get long, whatever it is, equities, you gotta find, if you want to find ways to offset, I think the idea of doing a longer trade in oil. One thing I just did is in ZS. I bought in soybeans. So the whole situation right now with the Strait of Hormuz and how much is being closed off. Obviously, for those who didn't know, there's a lot of stuff that goes through that little ass strait every single day. We talked about the amount of oil that goes through there, but then there's also things like fertilizer. 1/3 of the world's fertilizer goes through there. So ags right now are at bid. You look at soybeans, you look at corn, you look at wheat, all of them are bid. I think these are still kind of interesting, dare I say cheap. Just the vol-wise, you can actually, I just did a call spread in ZS. So I did the 1300, 1350 call spread in April. Did it 43 days. I just think right now, I'm trying to time trades that are either the end of March or April. I think in that range. If I sell a put spread, it might be May in equities. just cause. I mean, kudos to anybody who's playing 0 DTE right now. Like, it's going to be really hard. So yeah, I did this thing. It's like $400. We'll see if things get crazier. And again, I've played AGs before in the past. Look at names like CF. Look at MOS. These are fertilizer names. These are getting bid right now because of the amount of fertilizer that goes through that strait. So it's a crazy time. Crazy time.
Yeah.
But I like it because there's so many things moving.
Yeah, and to your point with soybeans and a lot of these other products, when you look at a chart like this thing has rallied from February. It's gone from 1,000 to 1,200. That's a 20% rip to the upside. This is not a 20% rip to the upside implied volatility. Like no. This is bottom of the barrel implied volatility. Even with an IV rank of 40, 26% IV is nothing. Like, we just saw a 200-point rally in soybeans futures. The next 200-point rally is priced into, these further dated cycles. Like, this cycle, 43 days out, is only a 75-point move. We just saw a 200-point move in 30 days. Not even. So that's where, especially for a debit trade, that's where a nice opportunity lies, regardless of whether you're bullish or bearish.
Take a look at a 5-year chart, and you'll see why I did it.
Yeah.
And again, I know, look, I'm paying probably like 6 or 7 vol points over what it normally is, but I'm also just risking $400.
Yeah.
So that's the other thing about it. Like, so yeah, I mean, like, there's room if things get really crazy. I feel pretty decent about 1,300 to 1,400 range.
Yeah.
If things just keep getting crazy. If this is closed for longer, if this is held closed for longer, or there's just very few ships passing through, I think, that's when you start to see sustained 110, 120 oil, sustained situations with grains right now. So it's just a play, but it's only risking 400. I got plenty of longs, equity longs, man. Like, I got plenty of equity longs. I got, we talked about how many iron condors we got in SPX. So I'm really rooting for those. I don't mind risking this $400 and a fertilizer trade that honestly I don't think might happen, but if it does, got a little something on.
Yeah, and to the same point, that's why I went to XOP yesterday for the upside trade. You look at a chart like this, from the beginning of 2026, we went from 120 to 170. That's a 50-point rally. We'll call it 30%. And you look at implied volatility, and we're still in the 40% range. Like, that's just too low.
Yeah.
Especially, like, look at this. Where's the next 50-point rally priced in XOP? We just got a 50-point rally this year. It's March. The next 50-point range is priced in 600 days away. So realized volatility is far exceeding implied volatility. Therefore, I'm not going to sell undefined risk premium in this kind of environment. You still can if you want to,
yeah.
But there's just efficient ways to get long delta positions with a short premium component that takes advantage of the heightened implied volatility in the near term, and then you inventory longer period, lower implied volatility options there. So XOP, I like this trade a lot. It's a 15-point wide spread that I bought for $9. So that's another thing. It's like you can pay 50% or around 50% of the width and have a ton of upside profit potential on a limited monetary risk if this thing really continues to rip. And so far today, that is what is happening. But yeah, lots of other things moving around. You've got Adobe earnings after the close today. I have a 290 call calendar spread here. And the call calendar spread, the short option has actually come in quite a bit. 1 day to go, we've collected half the premium. I'm still going to leave it on just because $275 for tomorrow. Even if we get a 20-point rally, it's still going to be worthless. So looking at an upside move in Adobe, it's trading for a small winner right now, but I think Adobe and some of these software names could rebound if we get a nice earnings report. But yeah, you can see this go down as well, but there's still plenty of hedgeability here. We can roll this 290 call from the weekly cycle to a monthly cycle or a couple weeks out, reduce basis that way, or just get rid of the short call and just lean long with the long call. But
some of them were up earlier. I mean,
yeah.
I just saw, I didn't realize they turned though, but Intuit was positive earlier when I looked. Palantir was positive. It's been lumped in with all this, the software stuff, and it was up earlier. It's still up, but yeah, some of them were up earlier. Microsoft was slightly up. Now they've all kind of turned lower. That's not good, because then when those turn lower, and then, I think Walmart was positive. Is it still positive? Yeah, it's still positive. That's a good thing. You get all of a sudden, you get everything red. I mean, that's when we're down like 100 and change.
Yeah, and we're close.
Yeah, we are close. We're hanging by a thread right now, dude. Like, we're hanging by a thread. We've been clinging to this 6,600 for a minute.
Yeah, and we talked yesterday. We had Glenn on, #1 Northwestern fan, and he was telling us about how the Forex markets are reacting to the potential stagflation, what we could do in terms of tradability for that. But yeah, stagflation, not great, and all these things happening in the world right now, not great for equity markets as well. So would not be surprised at all if we got a pretty big continuation here to the downside, given all that's happening right now.
Everything is live, man. I mean, equities, we talked about soft grains. Dollar right now, dollar's 99.69. It's not 100 yet, but it is right there. I mean, this is basically the high from December in the dollar, and you see the Aussie dollar getting smoked today. It's still above 70 cents though. That's one of the ones that I got short into the move higher. British pound down almost 0.5%. Mexican dollar down almost 1%. Yeah, I mean it's just dollar's back.
Yeah.
The dollar is back.
Yeah, big rally here in the U.S. dollar in a lot of these pairs, but would love to get out of this dollar franc position. I've got a bunch of positions on, put some new ones on yesterday, kind of chopping around here, but yeah, dollar strength is going to be good for this TCFX portfolio. We'll see if it continues here. Have you done anything today?
I did. I've done 2 things.
Yeah.
2 things. So I sold an iron condor in ZB. Speaking of which, there's a 30-year bond auction coming up right as we end the show. I don't imagine that's going to be good. There's no way it can be good. And what that means is that there's going to, yields are higher. Anytime yields are higher, the bond auction is not going to be good. Nobody wants to buy bonds. So, except for me, maybe. I might want to buy ZN. I think maybe if this auction ends up pushing the 10-year down lower, I'll think about it. I'll think about a call spread in ZN. I've said a lot, like ZB, ZN, I think when they make these big moves, I think it's interesting to take the other side. But right now, I just don't know. Why are bonds dropping? Because inflation expectations are up, and that's just not good for our economy. So I don't know. But vol is elevated now, at least. And so I decided to sell an iron condor, essentially up against the areas where we've seen bonds for pretty much most of the year. So whether it's down, it hasn't gone below 112 too often, and we haven't seen it sustained above 117. So just did an iron condor there, and another way to collect something. Could do the same thing in ZN. ZN's elevated right now. I think that one's like 40-something IVR, but that one's moving around way more, obviously, because the 10-year just controls a lot of different things that we pay attention to in life, mortgage rates, etc., which, again, we're never political, but you just pay attention to stuff. 10-year yield controls mortgage rates, and inflation was down until oil started going up. So there's been a lot of things undone here just in the past month. And obviously the administration doesn't want it. Obviously they're doing what they feel is necessary, but this is the unraveling right now. This is why the market doesn't like it. Yields are going up, and obviously oil's going up, inflation's higher, things are higher at the pump. It's tough times.
Yeah. It's been quite the reversal after the spike, which is always ominous for products that are supposed to be more, stable, for lack of better words.
Look how much the 10 years moved around. What is it, 4.2 and change now?
Yeah.
4.2 and a half, bro. Oh my God.
Crazy.
We ain't cutting rates. We can't cut rates.
No.
We can't
hands
cut
are
rates.
Tied.
Yeah, hands are tied.
And you're seeing that in the FedWatch tool. We're seeing probabilities continue to rise that we get no cut or maybe one cut this year. Like the first cut's priced out in September, I believe now, which is a long ways away. And that can change, but everything that's happening right now is not helping the probability of a rate cut. So we will see.
Yeah.
But yeah, lots of movement in this portfolio. Seeing some green today, which is nice. Costco up 10 points. But to your point, we pulled up Walmart earlier, up 1%. Costco up 1%. So seeing a bid in some of those inflation fear products, which, you know, if you think this continues, maybe that's the trade.
That's the play to get along some of those. Well, I'm still long Costco. I mean, they got that calendar.
Yeah, we got
Walmart.
the calendar. It's looking
Walmart.
okay.
I've wanted to get Walmart. I can't find a way to do it. I don't know.
You can't bring yourself to do it, or you can't find a strategy?
I can. I just can't find a strategy that I like to do it. You know? Like, I don't know.
Yeah, I mean, it's another one that's seen a big rally here, up in just this year alone, up 25 points, 20 points, and that's with the sell-off from the highs of like 134-ish, 135. So, yeah, Walmart, interesting, and another one that has really low implied volatility relative to the realized move. So, Walmart, definitely a candidate for diagonal spreads, even longer-term diagonal spreads. Go to May, go to June. If you wanted to play it to the upside, let's say it continues, the 125 strike in June, trading for $8, pretty cheap.
Diag?
Yeah, in May, $6. So you're paying a little bit more to get to June here, but you could go June, May, 125, 135 for $6. Like, these are the cheap diagonal spreads we like to put on if we have a directional assumption with a longer time horizon.
Yeah.
And you can usually set those up. If you're selling a longer term option and buying an even longer term option, you have that set up where you're paying about half the width of the spread, somewhere around there. But yeah, Adobe after the close today, earnings, going to be interesting. I wrote an earnings preview on tastylive.com, so if you click on the News and Insights tab at the top, you can read that. But yeah, it's going to be interesting. I mean, the weakness in the market does not help a product like Adobe. I think it caps the upside. Even if they have an amazing earnings report with tons of good numbers and good forecasts, I think the fact that the market is down pretty heavily today and volatility is popping, you just don't have that super upside possibility. I think there's a cap there. If we were rallying and volatility was collapsing and they posted a good number, I think that's where you get your ceiling potential. So I went with a calendar spread here, 290 strike, and just small debit, $600, collected $500 against $1,000 in the cost of the long option, so plenty of cost basis reduction there. And if we sell off or chop around, I can roll to the 8-day cycle, I can roll to the 15-day cycle. I'll choose between one of those if there's premium there to sell.
Yeah.
If not, ideally we get a rally. Even if it's a 5 or 10 point rally, we'll be good with this trade because we're still getting a ton of premium collapsing in this one day relative to April. But another one where we've had plenty of realized volatility and this premium isn't that high. Even though IV rank is high, that's largely due to this inflation in the near-term cycle. But 45%, 44% isn't that high for the current environment we're in.
No, not at all, actually. I did a similar thing. I just used March 13 and March 20.
Nice.
And I actually did 300. I did it the other day when stock was trading like 275 and change. So
yeah.
Yeah,
another small way to get involved, dollar-ish. And this one will move very quickly. If we look at the theoretical P&L here, and we push this to tomorrow, and then again, you got to crush this IV. If we bring this down to like 55%, 50%, still plenty of profit potential here. If you get that rally anywhere above 275, 280, you'll be looking good. But yeah, markets are moving. ETH just ticked green. Interesting.
Oh wow! Well, we got a little rally here.
Biggest
we got
rally
a rally
of the day.
We got a rally.
But it kind of goes with the same narrative that we've had this whole year. Like all of these big sell-offs are bid up pretty quickly. But if you look at the trend, it's certainly lower.
Yeah.
So it's only, I think we'll continue to see this volatility. SPX, implied volatility, tells the story. But yeah, 32 points through the rest of the day, 74 points through tomorrow. We do have a number, what is it, PCE tomorrow morning?
We have PCE tomorrow morning, yeah. The Fed's preferred inflation number.
Yeah. After
no
they
way it could be
copy-pasted
good, right?
the CPI.
Yeah.
Same exact number as the estimate, which is very rare. But yeah, 72 point implied move through tomorrow. Not out of the woods just yet, and not even close.
Friday the 13th tomorrow too.
Ooh, very ominous indeed.
We got a rally going here though.
Crazy.
I want to fade all rallies, but I don't want to do it at 67.20 20 something. I want to do it at 6,800.
Yeah.
I'm telling you right now, we get to 6,800, I'm fading that. That's an area to fade. And I think you got up to 50 points, which is a lot. But that's the way I'm playing it until, seen otherwise. I mean, you just pulled up, let's see this chart you just pulled up. We were talking so much about how the range was 6,800 to 7,000 for a long time, and it was. We've obviously broken lower through that. Now it seems to be, I don't know, 6,800 to 6,850 is like resistance, and the low is like 6,650. Somewhere around there to 6,700. Obviously, you've seen we struggle with 6,700 all day, so yeah, it's changed a little bit.
Yeah, and especially I think it's interesting that this day where we sold off and then we rallied and ripped higher, we've gone straight back through that channel, that liquidation channel here. So yeah, I mean, and even into this rally, you look at vol futures, big increase in the H contract, the J picking up some steam. We've got a point of backwardation again between the H and the J. We've got slight backwardation between the J and the K and the M, and then we kind of flatten out. But still, the fact that all these VIX futures are at 23 and change says something about this environment. And looking at the VIX, like we've had a smaller intraday range than you might imagine, but still picking up a bid here. And this is going to continue as long as we stay at 25. You should expect to see 100-point rips or dips in the E-minis at the very least. Some of these other products, SVXY, nice discount from the highs. If you're looking to inventory some long delta here in SVXY, this is one of the inverse products where when the VIX pops and we go into backwardation, this thing just tanks. But eventually, once it's done tanking and we get back to contango and the teens and volatility futures, this will grind higher, as you see here. So
I got to keep this in my mind if VIX gets to 30.
Yeah,
I think, right?
Yeah. Anywhere in the mid to low 40s, I think this is a nice buy.
Yeah.
And the nice thing about this, like you can trade the options. They're not super liquid, but this is just like a stock purchase for me. Like you can buy 20 shares, 30 shares, 100 shares, whatever, and it's a high probability trade because you know that eventually volatility will reverse. As long as you can withstand the variance of SVXY in the near term, you'll get higher prices if and when volatility collapses and goes to contango and end.
Yeah, no, I like that play. Yeah, man, it's again, oil is just still completely controlling this market. It's obviously affected a lot of different things, whether it's airlines, whether it's cruises. This is just the environment we're in.
Yeah. Normally we have slides for you for a couple of SPX trade ideas, but I figured this time why don't we do a little differently and play some stuff live. Were you filled on that butterfly you were looking at?
I don't think I was, no, because we keep bouncing a little bit. I'm being stubborn. Because I feel like, and I'm keeping it out there. So I was looking at the 6850, 6900, 6950 for the end of March. Butterfly, it's 4.25 right there right now. I'm leaving it out for 4. The reason why is because I know for a fact, and this may happen while I'm at the game today. I feel like that's how it's going to happen. When I get filled, that means the market is lower, for sure.
Yeah.
Usually, these butterflies, right? Like as soon as the price is 4.25 right now, it's not budging off of that. But as soon as I get filled at 4, it's going to immediately be 390, and that means the market is going to be down like 110 or something. So it's a way for me to just know, okay, things have changed, right? I actually kind of like when that happens, even though I know I'll be losing money because I am mostly long. But it means like there's a flush, something has just happened. Yeah. So yeah, I'm leaving it out there at 4.
Yeah, I think that makes a lot of sense. And these markets are moving quickly. We were just down in the E-minis only 58 points. Now we're down 72. So these things are flying around. I would not be surprised if you got filled into another 20-point move lower. But yeah, I have plenty of positions here in SPX as well. I was looking at I've got this 7-day butterfly, the 64, 65, 6600, and I put this on for like $6. It's trading for $8.30 now. However, if you look at the long option still out of the money, the short option is right at the expected move for 7 days. I want to keep this on just because this does have some more profit potential to the downside. And instead of closing this and booking a small win, I think another way to approach it is to throw on an upside butterfly, like Jamal was looking at. You could go to the 7-day. I do have some short put spreads here in the 7-day, which are interesting because they're going to be falling off soon. So I could wrap a butterfly around a short put spread that's in the money, like the 6850, 6800, 6900, something like that. They are pretty expensive though.
Yeah.
So I think that's the only caveat. But the 6800, 6850, 6900, trading for about 550, not too bad. But if you try and go like 100 points wide, now you're dealing with a $1,300, $1,400, $1,500 butterfly, which isn't necessarily something I want to have for 7 days. But I think this is interesting because even if you get a rally inside the expected move here, short put spread moves out of the money, that's good. But the butterfly will benefit. And even if you don't, this is a 10-point wide put spread that's currently trading for 675. So if I bought that butterfly and we ripped higher and we expired at like 6,900 and I realized max loss on the butterfly, the max loss on the butterfly is offset by this entire put spread's value.
Yeah.
So that's the kind of thing where if you have existing risk that's taking heat, if you throw on a butterfly that would benefit from some upside movement, you can offset the entire loss on this trade if you get any kind of move in this range.
Yep.
So definitely overlaps with the 7-day, but you could do a similar thing if you go to March 31st, end of March. Same story here, like the 6,800, 6,850, 6,900, trading for 370. So cheaper butterfly, but you shouldn't expect to get a ton of value out of this thing until you get closer to expiration. As we've shown with narrow butterflies and timed expiration, you got a 300-point implied range here, and this is a 50-point butterfly. So just not a lot of movement or opportunity to sell this for a big value unless you get closer to expiration.
And if you guys notice, like on purpose, we're putting these around that 6,800, 6,850 level, right? Yeah. And we're keeping it, not 0 DTE, but we're keeping it like March expiration. We're keeping it at the end of March for a reason. I don't really think you can go out to April or May or something like this because there's no telling what that range is going to be by then. I mean, we're not even 100% positive it's going to be similar range in these two cycles, but there's a higher than normal probability that it could be. So I just don't know if 6,800, 6,850 even holds in April or May. I mean, that's just way too far out. So I think these are two really good cycles to put them in.
Yeah, absolutely. I'm gonna go with the same idea with Jamal. I put this in for $5 flat. It's trading for like 515, 520. But again, if we get a 10, 15-point sell-off from here, we'll probably both get filled on these butterflies. And we'll get a better price than if we just enter it right now and force it in. But yeah, wrapped around the risk in my short put spread. If we get any kind of rally above 6,800, it'll be good for that butterfly for sure. And I can eliminate some of this put spread risk that exists right now. And I have this at the money put spread at 6,700, 6,690 that is currently ticking in the money and out of the money. But that's another one where I'm just going to leave this on. And again, I've got another butterfly that already exists here. So we're kind of in this interesting sweet spot. If we look at the analysis of just the options expiring in 7 days and we get rid of all this other stuff, what you'll see is with the current position and my existing positions, where we're at right now, we've got a couple put spreads. I've got an existing butterfly here, and then if I get this butterfly on, a lot of this put spread risk will just be eliminated with some slight moves in the money or out of the money to the upside or downside. We're kind of wrapping the risk around these butterflies. So we'll see.
Is it crazy to think that I should put this thing on in March 30th expiration to the upside? Because Mondays seem to be a day where we go up. Thursdays seem to be a day where we go down.
Hey.
I don't know, man.
Yeah.
Like, there's something to this whole days of the week thing. And I know we've done studies on that kind of thing. But right now, and again, it varies depending on the time period we're in, but right now it feels like we go down big on Sunday night, we end up positive on Mondays, by Thursday we're kind of down again.
Yeah.
Am I wrong on that or what?
No, I mean every Thursday we've been on the show, it's been down 80 points or so, which is kind of crazy. If we look at today, down 80 points. If we look at the 5th, 100-point range, we were down big that day. You look at the 26th, down big that day. What is this? The 19th was the day where we actually had a chop range and we weren't doing too much. But yeah, I mean, every time we've been on this show, we've had huge sell-offs. So
let me just clear up a little discrepancy in the chat here. We are paying attention to the chat. This is not fake. This is real. And you can't just broadcast from any floor. You got to have special credentials.
True.
The background is definitely real. The guy says the background's not real. This is real, man. This is real.
Yeah.
This
person just walked
not
by
fake.
us. Pro real.
It's not fake. Watch that. Excuse me. Come here real quick. Could you just shake my hand? The guy thinks I'm faking it. There you go. There you go. There you go, guys.
There you go.
It's not fake.
Yeah. Real stuff.
Real business.
Unless that's some elevated AI. If that's
really. No, that's just real background, real floor.
Yeah. But yeah, speaking of the YouTube chat, let's pop over the YouTube chat, see what the people have for us. If you want to join us on the Tasty Live YouTube channel, we're streaming live there. Just head over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat, and we'll get to them right now.
Let's work backwards. Crab trade idea in Boeing. May, April. 220, 230. And 230 two times. Okay, so yeah, 230 two times, and then long I think they mean long the 240 in April. My bad. Long the 240 in May. Sorry, long the 240 in May. You got it. 220.
220.
Yes. No, you got it right.
220, 234.
I'm screwing it all up. You got it right. You have it right.
$5, 10 points wide, cookie cutter setup in terms of like. This is what I would expect to see. If I have a 10-point wide crab trade, long option pushed out the 60-day, short option components in the defining risk long option 30 days out, you're paying about half the width. So yeah, I think this is totally fine. If we look at the expiration here, you're selling the options right before earnings, which I actually like a lot. You're inventorying the delta in the earnings cycle, which will hold on to extrinsic value until the earnings announcement. So the nice thing about this is you could literally, and we can show by looking at the value of these options. So the value of the short options at 230, trading for 250. The value of the short options trading 1 week later, $4 almost. So the nice thing about this trade is, let's say Boeing chops around, you don't get the profitability you want, you don't get the rally. You can buy back your 230 shorts and get rid of your 240 long and just roll it out 1 week, and then redeploy that same sort of trade, and you could eventually end up with a 10-point wide crab trade for like $2, $3, something like that.
I like it.
Yeah, especially into the sell-off today. I like this a lot. I'll throw this in for $5. See if we get
immediate.
Filled at $4.95.
Oh shit! Well,
wow.
I'm jumping in. Hold on, I'm jumping on that too.
They really wanted me to get in there. Wow. Okay, yeah, we're in. But yeah. Plan for this trade?
Boeing has on the 6th made a big move. I'm just trying to see how much they have been bid with the other what am I thinking of? That space. What is that called? Aerospace defense names during these sort of flare-ups every now and again, and it looks like they have been. I would think these names would be up today. I know there's some specific news probably to Boeing today, but yeah, I like that trade. I'm gonna do that.
Yeah, so we're in, and again, if we don't get the rally, we can just roll these short option components from the 17th to the 24th, pick up a lot more premium, and go from there. And even if we do get the rally, we could still do the same thing, because if we end up around the expiration of this, where there's going to be very little premium, we can roll 1 week out and get all that implied volatility premium for earnings. So I like the setup.
Somebody asked about why not just sell puts in SVXY?
You could. Totally. There's not too much premium to be had, but yeah, if you're trying to get 100 shares of stock, then yeah, you could sell a put into the sell-off here, sell the 43, 44, 45, somewhere around there, and pick up some premium. If you're wrong, you keep that money. If you're wrong in the sense of SVXY not dropping, if SVXY rallies, you keep that dollar. And yeah, it's a way to get a much lower cost basis. Only problem is, if you look at the buying power, it is cash secured, because this thing can really tank. So you have to be willing to take the 100 risk 100 share risk here if you sell this put. So that's the only caveat is you're putting up the same capital as if you own the shares. So that's it.
Just someone calling out Dow and LYB, these chemical names. I'm sure that's something related to the Strait as well. I'm sure it has something to do with, products that are being transported. I mean, anything that's doing something like this, it's telling you a story, and I'm pretty sure that's part of the story. So yeah, good call out. Let's see. I have on a wide Micron Iron Condor in March. Oh, geez, doesn't sound good. 300, 330, 450, 480.
All right. 300.
330.
Okay. Yeah.
And they're considering rolling to April. Same put strikes, but $20 higher on the call strikes, 470, 500. So they're trying to figure out what they want to do here. Holding minimum loss, taking in more credit, expecting vol crush after earnings, but reduce risk. Thoughts? I mean, Oracle had a huge move the other day.
Yeah, I mean, right now you have a lot of premium in your call spread relative to your put spread. This current Iron Condor with 8 days to go has about $1.50 in put premium and $5 in call premium. So all your premiums coming from the call side. If you were to move this to April, 330 short and 470, is that what they said? 470 or 480?
470 to 500, yeah, for their call spread. So moving up a little higher, up and out.
Yeah, I mean, I don't mind it. You're picking up $4 more. So if you buy back that current one and you sell this one, you're picking up $4 net. So I really don't mind it. I mean, the only thing I would say is because you're rolling to a longer term cycle, you're not going to get as big of a vol crush. It's trading at 79% in April, and all these back months are trading for a similar value. So you're not going to get too much of a vol crush in April. You will get a big vol crush in March, but if you get your spread that moves in the money in March, you don't have much time for that thing to reverse. So the conservative move would be to do something like this, roll it to April, but you're not going to make as much on a neutral earnings move in April, of course, as you would in March. So that's the only thing. You're trading your offensive profit potential from earnings to defensive, conservative time value. So kind of a coin flip for me because this is still out of the money. You've got 50 points of wiggle room to the upside, which is actually at the expected move, and then the downside, you're out of the money. So you'd actually be hoping for a continuation to the downside if you're saying in the the March cycle. If you roll to April, you're basically neutralizing what you want to happen.
Wells Fargo. Somebody's looking at a May-April diagonal, long 75 and short the 82.5.
Yeah.
That's a good one.
Another cookie cutter setup.
There you go.
Let's see. This one's interesting because we've got earnings. We've got earnings in the April 17th cycle, but we do not have earnings in the April 10th cycle, and the option is trading for 30-40 cents less. So this one I might consider shifting to the 29-day.
Yeah.
Just because, like, right now you're selling this premium that's not going to really go away because it's in the earnings cycle, where you will get all of this premium if you sell the 82 in the 29-day, because you'll get the full decay in the 29-day, and then you can roll into the earnings cycle and pick up more premium, especially if Wells Fargo stays here or rallies a little bit. So I kind of like this, where you're selling just before the earnings announcement with the intention to roll into it, paying a little bit more. But your current setup, I don't mind either. I mean, it's a 7.5 point wide diagonal that you're paying $3.80 for, or $4 for. So you can't fault either one. They'll both be profitable if Wells Fargo rallies. It's just a matter of kind of finessing that short premium component if you sell the 29-day and then roll into the 36-day later.
Corty, man, I hope we answered this. Was asking about how you play the bullish and bearish butterflies, how you select strikes, expirations, depends on volatility. I mean, we just did a real deep dive on that. I hope you kind of caught it. We really discussed that one a little bit ago, so without even realizing you asked the question, but hopefully we got that one. What do you guys think about NTR selling the... wait, what do you want to do? Oh, they want to sell the 75 put and sell the 1x2 90-95 call ratio. So I'm assuming buying 90, selling 295s. This is a, I really didn't realize, but I guess it's a fertilizer play as well.
Okay.
I mean, personally, I want to be risk defined. I don't know how much I want to.
Yeah.
That's just me.
Yeah, so to Jamal's point, like this is up 7% today. Why not?
Markets suck too.
Yeah, markets aren't great. You could do something like this though, like to define the upside risk if this thing really rips. You could buy the 105 or you could buy the 100 and have no risk to the upside. So you give up some of your premium, but you're basically selling a put to finance the cost of a symmetrical butterfly here, where you're keeping $100 regardless of what happens, but you have this upside kicker with no upside risk if this thing really rips higher. So I kind of like that a little bit more. And buying power, $700. If you just have the call ratio on, a little more buying power, and obviously unlimited max loss to the upside. So yeah, I think another thing to consider is if you look at the expiration graph, it looks great to the upside. But if you look at the Theo graph, if you get this rally too soon, you're going to see losses on the upside because you've got an extra short call here that's going to take on risk. So I like the idea of just doing the butterfly to protect your upside risk, eliminate your upside risk, and still get into a trade where in the near term you will profit if you get a rally between your strikes if you have a symmetrical butterfly, because that will appreciate in value as your short put loses value.
I'm not sure I fully understand this one. SPY calendar, March, April. Let's say March buy 670, put April for $7 credit. So you're really selling April. Is that what you're saying? You want to get a credit on this thing?
Yeah.
For the 670 calendar?
Yeah, I don't like
Good
those
luck
trades.
with that. I never like selling calendars. They're looking at a put calendar. Yeah, I don't like selling calendars personally.
Yeah. I mean,
$7 credit.
yes, like I get it, totally get it. I mean, you have your short put that's protected by your long put. And the reason why you have profit potential to the upside and downside is because you're picking up a credit. You have no intrinsic value risk here as long as this long put exists. But what if the market rallies, your put that's 8 days away, that's trading for half the value of your long or your short put here goes away? Now all of a sudden you've got all this downside risk. So it's only a temporary hedge on the short put play. I'd rather do a defined risk debit calendar where you're long the longer term, short the shorter term, and you're also going to put up way less buying power. So like if you were buying April and selling March, you are putting up $8, but you have this neutral range of profitability. It's the exact opposite, obviously, but you're putting up $800 in buying power instead of $7,000 to make a couple $100 if you're right. So we always prefer these over the inverse calendar spread, but that's just us.
Yeah, some people were talking about software names. They've been buying them recently. I mean, they've been bid. They've been flipping back and forth here a little bit today. Honestly, I think if they all really flip and they go red, we're in trouble. But Marvell put calendar, 85 strike, 15-day versus 36-day. 85 strike. Yeah, 15-day versus 36-day. Marvell.
Yeah, I like this. Pretty cheap. We are evaluating it on Friday. But as you can see, as we get closer to the 27th, let's just go to March 20th, the expiration, you can make $100 on this thing. It's a cheap way to get some downside neutral premium here. But yeah, collecting half the value of the short of the long option cost with the sale of the short option. So paying $4 and change, collecting $2 and change for a nice even split of days to expiration. So yeah, I think it's an efficient way to get some exposure here to the downside in Marvell for sure.
David, oil has not dipped enough for me. At this point, I think, damn, 77 was a buy the other day. Golly. I mean, now, I don't know. I got to be, if it dips to 85 and I'm winning on my long positions, then maybe I'll buy it, knowing that I'm fully going to lose on it. But right now, not buying it, not doing anything. USO, CL, Iron Condors have been the way to go. Somebody's asking, what do you think your account size needs to be if you want to do an MCL strangle?
Well,
I'm not even sure. What is a margin account? I have no idea. Let me guess. It's going to be like $800? No, probably higher now.
Yeah, I mean, it should
1,200?
It should be elevated now, I would assume. Yeah, 1,200 is pretty good. Pretty good. It's like you've done this before. Yeah, $1,200 buying power. Yeah, I mean, the question is, we just saw this thing rip to 115 and drop to 75. So even with this wide strangle I have loaded here, like both of these strikes were just tested. So that's the question. Like you can pick up $1,500 in premium and have a nice wide break-even range to the downside and upside. But if you're tested and this thing goes to 120 or down below 80, can you withstand that variance? I would say at the very least, like the one contract here is an $8,000. If you sell this put, it's an $8,000 notional. So 25K, 30K, 40K, I think is fine. You can only do one contract. You can't do multiple.
I think it's a little dangerous to sell MCL strangles here.
Yeah.
Just because the way that we've seen the way, did you watch Monday? Like the way oil gapped down was absolutely crazy. And that was just a gap down. And then the gap up, obviously Sunday night. I just think I'd be a little nervous about it because we're in the throes of this. This is, it's not the same as silver. It's not the same as silver was after the huge correction or even before the huge correction when we sold silver. It was just different. This is, I don't know. There's a lot of emotions here. There's a lot of emotional trading happening from that huge candle that we saw the other day, and that scares me. So I'd be a little nervous.
I think if you're doing it,
if you're doing it, you gotta go way
like
upside,
this.
bro. Like, go way wide.
Yeah.
I would, if you're gonna do it, and
I can't even scroll.
I'd actually do that.
Yeah,
I'd actually do that.
This is like that's another way. If you want to do a strangle and you want to play,
that's basically what we did for SLV. I mean, it was super wide.
Yeah, we sold the highest strike. We sold the 200 strike in SLV. But yeah, this is another way, and obviously you can see here too, buying power gets cut in half when you go way out of the money because now you don't take on intrinsic value risk until you hit 150 to the upside, and your downside of 70 is, we've touched that many times before. Even before all this happened, we've been going and chopping around that level. So I think if you are leaning towards doing something like this in a medium-sized account, just selling these tails can also create a really nice situation if this resolves itself and crude oil's volatility collapses. These options are going to go to zero.
Yeah.
Because this premium is all based on the fear that it can reach this level, but and this is all implied volatility premium, of course. And the tails that are inflated right now, if volatility crushes, the crush happens in the middle by the at-the-money strikes, but it happens a lot more on those tails. So you could see this $3 go to zero, and we could even look at this. Like, when was this even issued?
I would say too, like if you're gonna do this wide strangle that we're talking about that you mentioned, I would say make sure you have some cash available to be able to buy an MCL contract if you need to.
Yeah.
I promise you, when it gets to 125, if it gets to 125, 130, you're gonna get nervous and you're gonna wish you were able to do something. And at least if you have the room to buy an MCL for $10, $15, you'll feel a little bit better.
Yeah. But yeah, this option, when it was listed here, it looks like it was trading for 50 cents, trading for $4 now, which means this can be, and another thing to consider is this $3 value that we're looking at the 150 strike is based on a 93 crude oil price. If crude oil goes to 120 or 130, this option is going to be trading for $1,200.
Yeah.
$1,300. So you're going to see a marked loss, even if you're not in the money yet.
Yeah.
So to Jamal's point, you're going to want to have some outs here. Of course, you could buy an option out here and just define the risk up here. But this option too is going to go from $1.50 to $4 or $5. So yeah, I think if you're doing a strangling here, you got to be careful. I would do one contract only. Like even if you had a 100K account, I would still say like one and done, and give yourself the ability to layer in if you want to, or have the flexibility to hedge if you're wrong.
Yeah, it's wild right now. You just don't know. Who is that? I know Jared asked me a question about earnings. Usually tell my earnings. Thanks, buddy. Are you looking to enter anything a little earlier? Actually, no, not right now. Earnings is definitely not the thing. I kind of changed my tune on Adobe early in the week. I wasn't interested. Then I decided to get in. I actually got in a little earlier than I normally do. I forgot that it wasn't until today after the close. No real other earnings that I can think of right now. That there's so much more interesting things to trade than earnings right now. There really is. Adobe is one of them. One reason I decided is because of the software names, because of what we saw happen with CRM and Oracle even. So I got interested.
Yeah, I don't think I'll trade anything other than Adobe until we hit Micron. Micron's on the 18th after the close. All these other ones are kind of just fringe, and it's just like, to your point, if the E-minis are down big and there's plenty of volatility and tradability in the ETFs or the indices, I would rather just go there. And we're always going to be doing that. When the VIX pops and volatility goes into backwardation, we're going to avoid these fringe names and we're going to go to the bigger products that everybody's trading.
Yeah.
Because that's the opportunity to do so. So, yeah, right now, not too much in terms of earnings other than really Adobe and Micron. Those are probably the two that I look at. That's it.
That's it.
We're out of time. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B there. Jamal is at Jamal Chandler. Yeah, we'll see what happens the rest of the day. Plenty of implied volatility for the rest of the day today and tomorrow. We got PCE tomorrow morning. Still pricing in about a 75-point move through tomorrow in SPX. So not nothing, that's for sure.
Not nothing.
But yeah, we got filled on some trades. We'll post those to the Tasty Trade follow page. Hopefully you enjoyed this segment. Lots of questions answered. Some good trade ideas we threw on. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually, this year is even better because it's 3.1415. I've never before, but this year there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. We're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Irrational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. Oh, just circles are great.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody, and welcome back to Risk and Reward. Today's Thursday. We got one more trading day left into the week. We got a pretty volatile day today. A little bit of expansion and volatility. Now we're getting a lot of consolidation, but we'll touch on all that. Let us know what you're looking at. Let us know what you're trading. Before we get into everything, Brother Gus, how are we doing today?
Doing good, hanging in. Portfolio hurting a little bit with this. Now that we're drawing down a little bit again. VIX spiking once again. We kind of got the fake out yesterday. I don't even know if you can really call it a fake out. It wasn't crazy. It was just a routine green day preceding this slightly lower drawdown that we're seeing here. We do seem to be finding some resistance, but I'm feeling good. Feeling good. Happy camper.
I saw somebody getting dogged on Twitter the other day, and they were putting some TA. They were doing TA analysis on VIX, and someone quote tweeted it and was like, "I can't believe we're to the point where we're seeing technical analysis done on VIX." So, everybody jumped on there. That's not how VIX works. That's not how VIX works. And I mean, I attest that's right. That's not how VIX works. It's volatility. It's mean reverting, yada, yada, yada. And then VIX ended up exploding off of the TA that they had put on it. So, that guy probably felt pretty good. But I thought that was kind of funny going around. But VIX is getting popular again within a lot of trading communities that don't have anything necessarily to do with selling options. So at the same time, that's pretty cool to see.
Yeah,
Nonetheless,
I think that's a broken clock is right twice a day situation. I don't know if that adds any validity to doing.
Oh, zero, absolutely zero.
You could do technical analysis on the broader market and then lend that.
No, that's why it was funny.
If you wanted to.
That's why I was very out of all part the VIX. That's why I was like that was the kicker. So we got a lot going on today. I know we got the metals moving a little bit. Those have been a little lackluster actually. Indices moving a little bit here, and then also oil ripping to the upside again. So it doesn't seem like those headlines are going to be done with oil within the foreseeable future. It feels like there's a lot of uncertainty when it comes down to what Trump is saying, how Iran is kind of responding, and just the whole fiasco. So a lot of uncertainty over there. But we can go ahead and jump into the Tasty Trade platform. Kind of break down, do a little tour to market. Anything before we get into anything top of mind, any underlyings that really stand out that have nothing to do with the indices, oil, or crypto.
Affirm is having a terrible day.
Yeah,
I love to see that.
Right.
Down about 8% here. Just sliding. This is exactly what I wanted to see. We get all this downward trajectory. It looks like it might be recovering a little bit, and then wham! It looks to be a confirmed dead cat bounce now. So hopefully we'll see some lower lows out of Affirm. I'd love to see this thing test 30. I'd love to see this thing test 0, as I've alluded to a number of times. But yeah, I mean, it's mainly just the shorts that are king of the portfolio today. Obviously, no surprise there, I suppose. But my target shorts also panning out for me a little bit today. Down about 2% there.
Nice. Again, that's my cheg. So hats off to Affirm. I like the short delta on in there.
Yes, and I'm happy to see the metals coming down a little bit too. As you mentioned, I wasn't too sure with the reversal in the broader market, and oil obviously flying again. If the metals were going to kind of move in tandem with oil as a risk asset, it doesn't seem to be the case so far. We are sliding a little bit, so being short silver, and I'm still 60 DTE, but actually, is that even correct? What I just said? I am 60 DTE on silver. So got time, but I am happy to see this not trying to rip to higher highs.
Well, you and I kind of have an iron condor on then, because I got a little bit of long delta, you have a little bit of short delta. So we're kind of just sucking out that theta decay. But I did sell a 78 on SLV, and we're literally just hovering right around there. So I've literally just been on like the teeter-totter saw, whatever you call it, for like the last 7 days.
Yeah, we kind of have an inverse iron condor actually, because where it's at right now, we both lose. So I need it below 75. So if you need it over 78, we could find ourselves in a bad spot here in the middle.
Yeah, no, 100%.
Full middle, they call that. What's going on, everybody in chat? Ranch, Rodrigo, Jared, Stan, Sergio. Good to see all of you. Do you think volatility or TA is more important? I would say it depends on the asset. Most of the time.
I think TA is pretty irrelevant outside of being able to gauge your risk to reward, in my opinion. And I think that goes for all TA. I would have my opinion on that. But I think volatility would be a little bit more important. But again, from some of the studying I've even done from some guys that work at really big firms, they don't necessarily use TA, but sometimes they will use TA to line up favorable risk to reward opportunities again. So volatility all the way.
Yeah.
TA for favorable risk to reward, but not to paint any pictures like clouds in the sky.
I think TA is I make the astrology joke a lot. I don't really think it's astrology. I think it certainly has some validity to it, but I just think it should be another tool in your toolbox for confirming or rejecting existing theses that you already have. I would say in general, there is an inverse correlation between, I don't want to say how large the company is, but how much a company is affected by the macro environment and how valid TA is for that company. Because if you have take the most glaring example, ETFs like SPX. You can do a lot of TA and SPX, and often if there's no, if it's a stable macro environment, then TA will be incredibly valid. But as there are more and more externalities popping up in the macro environment that could send it flying one way or the other, regardless of price action and the broader psychology in the market, TA begins to become less valid. Whereas with a stock, we're looking at Firefly Aerospace here. These little, as you get smaller and into more niche companies that might not necessarily be affected by the macro environment, I think TA becomes a whole lot more valid because it's sort of isolated in its own vacuum.
Yeah, absolutely.
Volatility is my TA.
No, with that being said, we got some volatility in Fly, 38 IV rank right now. It's flying to the upside, right?
Yeah, these space stocks have been moving recently. I'm curious if ASTS or Rocket Labs, companies like that are moving along with these. Rocket Lab down, ASTS up just a little bit. So yeah, it does seem to be moving in its own vacuum here. But yeah, interesting to see that. What about like what are those little tiny aviation companies like Archer? What is that? ARCH? ACH. I'm kind of guessing here. Archer. ACHR. There you go.
There you go. It's close enough. ACHR. There we go. It's kind of lackluster right now. I guess Fly's taking all the rain right now.
Nothing moving along with Fly. Fly just living up to its name, it seems.
Yeah, it is. With that being said, we did a little bit today. We were able to scalp a few times in and out of the micros, a few $100 there. we were taking a slight long last night into the Asia session. The risk was like 10 points too wide, so I cut it really early. And then we eventually got a little bit of a run. So we came into the day down like 20, 30 bucks. So we were just really paying attention to the sizing on a lot of the trades today, but we'll get into that here in a little bit. Outside of the micros, excuse me, for a little bit of a longer term position on the market, I kind of like to have those call spreads that are a little further out in time. We've kind of taken this one down to the wire, but it's starting to pan out. We're starting to see that volatility coming on these contracts now that we're 8 days left to expiration. So we're holding on to those calls a little bit. I mean, over the last 48 hours, these have been so far out of the money. But within the last 48 hours, we've had some pretty insane bounces to the upside. So there was a couple of times where I was like, yo, I actually might break even on this spread, which was crazy because we were talking about like having a 90% pop and the potential for that to come back against you. And we almost had a perfect example here with all this headline risk coming about. These contracts are so far out of the money. And there was a couple of times where I had to like, oh, yo, I think we might have to cut this. So that just shows how quick the weather can really change within these markets that we're in right now. We did a couple calls. We were trying to long the bottom of the market today. Got one a little early. That was about a $39 loss. And then we had another one that was about an $18 winner. And I just cut that just because the market started to chop around way too long. And I was like, all right, I have no idea what's going on here. I didn't want to time it with the futures. So like, let me just buy a call, see what happens. We've sold off so much. We were almost down 2% on the day. But it began to be a little bit uncomfortable. So we just kind of chopped that for the day. Other than that, that's all we have. Silver is still in the portfolio, trying to cook kind of on the dance floor there. Testing the short put as we speak right now. So we're about 17 bucks on that. So we'll see where we end for the rest of the day. But that's what we got going on in this portfolio.
Yeah, I like the weather analogy. It's there's an important difference between weather and climate, as you learn in like 5th grade, and that holds up in the market as well. Weather and climate are two very different things.
Funny, I saw another TikTok go viral not too long ago, and it was talking about how Monday was sunny out here. Tuesday we got a lot of rain, then we had a lot of lightning. And then Wednesday we had some snow.
Yeah, it was like
all back
really hard
right,
yesterday.
spring, fall, and summer, like all in a 72-hour span out here in Chicago. So shout out to Chicago. It's very much so like the options market.
Yeah, cold but sunny today. So,
very much.
I'll take that.
Yeah, I'll take it.
It's nice, you get in your car in the morning and it's cold, but then as soon as that sunlight hits me when I get out of the parking garage,
nice.
It's like, oh,
right.
This ain't too bad.
Yeah, it's not too bad. But that sun with the cold weather will get you if you don't grow up in a state without it. That will catch you off guard.
It's true. Yeah. Rocket Lab hasn't really been moving exactly with the market. I've had a 65 short put on for a long time with a number of rolls. I've collected plenty of premium to be comfortable taking shares at 65. Rocket Lab is definitely, I would not say is super tied in with the broader market. That's a highly trending name, a highly company news dependent name, can make all sorts of moves, very independent of the broader market. Interested to see what happens with the potential SpaceX IPO later this year as it pertains to ASTS, Rocket Lab, Firefly Aerospace, these space companies. If there's this huge sentiment move, or if perhaps they get sent downward a little bit, as now the big dog has finally the big fish has finally entered the pond, if you will.
Yeah, rising tides, baby.
Yeah, so it could certainly be any of either, and I think that SpaceX in like the space environment will become what NVIDIA or OpenAI are in the AI space, where if any of these smaller companies can do any sort of partnership with them, it'll just send them, flying.
Just being attached, affiliated in some way.
Yes, exactly. If you're just able to say the name.
Yeah, and I think Goldman Sachs, JP Morgan, a lot of those big banks are going to help broker that deal. So again, shout out to anybody that just got out of school and you're working with those banks, and one of your first clients gets to be SpaceX. Like, that's actually nuts. So it'll be interesting when those go through and how it'll have an effect on the overall market.
Yeah, I'm sure whoever gets to underwrite that will see a little bit of a bump in share price. There will be all sorts of moving parts there, but that's definitely the IPO of the year. Coming up.
100%.
Allegedly coming up.
Allegedly.
Yeah. Nobody quote me on that.
Allegedly.
No confirmed news yet, but seems like it's in the cards.
100%. But if there's anything else that stands out, we can jump to the TradingView platform, or if you have anything on your end?
Yeah, I saw Ranch mentioned I sold short puts in Southwest, CoreWeave, SoFi, all red and unchy right now. The Southwest thing, the airlines are kind of an interesting spot. I've been long Frontier Airlines for a little while, as many of you know. We were talking about how everybody kind of has their favorite airlines the other day, and I don't know, the Ranch mentioning Southwest, that made me, I never think about Southwest when I'm looking to trade airlines. Right. It's pretty much always United or Delta.
Agreed. That doesn't pop up in
to go there, but it's just funny. Everybody has their preferred airline. Southwest is getting hit the hardest of the major players in that space right now, though. United also logging a very poor day, but looking to recover. Definitely thought SpaceX was already public. No, it's not. Yeah, they're looking to do it'll probably be a $1 trillion IPO here.
I'd seen a headline with 2 Chainz, with him just like this with his rollie on his wrist. And it was just a headline about how he had invested X amount into SpaceX while they were private. So them potentially going public here, a lot of those private investors are super happy about that. And they're just kind of talking about how their early investments are starting to pay off. I don't want to call it an early Uber for them, but it is pretty cool. Or I guess it would be a good feeling to be in a position where you invested in a private company and now you guys are IPO and might be one of the largest IPOs in history. So must be a good feeling.
Yeah, SpaceX too. I mean, doesn't really, it just, the things that they're doing have become so routine that they don't really get talked about enough. But I mean, they're doing like multiple rocket launches a week, just all the time, just constantly shooting satellites up and growing the Starlink network and all that. And all the pieces of the puzzle fit together. But it's fascinating. And I suppose Starlink is something of a competitor with ASTS, although ASTS is obviously trying to do cellular data, essentially cell towers in space, while Starlink is doing internet in space. So they don't exactly clash, but it seems like either one of those companies could branch out and try to steal some market share from the other at any given point if they want to. I'm sure the tech is there.
Starlink is wild.
Yeah.
I'd do it.
Yeah, it is.
It's wild.
I always see a bunch of Starlink whenever I go to national parks. There's always there's always the sleeper vans that have a Starlink thing on the top. Right. It's like what you got to do. One time there was people at the campsite next to us that had one, and there's no internet in the middle of the park, so like you can't get cell service or anything. And they let us steal it. It was great.
I was gonna say, did you guys connect?
Yeah.
They have a TV out there. Like, what was going on?
No, I don't know what they had going on inside. They had no like outside setup at all. It was just like a huge, nice like.
It's a vibe though.
The largest like Sprinter van.
That's a vibe. Funny enough, somebody that grew up in Colorado, a lot of nature. I wasn't we didn't really go camping or those kind of things, but I still got an itch to scratch. Or like whenever it comes to anything, like I'm down. So that would be fun. QQQ, Iron Condor, 590, 600, 610, 620, $10 wide for April 10. 835 credit. Is that a bad trade? No, not at all. I mean, $8.35 worth of credit. Good Lord.
Yeah,
that's a juicy spread.
I mean, it's obviously a fairly tight range in the environment that we're in. What's QQQ currently sitting at? 600 on the nose. So yeah, you're towards the lower end of that range that you need, obviously. But we're having a sizable down day today. If you get some recovery, what was the expiration? April 10th.
April 10th.
Yeah, so 30 DTE on that. 600, 610. I don't think that's unreasonable at all. I don't know that that's one that I would necessarily be eager to try to hold for max profit in the environment that we're in right now, because at any given point, as we saw the other day when we did the fake out move on the war in Iran potentially being over, things could change really quick. I actually think that it's more likely we're higher than 610 come April 10th than lower. But I do think we will certainly chill in that range for a little while here, because the market has just shown that even in this time of extreme uncertainty, we're not it's not super eager to dump. We've been chilling. I keep making the jokes about SPX 6850. Obviously, we're trading a little below 6700 right now, but we've really loved that middle, those kind of consolidation levels. So I think it takes some cojones to be neutral in this environment, but I don't think that it's a bad trade, especially with the amount of credit that you're getting.
I completely agree. I mean, $10 wide, Iron Condor, defined risk, $835 worth of credit. Let that thing fly, And if it goes south, hit up Gus. If it goes well, let me know. I'm just fine.
Trader Scott, yes, also saying Starlink is also doing direct to phone. Oh, well, if they're doing like cellular service, then that actually just makes me incredibly bearish. ASTS, you're telling me that they're going to be able to do a better job of that? I don't know. I mean, ASTS does have the contracts with Verizon and AT&T going on, so perhaps that's a little more reason to be bullish there. I'm sure Starlink is kind of trying to be their own provider. So if you can partner with the big dogs, can't beat them, join them, sort of thing. But that does make me a little bearish. ASTS if Starlink is doing that. 4G LTE, yeah, okay, interesting.
Yeah, no, I was just quickly looking at that spread. I was like, wait, hold on, that looks like a pretty narrow spread. So let's throw this on real quick and see what it looks like. 742 now. What you said, April 10th. It's looking like I'm getting 745 on my end. These are both $10. $10, or was this $20? No, this is $10 wide over here.
Yeah, 16.
Again, I mean, if the market does stay in a range, I mean, you could roll the untested side, see what happens. I mean, it's not terrible. And again, the market has been stuck here.
Well,
so
if you got 835 credit, I suppose that means he's already up 90 notional per here, if that was what he took home. So yeah, I mean,
right.
Looking pretty for you as well. And yeah, and that risk profile can't be understated. I mean, anytime you can get a 3-to-1 risk profile, I feel like in an expected value context, I do think that there is a greater than 33% chance that this winds up getting home, which is basically what you're getting on what's our pop there? 29, P50, 31. So yeah, I think that there is EV to be had on that. Be careful that you don't wind up holding the bag too long. If you start to get to 30, 40, 50% profit on this, I would be thinking about legging out or just taking it off. I don't know how much you have.
Errol, I live in Orlando, and SpaceX is launching a lot. I didn't even know that, Soul Train, actually. I didn't know where a lot of their bases were, where they might be doing a lot of those projects. I was living down in Tampa for like the last 4 years, so I know we were just, 70, 80 minutes away from each other. I know that one highway takes you directly from Orlando to Tampa, but I didn't know they were right in our backyard then, launching off these rockets.
They're just hucking those rockets, man. Wow. They are always going up. It's crazy. They've gotten it to the point where it's almost like, it's like commercial air travel to them. Like, it's just so routine. Like, just over and over, getting the rockets up there.
Those engineers love that.
They functionally replaced NASA.
Yeah, absolutely.
More or less. I mean, that NASA just basically gives them the money now. So, yeah, it's
smart.
A whole interesting thing.
A little less risk, right?
Yeah, it is. Anytime you can get that government money going, you're usually in a pretty good spot, 100%. Especially when you're talking about billions and billions, the way that SpaceX is getting it.
100%. With that being said, we can jump over here to the TradingView platform. Check out some of the trades that we had on the day. We had an initial scalp down near our value area low. Actually, just for a little bit of context, let's start by zooming out a little bit, just so we know what we're working with. Because one thing that we do whenever we plot these levels of value, these stay exactly the same Monday, Tuesday, Wednesday, Thursday, Friday. So we're not adjusting them, we're not moving them, and we're not moving the goalposts as the market is moving throughout the week. But with that being said, the market's been super volatile, kind of traded above, in this range of imbalance, as you could say, for the last few days. And in that imbalance, after we got to the third day, we just had a little bit more uncertainty, didn't feel too comfortable. Whenever the market is kind of just crowding around a specific area, sometimes if you want, you can kind of just wait for the market to give you a little bit more clarity. So it's kind of nice that we broke, outside of this kind of range that we were kind of stuck in for a little bit. So that's why we didn't take any trades yesterday. But after that, into the afternoon hours, the market sold off down to our value area low. We can go ahead and turn these back on now for a little bit more context. So you can kind of see the long bias was near that value area low, looking to see if we can get some decent risk to reward. And then the market had opened up, and we had an insane spike, I think, in the morning. I forget what it was, but I had a limit order just over here at these highs. I mean, it was like I didn't even have enough time to react. I just see like an insane quick wick, and I see one of my orders was filled. So that allowed me to get out of one of the positions, which was really nice because we started getting long down here. This allowed me to get out of one, and then this second contract came down here and got stopped break even. So if we didn't have that limit order sitting in the market to take us out, we wouldn't have been able to pull any profit out of the market on that specific trade. But a lot of volatility. I mean, right out of the gate, a lot of volatility the second that the market opened up at 8:30. But we were kind of positioning ourselves, just like 5 minutes before the market had opened. Personally, I'm never a big pre-market trader because there's typically not enough volume. And coming from small cap stocks to start off in like 2017, 2018, one of the things was like always not trading in the pre-market because of the lack of volume. But with these indices and with all these headlines, I mean, the liquidity and the volume is pretty fire. Even in the pre-market,
products, especially because it's
amazing.
A 24-hour market. It's
amazing. And I mean, I can't say the same with things like, other smaller underlyings, but like the indices, good Lord. I mean, volume galore, you know what I mean?
What would you say is your criteria for when you throw these things on? Like, not holistically, obviously. I obviously understand the levels of balance and imbalance and the ranges and everything, but like right here on the right side of the screen right now, as we break through that value area low and enter a state of imbalance, what keeps you from putting on a long right there, whereas as we retested that value area low, you put on a short later in the day?
That's a really good question, actually. I would say number one, the order flow, and then number one, the speed of the move. Sometimes, like this, when it was live, this just cut straight down here to the lows. And because we already put a morning low in here, it was kind of already in the back of your mind that if we come down here and take out this morning low, there's a potential that we might not even be in balance anymore. And there's a potential we might head to the next level of value. So that's a really good question. This one's really hard to tell. But the second one, because we broke out of that range finally, and then also started to see a little bit more rejection here, that's why we were a little bit more comfortable flipping the position. and then seeking lower levels. Not only that, oil was kind of ripping to the upside too. So like little things like that will kind of help you gain conviction in certain areas. But the oil market and the indices they're not directly inversely correlated, but good Lord, as of lately, they almost seem directly inversely correlated, like literally the market's pulling back, oil's flying and vice versa. So kind of seeing how strong oil was too, that kind of gave a little bit more conviction. But it's a really good question. I would just say for the most part, really the market structure being broken more than anything right here.
Sure. So you are, but so I guess, yeah, the answer is that you're waiting at least a little bit for, to see it test and fail those levels a little bit.
Yeah, 100%.
You can see it's like the third candle that you enter on there. It's not just as soon as we start to approach that value area low.
100%. To give a little bit more perspective, this is 24,775. So 24,775 is about right here. So yeah, it's not just as we rip into strength on there and then just blindly getting short on that. But we covered a little bit early on this next one. So we flipped short off this value area low, just looking to target the next level of value. And we ended up covering just a little bit early. I mean, this market has been so difficult to trade. It's been hard to even hold some of these down to the swing lows. So it's like this one would have worked if you left a profit target down here at this swing low. But sometimes it's nice to just cover a little bit early. I know there was the last couple of days, the market had ran to a high and barely missed it by a couple ticks, and had ran to specific lows and barely missed it by a couple ticks. So one thing that hurts, but we don't want to get caught in, is just kind of waiting for those exact swing highs and those exact swing lows to kind of take profit and things like that. But anyways, with that being said, that was the second trade of the day. And one thing that you can kind of notice, the reason why we're even comfortable taking these trades too as well is the position sizing. Because if you can see this morning, we're using more contracts than we were using on the second trade, on the third trade. And I think by sizing down that risk after you have a little bit of profit under your belt, kind of gives you that freedom or that confidence to just pull the trigger, right? Like you got some green under your belt already. Also, you're going to size down half of what you're already using. So, and I think even just that makes a good mental switch to, just not be gun shy and just kind of pull the trigger and manage the risk if you need to. But no, the market was extremely volatile. We kept selling off. We took out another low, so we didn't catch this entire move to the downside. But we ended up taking another long down here at this value area low. And then this was one that was a little bit funny. This was one that worked in our favor right away. So it's nice that you have this immediate cushion from where your stop might be. But this one started to consolidate a little bit too long. We're kind of up on the day a little bit. And you can kind of see as the day goes on, this is really like psychology management at the same time. You know what I mean? But about 10 to 15, 20, 30 seconds after we got out of our position, we absolutely just ripped to the upside. And it's like, of course. I'm like, okay, this thing is taking way too long. Sometimes you can have like your own shot clock. Like if this is taking too long, I'm gonna just get out of the position. But that's how the cookie crumbled. We did all right. Had a little bit of profit under the belt. And I think that was all we did for the day. Look to potentially get another long over here. So back to your earlier question that you had, taking a long at these areas, sometimes you really don't know, right? Like I thought we probably would have put in the low for the day, or I thought after we take out this new day low, maybe that was gonna be the low. And you can see that wasn't the case. So we just had to stop out, manage our position, and that was about a 6-point loss right there. And then just kind of stop on the day. After those 2 red trades, after the green, I was like, yeah, I'm done. I'm done, you know what I mean? So that was how the cookie crumbled for today. It was nice volatility, but a very difficult market to trade in, I can't lie. I mean, these are 15-second candles. You can see how volatile this action is. I mean, whipsaw type action. I mean, I don't know. This is crazy trading right here. Like, I don't know, whoever's scalping this market, if you're not using stops, it's probably a little bit easier. But I mean, this is an insane range. I mean, we're making higher highs and making lower lows and then just doing all this type of nonsense. And it just seems to be a lot of, I guess, indecision.
Yeah. If this is one where like if you're guessing right over and over, you're gonna be up giant. But if you're guessing wrong, it could be a whole lot of pain.
Yeah, I mean,
with all these reversals.
I mean, 100%. And I mean, one thing that is really going to catch traders off guards, especially if you trade through the lens of auction market theory, is whenever they have these massive fake out moves where not only do they breach the value area high or breach the value area low, but they kind of run into the middle of that range. Maybe some thinking, okay, we're going to seek the next level of value here, and then you get absolutely rug pulled. So especially with the market reaching that far out and then reverting, it's like, okay, I don't know about this market. Maybe we should be hands off a little bit. But with that being said, we'll see where the market takes us the next couple of hours. It was a pretty intense day. I was focused a little bit more on the charts a little bit longer than I would have expected for today, at least.
Yeah. It's going to be just about our time.
Yeah, that is about it. Even Frankie today had such a case in NASDAQ. I took 20 points that turned into 80 points. Yeah, 100%. And because of that, it was like, I mean, we could take another trade. We have a little bit more to risk on the day, or we can kind of be hands off. So with that expansion involved, and the same thing that kind of caught me off guard a couple weeks ago when volatility expanded, I mean, one of the initial losses I took was like twice the size that I usually take, or 3 times the size. I was like, yo, I need to readjust and recalculate and kind of recalibrate this expanded VIX that we're trading right now. But it can also work in your favor. Sometimes a 20, 30, 40-point trade might turn into an 80 or 100, and you're like, fire. Sometimes we don't recalibrate until it's on the other side when it's not working out. 15-second candles, dude, you must have a quick trigger finger. 15 seconds is bad normal. Omaha. No, I'm just kidding. Anything else top of mind before we wrap for the day?
I'm going to try to get short these defense contractors soon. I'll kind of leave that broad. I don't really have any specific names or targets in mind, probably Lockheed Martin, but I feel like the tops are in. If we're not seeing them push higher highs as the uncertainty continues here, I think we could see some downside soon. So looking for setups there.
Awesome. Hey, well, I got Tony beat by 5 seconds. I'm just fine. We'll see what we get for the rest of the day.
In trading context, we call that 33%.
There we go. We'll take it. Mike, Sergio, Griffin, Jared, Soul Train, Trader Scott, everybody else, thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming on next, and we'll see you guys next time. Peace.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This
was awesome. Not a paid, you're not getting paid for this advertisement.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration, or maybe even the strike. Pretty simple.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. It's still Thursday, March 12th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host for today, Ilya Spivak. Ilya, it's not great out there right now. The sum of all fears seems to be materializing.
This is what the markets have not wanted to see. And if you really want to drill down to sort of where the markets were and where their head has been for the better part of a year, and we've certainly had no shortage of talk about it. The markets wanted rate cuts. The Fed was looking at the data and said, I don't know about that. And the market said, yeah, listen, we don't need the rate cuts because something is wrong with employment or inflation. We need it because things are really hairy out here. Maybe there's all these risks. Won't you please give us cheap money so that we don't have to be afraid? Well, now we see what the markets were concerned about. And it didn't have to be this, but it happens to be. And so the markets now look at this and go, well, how are we supposed to get these rate cuts now? Probably not going to happen. And so you see now the pricing for even one rate cut this year is less than fully done. Whereas just weeks ago, 2 cuts for this year were a foregone conclusion as far as markets were concerned.
Yeah. Where are we right now in the SR3 contract? Do you know for December?
We are, I'm looking at Fed funds futures, which is the monthly. I'm seeing 21 basis points.
SR3 now, yes, 21 basis points, which means the market isn't favoring, we're not thinking that we're going to get a full 25
we're still
basis point
better
rate
than
cut by
even
the end of the
odds,
year.
in fairness, right? 21 basis points is almost to 25. We're only 4 basis points
Okay,
off.
so 84% priced
But
in,
also,
it's the first time all year that it hasn't been fully priced in.
that's right. And by the way, that's 1 cut. Most of the year, 2 cuts were fully priced in, and we were flirting with the idea of a third next year. Now we're down to 21 basis points for this year, 24 basis points for next year. We're not even sure we're going to get one next year.
You may argue, Ilya, that it's getting worse.
You may.
I'm going to make that argument here today. We're seeing that many of the issues that were cropping up last week have continued into this week. There are some alarming charts and perhaps realities of physics on the ground that we need to contend with as we think about how this market is going to behave. I don't want to use the C word here. No, not confusing. That was yesterday's word of the day on the show. It's going to be crash for today for equity markets. And that is, Ilya, I don't throw something like that around lightly. So let's talk about these oil flow bottlenecks. The first one being an important discussion around the IEA and US DOE SPR releases here.
Yes.
It's nice that we're going to get 400 million barrels from IEA. It's fantastic that the Trump administration is going to put out more than 170. There are constraints around flow that can't be met to displace or replace the 20 million barrels per day that have been lost coming out of the Gulf. And that's accounting for even the Saudis' 7 million plus that they're able to get across to the Red Sea. Excellent long-term infrastructure planning, by the way, which was a project set about decades ago in the event that something like this ever happened. But I point to this chart on the screen here, Ilya, which is courtesy of our very own ChatGPT. I figure if people can use it as boyfriends and girlfriends these days, I'm allowed to use it to run some scenario analysis on digging up information from these various government institutions' websites. That's an odd analogy.
I mean, we what this is an intern, and
this is intern work.
We've needed one.
So the realistic sustained flow based on the Department of Energy for the US SPR is 1 to 1.3 million barrels per day. So even though the SPR is going to be going down by 170 million plus, it's going to be trickled out to the market over a 4-5 month period.
By the way, to your point, that's about as much as IEA reserves in aggregate, not just U.S., have ever delivered per day to the market. The most recent example being the 2 times that it got tapped in 2022. So the U.S. limit is about 1.3 million barrels per day. But also, obviously, as you have on your matrix here, there's lots of countries contributing. The IEA has all kinds of membership. It was created, in fact, in the 1970s to counteract these kinds of things, around a Middle East war then. And there's more here that could go out, but it doesn't look like they have the technical ability to do it.
No, that is really the problem here. The historically sustained flow rate from the IEA from SPR releases in recent years has been 2 to 2.5 million barrels per day at the high end. Maybe it's higher theoretically at 3 to 4. But when you look to Europe or Japan and South Korea, there's just not enough oil flowing per se during this whole situation. And I say it's getting worse because it's not just about the oil. It's really about the fact that the goods have stopped. And you don't need to look at the news flow to understand why. This is from Bloomberg, the Hormuz number of VLCCs that are tracking through the strait, west to east, crude 7-day crossing, 0. I don't think that the Iranian mines that are out in the Gulf now, or those little speedboats, there's some videos popping up on Twitter of speedboats hitting an Indian VLCC yesterday overnight. I don't think that they're discriminating based on what type of commercial tanker they are. They're not. So this isn't just about oil now, and it hasn't been, but we're going to see the ripple effects start to spread into other corners of the market. And so when you wonder how come treasury bonds aren't getting much of a bid in this kind of environment, Ilya, I think you can explain it away. It's not just oil inflation we now have to be concerned about. There's a lot more inflation of other nasty varieties that could be cropping up in the pipeline. And I think it's worth taking a page out of an argument I heard years ago about why that 2022 inflation was so problematic. It came after an onset of a ton of stimulus, a lot of new money sloshing around in the system. The Fed's money supply has increased dramatically, not too different than what happened in the early 1970s, where, yes, the Yom Kippur War happens, there's the oil embargo, and it goes on for 6 months, and it has impact for 6 years, as people like to say. That's inaccurate. The Fed mishandled policy back then.
That they did.
And they let the market stay too loose. There's great monetary easing and money-based expansion, going into the early 1970s, and then they cut rates too early in the mid-70s. And so the conditions were set for oil and this inflation to take root and to flourish. And now the table very well may be set again like this. So I've been on the teetering of 2003 Iraq, 2022 Russia, Ukraine. Maybe it's going to be worse. Maybe it's COVID meets Russia, Ukraine, and worse than that, perhaps. So we have lots of trades to explore here today on Futures Power Hour. Ilya?
Indeed. This is the thing that markets didn't want. The colliding of higher borrowing costs with the various risks. I mean, you don't have to go far. Almost everything is made worse by the cost of money being higher in a tense environment like this. Obviously, everybody who doesn't have a long enough memory or a long enough reading of history to know better is out there saying, hey, don't worry, the Fed will print everybody a bunch of money. It's all good. There's nothing to worry about. Buy the dip every time. Yeah, that's cute and all. But how in the world is the Fed supposed to cut interest rates or provide any kind of support when inflation is surging like this? And the answer is simple. They have to wait for the inflation to crash the economy. And when the inflation crashes the economy, then they can reasonably put on their best tie, come out in front of a podium and say, la-di-da, everybody, we're going to flood the market with stimulus. Yeah, but first you have to eviscerate inflation expectations. And since you're not going to eviscerate them with whatever's going on with crude oil prices, you're going to have to take an axe to demand, or at least wait for the axe to strike demand. Obviously, none of that is good news for stock market.
6709 here on the S&P 500. We're off nearly 70 points now, more than 1%. 37 IVR, which isn't materially higher than it was yesterday, but it is still moving up. We do have a new high in IVR today compared to yesterday. Rejected for third, fourth, fifth, sixth consecutive day.
Yeah.
At its 1 week moving average, which we've been bumping up into. We couldn't quite get back above the November, February swing low trend line. Momentum remains pointed lower, which is part of the reason why it's like we're looking to add new directional beta to the upside right now. Not necessarily. No reason to catch a falling knife. As it were, the Russell is taking it harder than anyone else again here today. And we did the inverted chart on yesterday's show, Ilya, just to emphasize a point. If we were to flip this over, okay, and I pulled up TradingView for this, but if we had flipped this over, what would I be saying? I'd be saying the market broke out, it retested the breakout level, it's continuing higher off of its 5-day moving average. That's super bullish. Buy. So then why wouldn't I think this is not like a sell, or at least not looking to get long right now? So to me, the technicals here at least are useful guideposts, I think, where if you are looking to establish longs, you need to see some sort of change in short-term momentum to indicate there's been a flush, there's been a washout, something to categorically shift the narrative right now. And it's not showing up in vol, it's not showing up in put-call ratios, it's not showing up in momentum indicators.
No,
it's not showing up.
I mean, if you look at the daily back on this RTYH6 contract, you can see that 2,500 does have a bit of support. If you go back a little bit further, you can see right there, there is something of a low, referencing back to where we were quite literally at the turning of the calendar from December 31st to January 2nd of this year. So you can see where the support there sits. And we're right on it. Obviously, we've tested below it on that panic run that we saw just 3 days ago, but obviously didn't stick. And so this now is the bogey. If you want to consider, let's say, that low, that January 2nd low at, let's call it 24.93. That's your first line in the sand. And then there's, of course, the spike low from earlier this week at 24.16, 24.17 or so. You take out this low, that's where would sort of naturally occur to me to look next. And we're testing it. Maybe we don't break it. We've held here before. So similar story in the S&P. It's a similar story in the NASDAQ. Maybe we hold these levels or not. But at this point, you just don't know. And so to try to pick a bottom right here seems like a terrible idea.
We just don't know. And you know, the knock-on effects here, those zero ships making their way through the strait right now, Qatar. They are the world's largest producer of helium, for example.
Natural gas is a huge export.
Forget natural gas.
Yeah.
Forget natural gas. Helium.
Okay, helium.
Taiwan Semiconductor consumes 20% of the world's helium. I told you a few weeks ago as we were getting into the semiconductor cycle and learning more about TPUs versus GPUs, I had become a tourist and got into some of the semi-analysis reading materials. And so there is something called EUV lithography in the semi-manufacturing process. That is the part of the process to print the smallest things onto the silicon wafers. And it requires helium to cool down those machines for the lasers specifically. All right. If you don't have helium, you can't make wafers. No chips get produced. So what is a market value TSM? Like, think about a 2020 market when you had global trade grinding to a halt. Okay, and these are tail risk scenarios. Who knows if they'll actually play out? But what happens to stocks like this when trade comes down? Did it benefit on the other side? Yes, but it had to get cut down 30% before people realized things would be okay. And a lot of these stocks here, it's come down from 390 to where we are today at 340. There could still be more breathing room if we're looking at a legitimate supply chain congestion here. And if that means there's 15% more downside for a TSM, what does that mean for an NVIDIA? What does that mean for
a 300 handle test on TSM seems completely reasonable. There seems to be some kind of a friction range there, just at those highs from last year before we jettisoned higher this year.
Yes.
So there's something right there. There's an interesting level here, maybe in SMH, where if you take
looking
this
like
out,
a head and shoulders now. This looks
does
awful.
look like a head and shoulders now. You crack that. I mean, you could be back in sub 300 territory, or at least testing it.
Yeah, I mean, 375 to 430-ish. We'll call it $55. You know, that's a test of 320. That's a test of the swing low that you had in late November before John Williams saved this market. So just the measured moves are starting to come together, looking like we're topping. The S&P is looking like a rounding top more and more with each passing day.
Yeah.
We had a chance to get back above that rounding area this week and failed. We couldn't get through.
Very pointedly, by the way, like right at the technically significant spot, right where you'd go, if this was a market that was stair-stepping down, where would it stop? That's where it would stop.
It should stop there. It did not stop there. It's continuing to make its way lower. We could even be generous and throw in something like a 618 Fibonacci here. And let's just get rid of you for a quick second. I'm going to go this 618. Okay. That's the number that we should be paying attention to if we think this market is going to be staying up. It should not be trading below 67. What are we going to call it? 67, 60. Oh, where does the 1 week moving average happen to be right now? 67, 65.
Yeah.
When you get below the 618 retracement and when you're looking at technical analysis, it usually comports a trend reversal. You're allowed to have consolidations and congestion so long as you hold above that retracement. But the fact that now we've started to carve out what looks to be like a rounding top and we're below the 618, and then you have your Russell breaking down here, now down 1.65% on the session. Your NASDAQ, which had been stronger than everything else, starting to succumb to more of those cross asset flows and pain, now down 1.34. It's actually the second weakest on the day. The table is increasingly set for bulls to stay away for the foreseeable future. And I know that I'm not deploying any capital on the long side looking for any home run hits right now. I'm looking for, potential range bound congestion. And I'm even feeling less certain about that and thinking maybe some strikes need to be adjusted today.
Yeah. I mean, if you think about it, you don't even have to believe in Fibonacci analysis or technical analysis at all. Just think to yourself, you had an up move and then you have a pull back in that up move of 2/3 of the move. Is that a pullback? Well, you've erased most of the move. So what kind of a momentum shift is that? Probably you're out of pullback territory and into reversal territory. When 2/3 of the up move that you're looking at, a segment of the up move, obviously not the whole rally, but you're looking at the most recent segment of the rally and saying, okay, 2/3 of the most recent push higher is gone. Is that a change in the trend? Probably.
Seems like it.
Probably. I'm certainly worth exploring that idea. Certainly not improbable, as it were. And so you look at this and you go, okay, fine. So what do you do here? NASDAQ, I think you probably have the least to do. I just rolled maturities today but I've been short via owning put verticals against the October high. So, and I had tons of duration. I came up to 15 days to expiry today. I was up a little bit of money on it and said, you know what? Let me just put more duration in this. Let me close this and put more on.
Sure.
But I'm rolling and I'm taking P&L off the board. Would I put on something fresh here on NASDAQ? Maybe not. Because we're kind of pressing the underside of this range, but also you can get very solid risk reward buying put verticals for a break of these levels. Let's say 50 days out, 43, 49 days out. There's a bunch of options clustered around there. And you can get very solid 2-to-1 or approaching it risk reward on this exposure. Russell looks even better. S&P looks very good as well. There's certainly opportunities here in the generalized indexes, especially if you think that there is some sort of unwinding of what you've called the dispersion idea.
Yes, and again, more today.
There's
a lot of downside correlation right now.
There's tons of downside correlation. Markets are increasingly approaching liquidation mode. That's not a time to try to pick individual names. That's a time to look at the indexes.
Yeah, I was reviewing it today, Ilya. There have been 4 the XLF, for example. Actually, let's bob and weave reverse. Ilya, you mentioned the NASDAQ here. The one thing about the market right now, if we wanted to just get some downside protection, I believe Jamal and Mike were talking about this a little bit earlier today from the floor of SIBO. It's expensive in some of these futures products right now. If I wanted to just think of this as a top, we'll call it 24 to 2650. We'll call it a 2,500 point measured move. We would look for something down to 21,000 or so. So let's just say we want to play inside there. So we can, we can blow past it. We make a little bit 250 points wide. We'll go 23,250, 23,000 long the put spread. This is, depending upon what you're looking at, $900 for one trade for many retail traders might be much. The triple Q's
solid risk reward though.
Yes, for downside protection. And you have to size up a trade where it comports with your risk tolerance, not necessarily with what looks good on the screen. If you have a smaller account, you don't swing a trade like this.
Yeah, you don't use the full NQ. I mean, go to MNQ, go smaller. But if you look at the risk reward on offer, I mean, you're looking at what, like 4 to 1? That's not bad at all. So if you look at this and you say, you know what, I'm going to view this hedge opportunistically as a trade in its own right, which is frankly how you should do it. You shouldn't be putting things on saying, oh, this is a hedge, I don't care. No, you should care. You shouldn't risk more than you're looking to make unless you're selling premium and getting paid. And on top of that, looking at a probability of profit that's well north of 50%. If that's how you're structuring it in sort of the typical Tasty methodology, by all means, risk 2, risk 3 to make 1. If you're not looking at better than even odds of making money and you're not getting paid the premium, what do you do? So if you're hedging even, at least you have to lock in solid risk reward. And it's expensive, but at least the risk reward seems there. There's some decent pockets of liquidity here.
It really depends upon the product you're trading right now. I'm looking at the 6,600, 6,550 long put spread at 19 DTE here on the screen. The buying power is $1,300, which just a quick poke back over to the NASDAQ right now. If we were to pop back into the NASDAQ, doing something similar, here, long put spread, although it is further out of the money at 36 days, that's only $900. So really, we have to work with the volatility that we have here. In thinking about the positions that are on though, right? I've been an advocate for weeks, and dispersion means grind. Are some of these positions appropriate now that are on, given the heightened concerns about a potential downside wash? I really don't think so. I'm looking at this particular one at 36 days to expiration. 6,600 is exactly where this market washed out to earlier on the 9th.
I mean, that's the bogey now.
I could take this off for a small profit. It's not a ton. I'd rather free up this buying power and use it elsewhere. This does not feel like enough time to see 6,600 hold. Yeah. So getting that off the book, going
and
into...
look, they want to give it to you.
The other side of this, though, is that with that volatility expansion that we had on Sunday at the open and the market selling off, I was able to lay into some fairly wide iron condors here, where the strikes are in 63, 62, 61, and on the upside, they're 72, 73. This I do want to hold on to. At 49 days to expiration and us returning to the midpoint of that trading range above the highs that we've had, and we can go to, 6,200, we're talking about going below the August low. I feel pretty good about thinking that this is something I can ride out for a little bit longer. But 6,600 seems like the path of least resistance right now. And so given what we're seeing going on in the market, could there be a negotiated settlement soon?
Who knows?
I don't think so.
This is the thing. I've been getting a lot of comments from folks going, what a time for the president to pull one of his taco maneuvers. And I've been stressing, this is not a tariff rule written on a piece of paper. You can't taco this.
No.
This is a war. You're in now. You're in for the penny, you're in for the pound. So at this point, there's nowhere to go. You've got to figure something out here. And the president famously doesn't like losing. So you got to think he's building this narrative like we're almost done. There's barely anything left to hit. That's an exit strategy. To come out and say, I've been telling you everything's great. Well, might as well pack it in then, everybody. Problem is,
right.
The problem is the president surely has people sitting in front of him going, if this thing blows up in your face before the midterms because you've pulled back too early, you've got an issue and a half on your hands. And if this thing continues to blow up in your face going into the next electoral cycle, we're going to be out of power for who knows how long, because we're going to lose all the branches of government. So if you're going to do something here, you better do it. You better get this win.
I don't think the market's looking at that. I mean, you look at the sector performance today, Ilya, as we get ready to turn to bonds. 4 things are up. Utilities, energy.
Yeah.
Energy. Gas and oil and exploration. XOP, XLE, IYE, XLU. And then, XLP is the least worst performer, which is only down by 0.07%. Okay, and then materials. And then you got the high end, SMH. And then oil and services. This is really fascinating here. If you can't pull the oil out of the ground, then you can't sell it, which means it doesn't matter if it's trading at $5 or $500. You're not in the game. So
and then there's the other thing, right? The administration keeps saying, this is the time for the Iranian people to step up. This is the time for them to come out and overthrow this regime. Okay, that would be a very elegant solution to this whole thing, except how in the world is anybody going out into the street when bombs are dropping on their heads? Nobody is trying to get out into the street for very obvious reasons. They don't want a Tomahawk missile to land on them. And so, maybe.
When you put it that way, actually, that's pretty understandable.
Yeah. I mean, so you think sure, it would be really great if all of those Iranian Democrats that were getting slaughtered in December and in January had their final say here. It would really untie this entire knot. And surely they want to. Surely they're not afraid after what they've already braved. These are, as far as I'm concerned, heroes for democracy. But are they coming out when we're actively bombing the bejesus out of Iranian cities? No.
Probably not.
So
not right now.
How long is it going to take them? And how much degrading do you need of the regime so that they can come out once we pull back and stop bombing things? Or alternatively, do we need to step up the bombing so as to level everything so as everybody can come out? And what does that do? There's no easy way here, but what you definitely get a sense of is whatever happens, it's not going to happen soon. And that's the biggest issue for the markets.
It is a big issue for the markets. Ilya, if this is a smaller right shoulder being carved out here, you don't get a neckline break until you're below 373, we'll call it.
Yeah.
And 373 less 427. We're looking towards that swing low in November. Semis feel like they're holding up a little too well throughout this whole thing. So to that point, what would we do? 2 stages here. First, 375, 360, 50 points wide. If we retest those lows, you have a nice little push down there, risking 1 to make 2.5. that's where I'm going to get a little bit of downside hedging as downside hedging. I'm getting off any directional bullishness. So this isn't a hedge. This is just a position now. But if we were to break below 373, the next thing that I would put on here is look to like the 330, 300 long put spread. And it's not going to be trading at a 11 to 1 risk to reward or 10 to 1 risk to reward by the time the market moves down another, $15 or $20 to substantiate putting on this leg. But if we were to think about that, Ilya, it would be more like this kind of pricing where it's closer to a 6 to 1.
Mm-hmm.
And a 6 to 1 risk to reward looking for a completion of a head and shoulders pattern here in semis. It may be a cheaper way to play downside in the NASDAQ, right? We're talking about those futures contracts being big. You can get a similar view, express a similar thesis that maybe the futures aren't appropriate for, but the futures, again, this is a future show. So that is my preferred way to play it, but sprinkling some semis that are a little bit more sector specific and supply chain at risk, to me, isn't the worst idea given what we're seeing right now. And that includes a bond market that's unable to find any sort of a safe haven bid because the overarching inflation concerns are becoming so strong. We gapped open lower last night in ZB, and in doing so, we broke the uptrend from the lows that we had in January and February. While we tried to recover through that gap today, we could not close it. The 30-year auction wasn't terrible, mirroring what we saw in the 10s yesterday. We can go into the details in a moment here. So it is a doji day down here, but it's after a gap open lower.
Well, and ZN looks even worse, and ZT looks awful.
Yes.
So as you start moving in on maturities and you get closer to nearer term interest rates and the Fed sensitivity part of the curve, you start to get to increasingly higher rates because, among other things, the markets are clearly moving expectations for rate cuts down in time.
Oh, are they going down? Are they going down? SR3Z6 today, now at session lows. This is the lowest pricing. This is the least confident of the, Ilya, 96,475.
19 basis points.
Disappearing. This is the least confident the market's been about a rate cut by the end of December 2026 since March of 2025. It's been a full year.
Yeah.
And that when was that happening? At least the tariffs gave us cut odds going up because the economy was going to be trashed.
Yeah.
Not this episode. The cavalry's not on the way. This is not a set of circumstances where they would feel comfortable in next week.
And by the way, the reason that it was this low is because the markets had a bunch priced into 2025.
And that's how you know, Ilya, right? There's been a lot of different regime and relationships between energy and the rate cuts and the treasury curve. But there are points along the way over the past 2 years where when rate cut odds went up, treasury yields went up. The notion there was you're going to get looser monetary policy, you're going to fan inflation, you're going to boost growth. Okay, and so we need a price in that premium at the long end of the curve. This time around, you would think then the opposite. There's a drop in cut odds, so then yields come in because you're going to get lower growth, you're going to get lower inflation, and that's usually not how people think of the relationship. They go, well, they're not going to cut, but yields are going down. Here, we're losing the cut odds. And it's because the market is now saying not that that's good for bond prices. It's because there's an overarching inflation problem.
Yeah.
Whenever that inflation problem is so great that even though the market has said, no, goodbye rate cuts, even removing all of that pricing, that's been subsumed by the rise in oil prices, by natural gas, by the plethora of commodities that we're going to be going through. We have some wheat and corn and soybeans to look at momentarily.
Indeed. I mean, you look at what's going on here, and this is where it all really comes together. This is the issue. This is why this is a panic. Because what it's doing is it's feeding interest rates higher. And what that's doing is unraveling the market's ability to digest risk. Because if losing money becomes expensive and is becoming increasingly expensive because you have to borrow back at higher rates, well, then are you going to be as cavalier with deploying fresh capital? And are you going to be very mindful of not losing money? And so you're going to try to sell what you can and not redeploy. This is how liquidations happen.
I was running through a little bit of a query here. What happened after the Russia-Ukraine war, given what we're seeing in some of the, fertilizer names right now? It's a little bit more reminiscent of Russia-Ukraine rather than what happened after Iraq. Did 10 years rally on some sort of safe haven bid? No. February 1st to June 1st, 2022. February 1st, 2022, the 10-year yield was about 1.93%. On June 1st, it was 3.14%. And it was buttressed by the fact that inflation wasn't just about oil. It was about what was happening in the grains. February 1st to June 1st, wheat prices rose 33%, corn prices rose 19%, soybean prices rose 12% here. So, Ilya, now that we're starting to see the market act more like that, I'm thinking about the position that was put on just a few days ago. Can't believe it was at 46 DTE, and we need to shunt this guy overboard. Almost. I say almost because if the oil things, the short put spreads in oil, the long call spreads in oil, continue to work, this thing is not going to work. But if I take this off and oil all of a sudden gets hammered by a headline, this will bounce back to a more favorable point in the range where I could offload it maybe at scratch. And even right now, it's 2 lots. This is going to be 2 lots here, $62. I mean, this is a small thing to eat right now if we're wrong about the directional neutrality, but it's a 53 IVR. We have not seen that in a long time here in notes. So maybe it's selling call spreads above 112 as a way to effectuate some sort of view here in the short term that this is getting worse before it's getting better. That could be like a 113. Let's clear the deck. 113, 114 short call spread. You're picking up pennies in front of a steamroller in many regards, but you could also see by the options pricing, the market is very much in agreement and says you do not deserve to be compensated for taking.
Yeah, I'm not giving you any money. You want 77% probability of profit. You're going to pay me 8-1.
So there are ways to trade around this right now. The volatility is exceptionally high. Doing what I've done here, it's almost inappropriate. It still works. We're still within the expiration window. We have not broken any of the technical bounds, but there's a lot of velocity in treasuries right now, signaling, screaming inflation risk. So, Ilya, typically at this time of the show, we'd move over to gold. And while we're going to go over to the metals shortly, I do want to take a brief reprieve to talk about the grains here. This would have been a Westwater day, but he's obviously not in right now. The wheat chart here over the last few weeks has really started to jump, and you're looking at a 37.3 IVR. The corn chart here starting to jump. This one has a 90 plus IVR. We can go over to the beans, and these are sitting near yearly highs at 65.8 IVR. If you're not trading these products right now, and I'm exploring trades because I think if we're going to follow a similar path to what we did in 2022, there's much work yet to be done here in the soft ags. But these are the indicators that even if you're not trading them and you're thinking about treasuries, there is something greater going on in the inflation story right now than just oil. A more significant supply chain risk is being priced in. It is oil to an extent because you get these goods around.
Yeah, because it's fertilizer.
It's the straight. It's not oil. It's the straight.
Yes.
Right? Like corn, 40% of the fertilizer that goes into corn is a product known as urea, which you're like, urea, where have I heard that from? Isn't that the P? Yes. Okay. So you have urea. 40% of global urea supply goes through the Gulf. Okay. 33% of ammonia. Qatar produces 35% of the world's helium. There are chain effects and dominoes that have yet to be knocked down, but the commodities which react first in these chain reactions are starting to yell and yelp. And we don't need to look at any individual one.
And you can see all of these things start rising at the beginning of the year. Again, before the war, they start to anticipate with crude. Crude starts rising at the beginning of the year when everybody name your alphabet combination of forecasting agency, EIA, IEA, OPEC, You name it. There's going to be an oil glut as far as the eye can see. Well, thank you, consensus. The market, as ever, loves a consensus because it loves going the other way. So at the beginning of the year, the market goes, oh, so you all think there's a glut, do you? Right. Okay. And so crude oil starts rallying since the beginning of the year, but so do all of these things because, among other things, as we've just said, crude oil and petroleum, more specifically, is an input into all of these things.
It's an input into all these things. The fertilizer impact to me.
Fertilizer, shipping, the plastics that get made for the tools that are used for all of this stuff. I mean, there's immediate knock-on effects, secondary, tertiary. We use petrochemicals for so many things. This is going to increase the cost of all kinds of stuff.
The fertilizer stocks are going nuts. And the only other time in recent history that you'll find them behaving like this was Russia, Ukraine.
Mm-hmm.
So the money is flowing today. CF Industry Holdings. God, Nick and I were talking about this in the last call yesterday. I don't have enough of any of this stuff right now. It's part of the reason why I'm so panicked today, Ilya, because it's like, oh my gosh, this is happening. It's happening.
Yeah.
You see this 12%, Mosaic 8.5%, Intrepid 11.6%. The fertilizer companies are looking at super fat margins. The American-based ones are. You know why? The flow of their product's not going to stop.
Nope.
The demand for these goods aren't going to stop, but the supply is going to shrink a lot. So compounding issues, compounding inflation issues, and perhaps that leads us to gold right now. We're going to be exploring more of those wheat corn trades. This is an inflation scare, which different than 2022 a little bit, because how are you going to pay for all these things? You can't pay for goods because shipping is clogged up. You're certainly not transporting gold anywhere. You're stuck with daddy dollar for a little while. At the margin, at the beginning of the week, when we saw or beginning of the month when we saw the breakout in gold and silver, and then the immediate smackdown, it feels like people are selling the metals to satisfy margin calls elsewhere in the market and to raise capital for whatever may be forthcoming. Gold down 1.2, 1.3% today, Ilya. Silver off 0.4%. Copper, the growthiest of the bunch, off 0.7% as well. There is nothing to like here in any corner of the market if you're looking for a silver lining, and you know better than anyone. I can find optimism in the bottom of a foxhole.
You can.
And I'm not seeing it today.
Not today. Not today, because this is the kind of market where correlations go to 1 and people get panicky and they start to raise cash. And it stops being about, well, how much money can XYZ company make, or how much of an AI boom are we going to have? Everybody's looking at this and going, yeah. Okay. I'm not going to have cash to cover my immediate needs tomorrow. So you can have your AI boom in 10 years. I need to be alive long enough financially to be there. So I need money. And credit markets are tightening up. Rates are going higher. I'm going to try to make as much cash available for the war chest as I possibly can.
It's problematic.
And then again, there's those of us that are short.
Well, right now, things are still holding up. I mean, yesterday on the show, talking about a 4-hour chart here in silver, where actually we were going down to the hourly time frame, a little bit more micro level technical analysis. This 85 level where we've had these pokes into resistance since the beginning of the month, and on the other side of it, it's been an area where the market's caught itself a bit. It's still holding up-ish for now. We got that long tail during yesterday's show, and we're effectively at the same levels. So it doesn't look great by any stretch of the imagination, but it hasn't broken out or broken down through the serious breakout points. But below 84.5, 84, what are you really hanging your hat on in silver? Below, dare I say, 5,100 here in gold now? You lose your uptrend going back to some significant swing lows that we have had in recent months, the washout lows in early February, and then the move here lower in March. You can't really paint a picture to justify from a technician's perspective, wanting to hang on. And then just as a second layer to that, Ilya, 50 IVR in gold during these times? Hold on. We want gold vol rising. The table is ugly right now.
I mean,
here.
look at PL futures for a second, just to give you a sense of outside of sort of the purity of gold. I mean, look at this is a 2% down day today. It's ugly. And this is just telling you the extent to which things are starting to fan out.
Fanning out indeed. And that's what makes this move higher in those commodity tracking indexes, DBC, GJP, all the more alarming because you're not seeing it on the back of the big rise in metals anymore. Right? It's there's every other commodity is going up. Every other commodity is going up. And with all the stimulus and the deficit spending and the US government debt at $38 trillion,
it starts
saying
to add
bad
up.
Boys? Woosah.
Yeah.
We'll get through it. We always do. That's why we plan, and that's why we take a look at oil here, because it is the singular thing that is moving the entire market with a new high in relative volatility, 113.4, 113.6 IVR here. Ilya, just as a reminder, and I've been doing this the past few days, but it is still worth discussing. When you see a move above 100 IVR on your platform, it means that over the past 52 weeks, including yesterday's session, today's volatility is X number, whatever percent above the 52-week high. So today, oil vol is 13.6% above the trailing 52-week high right now. So every single day, oil vol is pushing up and up and up. Mr. Spivak, yesterday on overtime, you and I were pressing our knuckles looking at this potential inverse head and shoulders pattern on oil. It was trading around 88 at the time. I was anxiously thinking of ways, how can I get into this market right now? Because I would really like to get into a call spread of sorts. I was able to get into the 90-92 call spread here. With 9 days to expiration, it's now at 8. So the technicals, as much nonsense as people want to make them out to be, they are a table setting for you. You don't have to sit at them. And sometimes you sit down and the table gets yanked away or the chair gets kicked out, right? But other times it works. And it works enough in my experience where it's worth sometimes when you see those kind of patterns, you place a little bit of your chips down and you say, I'm going to take a swing here. So Ilya, the structure of the inverse head and shoulders pattern, we got up into the high 90s here today. You had a very specific number in mind for where you're targeting oil to run up to in the short term before there's a potential reprieve.
Yeah.
That may be difficult in this market, but outline the case for the technical bottom right now and why it may have further to run.
Well, I think this is not the most complicated thing. If you go to a 4-hour chart here, you can see very clearly where the head and shoulders is. Even if you were to take the conservative view as we did here, and we take the horizontal neckline, we can even drop it a little bit here and make it a little bit more conservative because we sort of tested through it a little bit. So if you want to set it like right around there, it isn't rocket science how these things are measured. From the head to that neckline gives you somewhere on the order of 102, a little bit over.
Sure. That's it.
That's it.
How you measure a head and shoulders pattern. Head to neckline. Neckline is the breakout point, not the original. I mean, this could theoretically
And
be
by the way,
neckline.
this is a very conservative neckline.
Yes.
Normally you would do the slope neckline. That would give you a wider swing. This is the most conservative way to do this. You keep it real tight. You go, okay, the distance from the head to this neckline is the smallest I can reasonably make it to reduce what would be the implied move up to keep my expectations low. Still going to triple digits, still going to 102. So the takeaway for me here is we are going to at least 102 based on these technicals and maybe higher. Good thing I still have 39 days to expiration on my oil calls.
I think that a little bit more exposure may become appropriate. quick review. Some of the scratch math on just simple supply demand models tells you that we're probably not heading back into the 70s anytime soon. On the pullback last few days, I was adding in the short put spreads here. The question, as always, are some of these put spreads, if I didn't get in then, could I get them in now? You're telling me that right now, today, at this very moment, the market is willing to give us a 72% probability of profit in a 70-72 short put spread where we're making better than 3-1. That's how high the vol is here, Ilya. We're talking about a move. 72 would mean clearing out the lows that we had after that nonsense BS tweet from the Department of Energy Secretary that the U.S. Navy was escorting ships through the Strait of Hormuz, which then he deleted. And then the IRGC naval commander, again, of a Navy that has apparently been destroyed, is now mining the Strait of Hormuz. No U.S. ships have escorted any tankers through there, no VLCCs, nothing otherwise. And we have 0 ships making their way through now, officially. This is going to get worse. It's getting worse. It's compounding. I don't look at the governments of the world just fired their shots. And at the start of the show, for those that are just joining in now and you're looking at my frustration, I never have my glasses off. Go look at the slides. We have 172 million barrels coming from the DOE. We have 400 million come from IEA. All right, netting it out. We can't get more than 2, 3, maybe 4 at the high end barrels per day supplemented into global supply.
And that would already be unprecedented. We've never had that much out of the IEA.
Never. 2 to 2.3, maybe max. Okay, and that includes the US. So where do we go from here? The physical flow has been disrupted. They've just given away the game that this is not going to be a short-term move. How will we know that the market's starting to observe that this is becoming more of a problem? You know, we're starting to see it today. There was a lot more steep backwardation in the futures curve here in oil prices, and it's starting to disappear. It's not just the front month and the next month that are seeing elevation. And when you make your way into the middle of the year, things start to calm down. We're now looking out in the expiries for the summer months where we're creeping up into the 80s. We're no longer in the 70s. I mean, even, we go into December right now. It was 70 yesterday. It's now 73 today. So this generates positive roll yield, because you can buy the back month contract. And if this continues, the prices should rise in theory to meet the spot price. It's also a good environment for USO as a trading vehicle ahead of something like XOM or XOP, because these futures ETFs generate that positive roll yield over time. They have to sell the front month contract, which is trading higher than the back month contract. And so they capture that $5 spread. And if the market rises back, that's how you get positive roll yield as a futures trader. And you can do that through the ETF if you're not comfortable trading CL itself. But the market is beginning, the shape of the futures curve here, it's now evolving in a way to suggest that people are understanding this is getting more serious. And so evidence 1, evidence 2, evidence 3, we talk about the wheat, the corn moves, we talk about the fertilizer stocks, you talk about the no traffic. I mean, this is an ugly, ugly, ugly constellation right now. I feel more alarmed today than I did at any point during the tariff episode. This is probably how I would have felt during COVID had I not had the joy of being on paternity leave and zeroing out my book and coming back and be like, what's going on, everyone? Why is everyone so freaked out? Oh, what have you guys been through?
I will say, there's one thing to keep an eye on. And let's put this out there now, because this is maybe how the fever breaks. We do have something in the U.S. called the War Powers Act. We also have something called the Defense Production Act.
Is it easier to turn trucks into tanks or Teslas into Patriot missiles?
It's very
different.
It's a different thing. What there is, however, is a ton of shut-in fracking capacity that's been mothballed because prices were too low. That fracking capacity is much easier to turn back on than our rotary rigs. You could turn it on. And so were there to be a free market here, who knows if it would get turned on, because those producers would look at this and go, hold on a minute now. This is going to be a period where prices are elevated for a little while. Doesn't make sense for us to turn things back on. Prices will come back down. We're going to end up losing money unless the government compels them. And if the government uses the Defense Production Act, if it uses that authority to go and say, turn on the fracking rigs, that might be the news item where everybody looks at it and goes, okay, they're serious now.
Oh, yeah, we have to wrap this up. Dollar rally resuming on a day like today where all of a sudden it's not just the dollars of the world, the Australian, the Canadian, the US dollar like they were yesterday being a little bit stronger. There is that cascading effect now where the demand for liquidity has picked up. Higher yields, demand for liquidity, not good for the metals, not good for other currencies. Your Aussie is down 0.89%. Tomorrow, big day for data.
Yeah.
Small chart here. Durable goods, PCE, plus Canadian jobs numbers, all of it and more. All eyes on oil. Oil really should just be the only thing on the calendar for tomorrow, Elliot. Just watch oil. That's all we're here about.
Yeah.
We're done. We'll be back later today, overtime 4 Eastern, 3 Central. Good luck trading. Up next, after a brief break, Dr. Jim Schultz with From Theory to Practice. See you there.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Growing up in Brooklyn, New York, in Bensonhurst, Brooklyn, where I was born, there's no social climbing of the ladder. So if your father's a bricklayer, you become a bricklayer. If your father's a doctor, you become a doctor. If your father's a hoodlum, you become a hoodlum. My dad was, he was an original market maker, let's put it that way. Only not an exchange-regulated entity. My mom was a waitress, just trying to make ends meet. My parents were divorced when I was 11. And my mom did everything, legit did everything for me. But I idolized my dad. I was a good student. I didn't want to disappoint my mom. I was boy leader of Arista and Archon, which is the honor society in junior high school. I wanted to be a police officer or an attorney. And then I realized we were on the opposite side of the street to become a police officer, but that my dad was going to need the attorney. So I wanted to be an attorney. I did go to college for 3 months. I became the best air hockey player that John Jay College of Criminal Justice had ever seen, but I wasn't learning anything, and I just didn't think I was going to go anywhere. So I had a cousin who was working on the New York Stock Exchange, and they transferred him to Chicago for a new exchange that was opening up, the Chicago Board Options Exchange. He said, hey, why don't you, stop hanging out on the street corners, come out here and I'll get you a job, maybe make something of yourself. I left on a Thursday. I started working on a Monday as a runner. I always thought when I bought my seat in 1987, I actually bought my seat the day of the crash, that there would always be a Batista on the floor of the CBOE. And I thought that was my legacy that I was going to leave to my family. And then computers came along and ruined all of that. I coached my son in football and baseball and basketball. And my dad
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Thursday edition of what it is that we are trying to get done. And I am not super confident that we are going to figure it out here today, but we're going to give it the old college try. We're going to get in there. We're going to see, maybe we're just getting started. Maybe this war is completely over, and then maybe it's just beginning. You've got to tune in before you can find out. So welcome to the show. I'm glad that you are here. If you are watching over on the Tasty Live Network, then I would bounce on over to YouTube because you can join the conversation and join the discussion here in real time and communicate with your brethren who are also watching the same program. You can celebrate, today, you can celebrate if you are a bear. You can commiserate if you are a bull, but it is a good time had by most. So hop in there, hop in the chat. Let me know what questions you have. I'll take anything you got, questions, comments, stories, and jokes. Put them all there in the chat because I love to hear it, and so does the algo. So Josh, bring us into the market, man. It ain't looking too good out there. It ain't looking too good at all. You mean S&P's down 81. Yowzers. Risk-free instrument, not exactly risk-free in today. The NASDAQ futures down 347. You got the boomers down 610. You got the Russell 2000 futures index down 40 on the day. You got bonds are down. You got notes are down. You got oil up another $8. You got UB40 is even down. Man, you got gold is down 70. You got the Hump Brothers. Oh, the Hump Brothers hanging in there. I mean, they're making up for it with a little cheese and pepperoni out the back door. Silver only down 60 cents on the day. Volatility obviously going to be up today. So volatility futures are up 97 cents. And then spot volatility, the old VIX up $1.99, up to 26. I mean, man, let's just can we take a quick little gander? Like, will they let us do it? Let's look at the VIX here. You can see that this is, oh wait, that's not right. Wait, oh, that's a weekly chart. I was like, what? That doesn't look right for today's candle. No. Let's go to the daily deal. So you can see that obviously, the other day when the VIX got up to 35 and then crashed, boom, banged all the way down to 24, that was Sunday night into Monday, obviously, with all of the oil shenanigans, which apparently this is like round 2 of the oil shenanigans, which that begs the question, is this going to be like Rocky 2 or is this going to be like Hangover 2? Because those are very, very different sequels when it comes to what happens next. But the VIX, you can see we've been living over 20. Like here. I mean, they say we're not technical analysts. They say we're not technicians, but look at these charting abilities. If we just grab a marker and draw a horizontal line, it doesn't even have to be straight, just mostly straight. Look at all the time we've spent over 20 recently. Like we've been over 20. We've been living over 20 the last few weeks. And so, man, VIX at 26, 27. This isn't your grandmother's market. And so, yeah, man, crazy stuff. And so let's go ahead, though. I want to talk about, man, we are just getting pounded today pretty much across the board. Look at Tesla, actually. Look at our calendar spread kind of pulling its way. Look at XLE pulling its way. We got a couple of things that are working, but most things are not. So most of the things happening in the portfolio, we are getting smashed to pieces. And you can see it right there. It's right there. The P&L days do not look good. The P&L opens do not look good. Like, the P&L open bros got us, and the P&L day guys are piling on as well. And so let's talk about a few things happening in the portfolio, and then I want to see where you guys are at, man. Like, where are you guys at? Where are you guys at in the situation that is life right now? Like, let me know what's going on in the markets, what's going on in your neck of the woods. I would love to know. So, all right. So number one, so MCL. No, this is the talk of the town, right? This is the thing. And I was looking at this and I'm like, oil is in play right now. Like so much, like there's so much volatility. There's so much movement. We've already got an MCL position on. I think we're going to do a little something with USO here in the next couple of minutes, but we'll do that in a few minutes just to build up a little bit of drama into the program. Let's talk about MCL and a few other things here first. But MCL, you can see that we are inverted on our strangle. So we're inverted on our triangle. Josh is telling me about his peanut butter Nutella superset, which is a pretty good superset. I mean, let's be real. Like, is it banana plus natty? No. Is it tuna fish plus applesauce? No. But it's solid. It's solid in its own right. A little peanut butter Nutella, that's kind of a public play. And so not really our tea. But you do you there, Josh. That's 100% you. And so we are inverted on this strangle for MCL. And this is a do-nothing situation, in my opinion. Once you go inverted, this is the final destination. Like, once you go inverted, this is the final stop on the train tracks, as I've always said for many, many, many years. You can tinker around with, widening out the inversion, narrowing up the inversion. Like, you can really kind of try to fine-tune this thing around the edges. But, man, it'll make your head spin trying to keep track of the debits and the credits and how it changes, your loss dynamics, your profit dynamics. And it's honestly, in my opinion, not really worth it. Like, you've gone inverted, you've controlled your directional bias. I think by and large, you have kind of, by requirement, reached a do-nothing situation now. Now, you may indeed end up taking a loss on the position. This most likely is not going to work, and we're going to end up bleeding some hue of red. I can't give you the exact hex code, but it's going to be some shade of, maroon, maybe a little, let me think here, magenta? Nah, that's not really red. That's kind of like pink. Yeah, maybe maroon, maybe fire engine red, maybe kind of a lighter shade of red, but it's going to be some shade of red. And so that is the situation we're in with MCL. We need it down a little bit, and, it's all up to King Trump at this point. Like, if King Trump decrees it to be so, then let it be so. And so we need oil a good bit lower. So let's see if the king can come through. I kind of have my doubts, to be honest with you guys. So that's MCL. So MES and MNQ, it's difficult to do nothing on a day like today. It truly is. Right? I mean, it's hard with oil. It's also hard with MES and MNQ because you see MES down 88 right now, NASDAQ almost down 400. And so it's like, man, like these are really getting hurt. And looking at these, these two short puts, you can see like we're down a couple $100 on MES. We're down a few $100 on MNQ. And it's like, man, there's got to be something I can do here. Anything. And there are things you can do. But again, in my opinion, in my humble professional opinion, when the strike is out of the money on a short put, man, doing nothing is a very, very strong strategy. And you're not doing nothing because you don't know what to do. Like, you're not doing nothing because there are no other alternatives. Like, you're actually actively choosing to sit on your hands. That's very different. That's a very, very different selection and a very different choice. And so here, we're still out of the money. You can see MES, it's at 67.43. You've got the strike at 66.75. And so we still have 65 to 70 points of buffer left. Now that could get chewed through by the close today, right? Again, it all depends on what King Trump has to say. So that could be gone in the blink of an eye, but still, that's 1%. I mean, it's 1% of the S&P 500. For NASDAQ, we've got about 500 points. So we've got about 2% left. So there's about 2% buffer between where the stock is and where the strike is on the strategy. So it's hard to do. It's difficult to do. But I really think doing nothing is the move right here. And again, remember, guys, doing nothing is easy when everything is working. Like, doing nothing is easy when it's all strawberries and sunshine. It is all tuna fish and applesauce. And it's like, man, this is just amazing. Like, this is just incredible. And I think that's the first time in history that tuna fish and applesauce plus amazing were said in the same sentence, separated by a semicolon. But here, when you're getting hit and you're taking heat, and you're kind of like, all right, this is kind of difficult. That's where doing nothing really shines, in my opinion. That's where the strategy really begins to sparkle. So MES and MNQ, we're going to do nothing for all those reasons, and we move forward. So MES and MNQ. So there you go. And then yeah, man. I mean, going on down the list here, it's like AMD getting crushed, Dell even getting crushed. Dell's up today, which that doesn't make any sense. I mean, obviously, when you think of a flight to quality, what do you think of? Gold? No. What do you think of? Bonds? No. What do you think of? Cash? No. You think of Dell, right? You're a little shocked they're still in business, but you think of Dell. You think of DELL as a safe place to park your cash with Dell up $3.55. And so there is your Dell commentary. So we're going to do nothing on there too. I mean, we've already worked so hard to get in this position. And so that is going to be that. So, all right, but going on down the list. So look at Tesla. Tesla, we're up about 10% on the position. And this is a calendar spread. And remember, on a calendar spread, 10% is like bare bones minimum. Bare bones minimum for the profit objective I'm looking for in terms of what I paid for it. So I bought this guy for $10. It's up to $11.15. So I've made a little over 10% at this point. Now, I'm not going to overstay my welcome. I'm not looking to get long in the tooth with this position either. We get to 15, 20%. I'm looking to ring the register. I'm going to say 20%, about 20%. Like, I am looking for an off ramp. Like, get me out of this position. It has done what I have politely asked it to do, and it's time to move on, in my opinion. But right now, we can sit tight. There's no reason to do anything just yet. And then XLE. So XLE, we're actually at 50% of max profit. Believe it or not, guys, but we actually have a winning position in the portfolio right now. Like, it's really hard to see. You really kind of have to squint to kind of make out that XLE position going through the sea of red, like going through like all this cash that we are hemorrhaging across the board. There is this lonely little XLE short put that actually worked out okay. And that makes sense because obviously it's an energy play and all the energy plays are working out quite well right now because oil is up. And I'm sure what is natural gas doing these days? This is the artist formerly known as Natty Light Ice. This is what brought, look at it up 1.24% today. So UNG, this is what brought Natty Light Ice to the show. And it obviously conjured up all these nostalgic memories of, my time in college. And it's like, oh yeah, 30 pack for $3. Man, I'm in. Like, I couldn't possibly be more in. And so UNG up over 1% today with all the energy doing pretty well across the board. That makes a little bit of sense. It's obviously not going to be, totally related to oil and like an XLE or what have you, but there's obviously a little bit of overlap there. And so for XLE, we're short of 55 put. You've got the stock at 58. I don't even think I can mess this one up. I mean, we sold this guy for $221 and it's currently marking for $1.02. And so there you go. So we're right at about 50% of max profit, thereabouts. And I think we take it off. Let's take it off. Let's kind of free up that capital, and let's see if we can't do a little something in USO, because there's really nothing else going on from an individual stock standpoint or like an economic data point standpoint. I think tomorrow, let me think. Tomorrow we've got PCE. I think we do have PCE. And then we also do we have JOLTS tomorrow? I think we have JOLTS tomorrow at 10 o'clock. And I'll just say this, guys. I've been studying the markets now for about 20 years. This JOLTS print that's going to drop tomorrow, I've never seen a number more important. I have never personally or professionally seen or studied a number that has the potential to be as impactful as the JOLTS print that's going to come out tomorrow. Now, is it made up? Of course. Is it all just imaginary and fictitious? Absolutely. But man, this thing is going to completely change the trajectory of all the financial plans you have for the future. So I would make sure, do PTO if you got to do PTO, do an early lunch if you got to do an early lunch, whatever. I would be at your terminal at 10 o'clock tomorrow. And so XLE, let's go ahead and let's go ahead. It's always hard to do those with a straight face, but sometimes I can do it. It's all right. So we closed out XLE. Obviously, it's not going to mean anything, but it's just it's still fun. So XLE, we're out for $1.04, and by not mean anything, I mean I've never seen anything more important. So all right, let's go ahead. Let's go to USO. Thank you, Josh, for JOLTS is tomorrow, so thank you there, Josh. All right, so USO up $10 today. That makes sense, right? I mean, obviously, you've got oil is ripping to the upside. I mean, everything is ripping to the upside. So I'm kind of thinking, man, look at the IV rank, 114. So let's take 2 seconds, by the way. Oh, this could be a good episode of Calculated Risk, which, oh, by the way, man, let me think. What is tonight? I'm always a day off now, and it throws me off. Oh, yeah, tonight is my hedging strategies one. That's going to be good. But the one that I just shot, because of my daily workflow, it takes me a while to put those together because I think through what information I think is important, what information I want to leave out. I kind of want it to have a certain flow and what have you, and I got to shoot it and whatever. So it takes me a while to put those guys together, but I typically try to do those in the morning, like before I start getting ready from theory to practice. And so, I'm looking at the market open, I'm seeing how things are going and what have you. And usually done training for the day. And then I'm like, all right, let's go ahead and let's do some calculated risk. And so the episode, what did I do today? Man, I can't even remember. What was today's episode? Oh, yes, man. So tomorrow's episode, the episode I shot today, right? Because I'm a day ahead or a day behind, whatever. We did a little portfolio theta ditty for you guys. And so I've been asked about this a lot recently in the chat, people emailing, a couple people came by the house. People want to know, like, Jim, these portfolio theta numbers, like, how are you coming up with these? Why do they matter? Like, what are the ranges? Could you fully explain kind of what we're looking at? So that's what I shot today. So that will air tomorrow. Now, of course, you got to watch tonight's. Like, you can't skip forward to tomorrow because I still need that watch time. Like, your boy still needs that watch time tonight. So I need you guys on multiple tabs on the machine. I need you guys on multiple machines. Just have that guy running on a loop, right? Just every once in a while, go in and kind of shake the mouse so that the algorithm thinks that a human is actually at the terminal. And so we can outsmart the algorithms. We just got to get a little creative and kind of get a bit clever. And so anyway, obviously watch tonight's on the hedging strategies, but then tomorrow night, when you see the black polo with the little white, the white stripes on it or whatever, that's going to be the portfolio theta ditty. But anyway, I digress. So USO. All right, let's do it. USO, where are we at? Let's go ahead and, man, I see you guys in the chat. Look at you guys, man. E-Media is here. Man, Steve Aguilera is here. Griffin Jones, Ramsey, Reggie showed up. Man, Reggie, what's going on, my friend? Man, Sam L, Seth Ellis is here. Ash Finn is here. Man, David, 61, 891 is here. And Margin Walker, Sergio. Man, I might get to as many of you guys as I can in a couple of minutes. Let's go to USO, though. Let's go into the trade page. Let's go to April. 36 days to go. 45 days, 35 to 45. I'm kind of warming up to maybe like 35, potentially being as good as 45 or maybe even a bit better when you start looking at like an out of the money decay curve and you start thinking about like where it could potentially be, quote unquote optimized, which I think it's very difficult to optimize anything in the world of trading because it is always gimmies and gotchas. But I'm like, I don't know, man, anywhere between 35 and 45, I think would be, kind of where you want to live. Anything beyond 45, are we leap traders now? Like, are we long-term investors now? Like, I don't know, man. That seems a little bit too much for my liking. But 36, we're right there, April. This looks pretty good. So look at this expected move, man. This expected move in oil for the next 36 days is plus or minus $35 on a $118 product. And so the implied volatility is over 100%, which you can see right there. The IV rank, oh, this is what I meant to get into. The IV rank is 114. So what does it mean when the IV rank is over 100? Well, if the IV rank is over 100, that simply means that the current implied volatility, like right here, the IV rank is 114. What does that actually mean? That means that the current implied volatility, which you see is over there in that magenta circle on the right-hand side of the screen, of 116%, it is 14% higher than the previous high over the last 12 months. So that's what that means. It means it is higher than its highest point over the last year by 14%. That's what an IVR over 100 means. Now, the same, logic can be applied if IVRs were negative. So if I looked at an IVR, let me see, can we find a negative IVR? I think it's going to be hard to find that right now. But let me take a quick little excursion. Like, this isn't going to be a multi-week, multi-month, multi-year war. Just a quick little excursion. Don't even worry about it. But if I sort by IVR, yeah, we don't have anything negative. And so I was afraid that would be the problem. But anyway, if you have an IVR that's negative, that simply means that the current implied volatility is going to be lower than the previous low over the last 12 months. Like, over the last 12 months, what was the lowest implied volatility? Okay, if I'm looking at an IVR on that stock and it's negative 10, that means the current implied volatility is actually 10% lower than that previous low. And so you're kind of going outside the boundaries that have been set for the previous year. That's what an IVR greater than 100 or below 100 means, and that's what we see here in oil. And so if you're a premium seller and you don't mind soiling some underoos here and there, I mean, USO, this is the time. Like, this is going to be the time to sell some premium. So let's get in here. We got the underoos on subscribe and save, man, so we'll be all right. Let's sell. I mean, what if I sell like an 86 put? Yeah, okay. I mean, buying power is $2,700. That's about 8% of the account or thereabouts. Yeah, okay. I mean, the markets are a little bit wide. I'm a little bit surprised at how wide that market is right there, but we'll still give it a shot. We'll give it a go. We'll see if we can get filled. So an 86 put, let's go to the call side. Grab about a 12 or 13 delta on the call side. That's where the premium's really going to be juiced up. Man, look at that. You can do an 86 put with a 215 call. Wow. Man, that's crazy. Buying power, okay, buying power is about 3,000. That's about 8.5%, 9% of the account. We got about 35,000 these days because we had a decent year last year. So that's about between 8 and 9%. It's a little bit above where I typically like to live. I mean, I'm typically 3 to 7%, I would say. But it's not that crazy. We're not talking about this 15%. We're not talking about this being 20%. I mean, we're talking about a rounding error based off of the upper end of that range from a position sizing standpoint. And it's not an individual stock. Now, there is a lot of geopolitical risk in this asset without question. But still, I feel like the movements are going to be smoother than they could be with potentially like a Zoom from 2020, a GameStop from 2021, basically, NVIDIA from any one of the last 10 or 11 years, right? And so even though oil is in play right now, I actually think, we have so much room on both sides. I mean, look at this, man. We have 100 points between where the stock is now and the top side of the call. And I mean, I would venture to guess if USO goes from 118 to 215 in the next 36 days, we're going to have much bigger problems than my in the money strangle. Like, we're going to have much bigger fish to fry than me getting tested on the call side on this USO short strangle. So let's give it a shot, man. Like, let's give it a shot. USO 86 215 strangle. If you're listening to the show in the audio only version, this is what we're doing, a $5.37 credit. The buying power effect is about $3,000. My pop is 78. My P50 is 86%, of course. My delta is pretty neutral, negative, just under -1, so very neutral. Lots of positive theta, and maximum profit is credit collected. Maximum loss is negative infinity, which you would need oil to print positive infinity for that to happen, which I checked Polymarket this morning. That's only about an 8 to 10% probability in the next 36 days. So let's do it. Let's give it a shot, and let's push it out. So this is USO. And then I think I'll see where you guys are at. And I see Josh he hand delivered. Josh hand delivered a surprise and delight to me. Man, that's some good stuff. That's some Amazon Prime surprising and delighting. Man, I really appreciate that there, Josh. All right, got filled at 528. So there you go. All right, so Josh said, thank you there, Josh. I appreciate you. Josh says that A. Wills says, What is a good way to figure out when to increase my contract size? I'm in a portfolio margin account. How many contracts should one trade? Okay, this is a great question. And I don't think it matters whether you're in a portfolio margin account or a regular account. When it comes to your sizing, it all comes down to your position sizing. So when it comes to contracts, I should say, to be even more specific, it all comes back to your position sizing. Like it all comes back to, capital allocation per position. Now you have to understand that in a portfolio margin account, which I don't have here, and I don't have too much practical experience with portfolio margin accounts. I mean, I kind of leave that for the Shooter McGavins out there. So congratulations there, A. Wills. You are certainly one of those. But one thing I do know is it's going to shrink the buying power that you need per position. Whatever the numbers are, like what would cost a commoner and a peasant like myself, $5,000 or $7,000 in buying power to hold may only cost you $3,000 or $4,000 or $5,000, right? And so you're going to get some buying power savings. And so here's the tricky part with that. If you're in a portfolio margin account, I would actually, and I'm just giving you this kind of stream of consciousness, I'd have to really, understand the inner workings of a PM account a little bit more fully to give you, like the perfect answer here, but I think this will get you going in the right direction. I would actually, contract size is irrelevant. Contract size doesn't matter. It's all about buying power requirement per position. But instead of being 3 to 7% for undefined risk, I'd probably be like 2 to 5%, because you have to account for the fact that the same position, right, with the same notional risk, it's going to cost you less in buying power than it would someone else that doesn't have portfolio margining. And, a lot of these suggestions that we have, including the position sizing that I'm talking about right now, that is relative to a regular margin account. So not a portfolio margin account. And so if I'm 3 to 7% regular margin, maybe I'm 2 to 5% with portfolio margin, right? Regular margin, an ES contract may cost me, 6,000, 7,000. SPY contract may cost me 6,000, 7,000, 8,000 to hold, but in a PM, it's only 4,000, 4,500. The tricky part with that, as you can probably see where I'm going with this, you can very quickly find yourself over leveraged very, very fast. And the next thing you know, your beta weighted deltas have exploded. The next thing you know, it's like, all right, how much leverage am I holding relative to, the overall market? Which, oh, by the way, man, we need to calculate a risk on this too. This is where another great checkpoint is. So you've got the position sizing, right? I would have some kind of fudge factor in there to reduce the range down to some level, right? So again, just off the top of my head, going from 3 to 7 down to 2 to 5, I think would probably make a lot of sense as a good starting point. There needs to be some kind of discounting mechanism for the buying power effect to account for the fact that you're getting so much margin relief. Okay, but here's another really, really good checkpoint. What kind of portfolio delta do you want to hold in your overall portfolio? Like, what kind of directional bias do you want to hold? Like, what are you comfortable with? Whether you're long, whether you're short, obviously if you're neutral, you want to stay somewhere neutral. And so, but if you're long or you're short, you probably have some idea of how long or how short you want to be. And somebody asked me about this just the other day, but I'll point you to the same resource. There is in the portfolio management crash course that's on YouTube, in the very beginning of that crash course, it's right there in the playlist. So you can go ahead and check that guy out. Like, don't do it now because I need your watch time here. But when this is over, when the trading day is over and it's the evening hours and you're wanting to impress your wife or wanting to impress your husband, like, hey, cozy up to a little portfolio management crash course on the tastylive YouTube channel. I mean, is there a better option? I mean, sure, you could go notebook. You could go, 10 days to lose a guy, whatever. No. You need a portfolio management crash course on the tastylive YouTube channel. The very beginning of that, I'm going to talk about portfolio delta, and I'm going to show you a way to calculate, what numbers might make sense for you. Well, if you had that as almost like a checks and balances against your position sizing, that's going to really help you understand, all right, am I over leveraged? Am I under leveraged? Am I at a good spot? And so hopefully that helps you there, A. Wills. Very good question. Thank you, Josh. That was an excellent question to grab right there out of the thicket. And so I appreciate you, my friend. And then I'm going to surprise and delay somebody else. Man, look at RML is in the middle. I see RML's in the house. What's up there, RML? RML says, yo, Dr. J, how much cash we burning today? Man, I don't know, but it's going to be something. I mean, I just did a strangle in USO. I mean, that's got to be good for a couple honeys, probably by the end of the close today. Like, I would imagine there'll be a couple of Benjamins that, I can already smell the smoke in the air. Can you? I mean, it's so strong. Like, the smoke is so potent, it doesn't even matter where you are. I mean, Ordenu is smelling them from overseas. I mean, my man is out there in Italy, and he knows what's going on. And so, so thank you there, RML. I appreciate you. But let me go ahead and let me see. Well, I'm going to surprise and delight somebody at the very end just because this is funny. You guys always get me, man. Always. Griffin Jones says, Dr. Jim, I play the course on my earbuds as I sleep. Oh, that's such a perfect compliment. Oh, that's amazing. The troll is in there. Like a little bit of a compliment is in there. Oh, it's so perfect, Griffin Jones. Nicely done, my friend. You get a B-. That's really, really, really good stuff. And so, let me surprise and delay somebody else near the end. Here we go. Rodrigo near the end. I mean, we're just surprising and delay. We might do surprise and delays the whole show. I don't know. And so Rodrigo says, Dr. Jim, what do you think of my 615, 635, 705, 725 SPY Iron Condor? Man, love me some Iron Condors. Let's go to SPY, which I'm being sarcastic when I say that. It's not my favorite strategy, but you guys know that. I mean, I've said that on the show many, many times before. But it's a fine strategy, of course, to play the market from a neutral standpoint, but you just, have a lot of friction and all the things I've talked about. But let's take a look at it. I mean, 615, he said 49 days to go. All right, so the end of April. So 615, 635. All right, let's do it. 635, you're selling at 635, you're buying at 615. And then you're going on the other side. You've got hang on. See new comments coming in. It's kind of messing me up. 705, 725. Because I'm near the end. I used to be near the end like this. 705, 725. Okay, it's probably gonna be a little bit low. Yeah, it's okay. It's all right. I mean, 650 in credit. You're basically risking 2 to make 1. I'd like to collect a little bit more, Rodrigo. But this is not bad. You're not too far off the mark. And I don't love Iron Condors because of all the friction, and I think it can be more challenging to make money than people realize. But when you start getting out to $15 wide, $20 wide, and even wider, now it's going to start to behave a lot more like a short strangle. Not completely like a short strangle, because to get that, you need to have a short strangle on. But it is moving in that direction, so I do like that a lot more than like a $5 wide or even a $10 wide Iron Condor. But if you're a brand new trader, by the way, love Iron Condors. All kidding aside, no sarcasm, because you need to learn. Your goal right now is not to make a bunch of money, believe it or not. Your goal is to learn. And for a new trader, oftentimes they're surprised that you can trade the market from a neutral standpoint and make money. Like you can trade the market without having a directional bias and be profitable. They're kind of blown away that that's even a possibility. Like that's even a practical outcome that you can reach. And Iron Condors show you that that is absolutely, a viable pathway forward through the forest. So I would maybe bring the strikes in a little bit there, Rodrigo, and collect just a wee little bit more. But I think you're on the right track there, my friend. But now let's go back to the beginning. Where are we at? Man, I see you guys in the house, though, man. I see Superstar in the house, man. You guys are doing some work on this algo, man. Look at this. And by the way, hit the video with a like if you haven't done so already. And subscribe to the channel if you haven't done so already. Also, all those things help us out a ton. So what's going on there? I see you guys in the house. Jay's 2 Sats in the house. Brett Green in the house. Man, Wolf is here. Dr. Jim, let's go. What's up, my friend? I appreciate you so much. David, 61891 says, are you considering closing your MCL strangle? It could get hairy. No, I'm going to sit tight for now. I understand. I mean, obviously, you can see it right here. I mean, the P&L Open Bros, I mean, they're screenshotting this. Like, they've got this guy saved in the old camera roll, and they're not going to let me forget it. But, for right now, I'm actually not too far away from this guy being in a much more stable situation, right? 62.5 to 87.5. And I understand that, like right now, it's like, oh man, it's going to 120, it's going to 140, whatever. And it might very well go to those levels. Like nobody really knows. But I'm going to sit tight. And this is the benefit of position sizing, right? You give yourself the flexibility, David, to whether it's this strategy or any other strategy, to say, all right, this is what I want to do. I'm clear-eyed. I'm clear-headed. I can look at this objectively. I'm not emotionally charged up with every tick and just emotionally overloaded with every point, which we've all been there, man. We've all been in the spot where it's like, man, the next 10 points on the NASDAQ, like they're everything. Like they're literally everything. And that's just not a spot to be in, right? It's just not a fun place to be in because you can't really think clearly and you can't do what needs to be done. Doing what needs to be done could be nothing. Doing what needs to be done could be something, but you just want to be in a position to where you're like, all right, like it stings and it hurts, but how do I want to handle this? And for me right now, I'm gonna sit tight. And if MCL prints 105, 108 tomorrow, right, over the weekend, Monday, whatever, I might be kicking myself for staying in the position, and that's the risk that we take, of course. And so those are my thoughts there, David. Hopefully that helps a little bit. Margin Walker, what's up there, Doc? Or what's up there, Margin Walker? Margin Walker says, what's up, Doc? They're trying to scare the children, and it looks to be working. Yes, apparently it does. But you never know, man. Like right now, I mean, the metals are really dropping. Gold is under 5,100 now. Where's silver at? We're down to 84. Yeah, it's just under 85. It's hanging in there. Silver is holding up surprisingly well. Like when you look at the rest of the tape, right? I mean, even S&P is down over 1%. NASDAQ down, getting close to 2% now, right? The Boomer is even down 1.5%. Russell down 2%. Gold is down over 1.5%. And silver down less than 1%. That's pretty surprising. I don't know what that means exactly, and I'm quite convinced neither does anyone else. But it's just interesting that silver is kind of hanging in there. It's kind of got a little Dell in it in terms of a flight to quality today. But Ordenu's in the house. What's going on there, Ordenu? Hello, Dr. Jim. The other day, I tried to sell a short put on MES, but I just got very scared of the $35,000 max loss. Can you explain how to do it? I am worried I get caught in a COVID 2008 event. Okay. Great question there, Ordenu. Great question. And here, I'll even bring one up so you can see a real-time kind of example of, an MES put. So you go to MES, go to any cycle. I already have one on. I mean, we can look at the one I have on, but I want to pull up a new one in the trade bar just so that I can see the same thing that you see. Right there you go. Maximum loss, 32,000. Right? Yeah, I mean, that can be kind of spooky. That can be a little bit scary, no question. But let's make sure we understand exactly what that means. That doesn't mean you lose 32,000 if the market drops 10%. That doesn't mean you lose 32,000 if the market drops 20%. That doesn't mean you lose 32,000 if the market drops 30%. That number literally means you lose 32,000 if the market goes to zero. Zero. Not 20%, not 40%, but 100%. And so, generally speaking, I think we can probably take that off the table in terms of being a practical outcome. Now, that doesn't mean 10% is not going to sting. It's going to sting. That doesn't mean 20% is not going to sting. It's going to sting. Right? So I'm not trying to turn this into something it's not. But let's make sure that we understand what that number technically, theoretically, represents at the maximum point. That is market zero. There is no more market. Market's gone. It's over. It's like market. What market? There's no market. Right? That's maximum loss at 32,000. Okay. So now when you start thinking about, okay, how should I think about this then? Well, a couple of things. Number one, remember that MES is worth 50 shares of SPY. And so if you're comfortable in like your long-term portfolio, let's say, holding 50 shares of SPY, a short put in MES is notionally no different than that at its maximum point. It is notionally no different than 50 shares of SPY at its maximum point. Now, what do I mean by its maximum point? Well, this is the second part. When you buy 50 shares of SPY, you're basically, I mean, you're in it from the beginning. Not that you're not in it with an MES put, but you're in it in terms of you're going to feel the weight of the move one for one, and you're going to feel the weight of the move fully from the very beginning. If it works, it's going to be great. If it doesn't work, it's going to be not so great. And you're going to feel that from the very, very beginning. When you sell a put like the one that I have queued up, this is only a 35 delta put. So when the position first goes live, it actually only feels like 35% of its maximum potential notional value. So if the maximum potential notional value is 50 shares of SPY, and I sell this put, and I'm actually only going to feel 35% of that, this guy is really only the equivalent right now of holding about 20 shares of SPY. And so by and large, when you think about it through that lens, hopefully it can help you to maybe start to, step out on the branch a little bit as you're comfortable and as you're ready, of course, but do some things in MES, maybe do some things in MNQ. These are relatively small positions, especially when you start thinking about what you could be doing in ES or even what you could be doing in SPY. And so this is only the equivalent of about 20 shares of SPY with its maximum value only being 50 shares of SPY. And the maximum loss point, that's only going to happen if it hits zero. And I'm going to say that's not likely to happen, but everybody has to reach their own conclusion there. So hopefully that helps you there, Ordenu, and maybe some other people that are tuning in. And so Sam L's in the house. What's going on there, Sam L? Dak reporting from North Africa. What is up, my friend? I think I said South Africa the other day, but I had the Africa part right. I took the day off to enjoy a sunny beach day. Quick question, do we still have a market today, man? I don't know what this is. This is a free for all, for sure. And so, EME S&P is down 84. Look at this, a little bit of a rally. They just rallied back 8 points. Don't even worry about it. They're going to be unched by the end of the day. Don't even worry about it. And by that, I mean down 150. It's pretty much in the cards today. And so Sergio's in the house. What's going on there, Sergio? Appreciate you. Jared Kramer, what is up? Jared Kramer, it's still kind of weird to me that we make these dramatic moves in the first 30 minutes or overnight and then just stay flat all day. We've tried the last couple of days, like the VIX is at 15, not 25. Yeah, I agree. I agree. The intraday moves have been fairly muted for a 25 to 26 to 27 VIX. Like, I would really expect there to be a lot more whippiness, just a lot more back and forth. It could be up, it could be down, it could be both, right? But a 26, 27 VIX is like, you should see some movement. Like, give me a little something to just kind of, clear the old sinuses. But man, we've generally been doing not very much intraday. I agree with you 1,000,000%. And so let's see. N1C's in the house. What's up there, N1C? And then A Wills with the contract question. I hope that really helped you, A Wills, in terms of thinking about position sizing, maybe using your portfolio delta as a checkpoint. I think that can make a little bit of sense. And so the Preston's in the house. Dr. Jim, you're the king, man. I appreciate you. JP Morgan, what are we doing? What are we going to do? Thank you for all that you do. JP Morgan is tomorrow. Tomorrow? As my voice cracks a little bit. No, JP Morgan's like, next month. We're going to wait on JP Morgan. JP Morgan, what are we going to do? Did you maybe mean something else? Because JP Morgan, I'm going to wait. I mean, I'm not necessarily like an avid JP Morgan trader to begin with. And so I'm going to sit tight, maybe do something for earnings, but I'm not going to do anything today. They're getting hit today, but so is everything else. So it doesn't really mean a ton. Brett Green, we need Dr. Jim, man. I appreciate you. Need might be a bit strong of a word, but thank you there, my friend. I appreciate you so much. Samuel, are we starting to sweat that oil position? Nah, we're good. And by that, I mean, I look at it pretty regularly. Good news. The VO2 Max is training. Oh, the VO2 Max training prepared me for this. Yeah, you start doing those Norwegian 4x4s. Get you a little Dr. Rhonda Patrick training style, so maybe some Huberman stuff out there. And I've done the Norwegian 4x4s a few times. They are brutal. They are brutal. Like, you'll be 75 seconds into a sprint, and you're like, I can't feel my legs. I can't even feel my head, and I'm not even using my head. And I got 3 more minutes to go. This is not good. And so, but thank you there, Samuel. Yeah, we're ready for this, man. We're going to be all right. So Jared Kramer, Dr. J, show us the way on Adobe. Oh, we're doing Adobe now? Man, did we make money on Adobe last time? I think we did, didn't we? Adobe's not tonight, is it? It is tonight. Wow, I don't know. Should we do a little something in Adobe? Is Adobe going to be the thing that saves us? I mean, I don't know. Thursday into Friday butterfly? May have to partake a little bit here. I think is Adobe going to be the thing that saves us? I think it could be. I mean, if Dell can be the flight to quality, why not Adobe? Just using common sense. 275, 290, 305, butterfly? Sure. This could be what? 275? 266? I was pretty close there. I mean, let's do it. We're only risking a couple bucks to make potentially a lot more. And a Thursday and a Friday butterfly is amazing because you wake up on third base. Like, you wake up, you're like, I'm already almost home. Like, this is pretty awesome. Now, obviously, if the stock goes down, like, you wake up on third base, but you're on the wrong baseball field. And so that becomes a bit of a problem. But the general idea is not too bad. 260, yeah, let's do it. 268, I like it there. That was Jared Kramer. Yeah, thank you there, Jared Kramer. And I see you for the algo. Man, look at you. I appreciate that so much. And the algo appreciates it too. The algo's still not exactly sure how to handle it, but it'll figure it out. And so Margie Walker, Dr. Jim, Dell is the only stock up today. I know, it's crazy. I sure can't pick them. Another bountiful learning opportunity awaits. Yeah, don't worry about it, man. It's all good. No, that was my trade. You had no part in that whatsoever. And so, no, it's going to be fine. It's going to be good. And this is another, I mean, the good thing about this, Margin Walker, and we'll see what happens, right? I mean, I don't know. But this thing shot up to the strike immediately, and we went ahead and leaned immediately into the do-nothing strategy, right? We went right to our go-to strategy. I'm not going to do anything. This will be quite a learning experience if Dell calms down. If Dell calms down and it actually pays off to have leaned into the do-nothing strategy so quickly, that would be quite a testament to just remembering that, all right, I've sized correctly, it runs up to my strike right away. I can sit tight. I don't have to do anything necessarily. Now, I can, of course. I can be more aggressive with delta adjustments and what have you, like some of my own brethren on the network like to do, and I think that's totally fine. But there's multiple ways to kind of, blaze your trail forward through the forest. And so just, a couple of things to think about there. But man, let's see. Sam L says, how was the treasury hunt gift for our best intern? Oh, it was amazing. So you know where I put it? So I put it. So I go all over the house. Like they go inside, outside, up in the attic. Like it's all over the house. But this time I put the gift in my ice bath because my ice bath is actually empty. I have to clean it and refill it and stuff like that. And so it's in one of those weird spots where it's actually empty right now and we have to refill it. And so I put it in the ice bath. And so it was super fun. I can't remember what the clue was at the end, but they always rhyme and we always have a good time with it. And so, yeah, she had a Barbie in the ice bath and we all had a good time with it. So thank you for asking and remembering. That's really thoughtful. But yeah, it was super, super fun. But man, Joe YQ is here. Man, look at this. Seth Ellis is here. Man, Brian is in the house. Man, Adam Armfield is here. Man, I appreciate you guys. I can't believe it's over. Superstar. Look at E-Media. Man, I see, who else is here? Man, look at this. I see everybody. Reggie's here. Man, I appreciate you guys so much. Base 8's even here. Look at you guys. I appreciate you guys. But I got to go. I got to get you guys to Tim. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University, #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago, #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign, #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Hello, everybody. Tim Knight here, and it's Thursday. Another exciting day in the market. Amazing stuff going on. Very chart-friendly market, as I keep saying. I'm always saying that. What exactly do I mean? Kind of pretty easy to guess. It's just how compatible is our classic trading techniques with what's going on around us. I don't really use technical analysis per se. I don't use indicators. I don't use stochastics, RSI, MACD, on and on and on. It's boring. Plus, my mind is visual, not mathematical. I like pictures. And the kind of charting I do is really your classic Edwards and McGee, mid 20th century, old school, give me a ruler and a pencil kind of charting. And there are times that it doesn't work so good. When there are distortions, like trillions of dollars being added to the market from the federal government, that sets up like a funhouse mirror effect where you can't really tell what you're looking at or what you're dealing with. Times like that are great for most people because most people just hurl cash into their spiders or their cubes and in their 401k and it just goes up and they think they're geniuses. It just goes up. That's what happens so much like 2020, 2021, that kind of thing. But in a normal market, when trillions aren't being hurled at it, it is chart friendly. The charts work, support, resistance, trend lines, patterns, shapes. And that's what I sensed we were getting before this war started. I mean, really for most of this year, it began to feel better and better and better. And, the war helps on the bearish side, but it's not required. And what's been particularly encouraging, and I've mentioned this on some prior shows, is even on days when the market is going up, because the administration is saying things are going great, if the shorts still perform, that speaks well to them. That speaks well to their selection as portfolio components. Because, on a day like this, any ding-dong can make money on the short side because everything's falling. But if they're well chosen, then it can be robust even in the face of green. But today is not green. Today is, with the exception of crude oil, which is up double-digit percents. It's a very red day, very profitable day, and I'm just keep my arms crossed in front of me because I see no reason to lighten up. I came in pretty heavy, over 200% committed across my portfolios, so that worked out. But I don't see any reason to say that's that, and just a mission accomplished, and we're done. So let's jump into the charts together and see what's cooking out there. And those of you who watched me yesterday saw my old, this prop about that. Well, shortly after the market closed yesterday, it cracked. I guess because there was this statement from the president about we're out of targets to hit. Well, you know what? The other side isn't. They got plenty of targets. And, it's just sort of like two-dimensional thinking. So when they started hitting ships, because first the number of ships they hit in the Strait of Hormuz was 0, and then starting yesterday it's like 1, 2, 3, 4, 5, 6, and so people started freaking out. So that the support that I was talking about, hitting my palm yesterday, after you and I saw each other, that cracked, and as God intended, things started falling. So now we've got a market just down about 1.5% or so. So here on the diamonds, we are approaching the lows we saw on Monday. And it is possible that tomorrow, Friday the 13th, we could cut below those lows. I have a ridiculous number of positions open now, 50, one for each state. And I'm just tightening up the stops along the way. Here's IWM, the small caps. And this has a cool little topping pattern and a failed trend line. And there's a lot of similarities among the charts in terms of top distribution tops, busted uptrends since Liberation Day, which is about a year ago. And the sort of peak this week was on Tuesday, because you'll recall when the week opened, people were very scared and it was very red. So futures were down very hard on Sunday night, and they spent all Monday recovering because there was this notion broadcast, which is that we are done. War is over. We win. And that peaked on Tuesday and started to get a little wobbly yesterday. Now we're falling again back toward the lows we saw on Monday. But the chart itself, you don't have to worry about any of that noise because it's much more plain where the failures were and where the distribution top was. The spider itself, which is much bigger than those other two, has finished its distribution top. Now, we've been here before to some degree. We were here on Monday, but we closed well back into that pattern again. It seems almost certain that we're gonna close below this zone for the first time this year, and that's pretty cool. And you can see as we back up, that's a very clean top. And I've tried not to get too as I've made mention before, my own options trades do not expire before June. And even the new options I'm buying and been buying today are September expirations because, I think the market has lots more downside, but it's not like it'll all be down tomorrow. No, I want to give myself time on these. And so these are somewhat in the money, long dated options. I just don't monkey around with the 0 DTE type stuff. For one thing, I feel I'm trapped because I can't leave my screen and that sort of thing. So things are breaking down nicely, but with a long-term view. There hasn't been, you get these counter-trend rallies. We can see quite plainly here. Monday was a monster of a counter-trend rally. And just as yesterday, we were pounding against support, and that finally broke. At the moment, we're doing the same thing at a somewhat lower level. The really interesting thing, and those of you on Slope saw my post this morning on this, is that we rallied last night and perfectly touched the resistance. So the aforementioned cracked, we fell, and then we retraced, and across the board, they came right up to the base of that completed pattern and then resumed the fall after that. So again, chart friendly is working very well in that. The times differed a little bit. Like for whatever reason, the Dow 30, the YM, that retracing completed yesterday, whereas some other items completed a couple hours before today's open. But the patterns are all there, and they look something like this, with the top going months and months and months, and finally a failure today. On the cubes, these are also down. Like I said, everything's down about 1.5%. This is, as I said yesterday, the kind of the exception in that this pattern is not complete. Yesterday we were right in the middle. Now we're sinking. We're kind of, if you sort of thought of this as 0 and the top is 100, we're at about 40 right now with our relative position inside of that pattern. So haven't cracked this yet, but it's a very impressive top prospectively also, if we do ultimately crack that. EEM, the emerging markets, down harder, about 3%. This one had a lifetime high not that long ago. It seems incredible that just a couple of weeks back, we were at prices higher than had ever been seen in human history. And now everyone's running around with their hair on fire. We've had a couple of gaps here. We've had a whole series of just been gap after gap, which is not that uncommon when you're dealing with overseas markets. But yeah, we had this gap and then a lower gap. And then today, we've got yet another price gap right there. So just kind of working its way lower. And EFA, another big ETF for outside of US, down about 1.5%, kind of more in line with what the US markets are doing. And just a beautiful breakdown below that wedge. So like I say, I think we're in a bear market. I think there are many, many months left of, in fits and starts, lower prices. I think strength is to be sold, which is exactly what I did earlier this week. And I think it's a stock picker's market. It's not all 1.0 correlation. Some picks are way better than others. As far as gold, GLD, precious metals are falling too. And you remember a few years back when the Fed was throwing trillions of dollars to prop up this pig of a market, the expression TINA, there is no alternative. That was sort of their PR campaign to cow people into buying stocks. It's like, what are you going to do? Make 0.1% interest, or do you want to buy some DoorDash over here? So everybody bought stocks. So TINA, there is no alternative. Now, a different acronym would apply. I'm not sure if it makes a word or not, but basically there's no place to hide. Are you going to hide in bonds? Those are going down. You're going to hide in precious metals? That's going down. You're going to hide in crude oil? That's working great for now, but you've seen how volatile that is. I think I saw the VIX for oil is like 180 or something like that. Just crazy. So yeah, gold itself is sinking away from its own price gap. Ew, almost out of time. Even though they gave me more time today, I better hurry up. The junior miners also down quite persistently there. With so little time, I'm just going to bang through. Like I said, I got 50 positions. I'm not going to talk about all 50, but here's a few shorts that I'm fond of out there. Just bang through them real quick without much elucidation. Advanced Micro Devices, AMD, down about 3.25%. ARM doing good things again, almost 5% negative on ARM hold. Bath and Body Works, frequent guest here on the show, also down about 5%. And in some cases, you can see where those resistance lines are, and that was just held strong. Caterpillar, CAT, down not quite as much, but on the whole, slipping fairly steadily lower. There's Futu again, FUTU, Futu Holdings. Nice reversal on this one, down over 6% today, like so. Micron, MU, which had just been a beast for the longest time. This completed its symmetric triangle, cracked below it, pushed higher, and yesterday, just about at the apex here, but now starting to slip away from that broken symmetric triangle once more. And NVIDIA, speaking of semiconductors, is NVDA. This one's down about 1.33%. And here too, we have been grinding away this for some, 9 months or so. And it has diminished into like a certificate of deposit. It's so boring. It's just kind of sitting there. But there is a line there kind of representing the line in the sand, what it keeps clinging to. Kind of gets too high, pulls it back, gets too low, pulls it back. So probably a good vehicle for option selling, I guess. Royal Caribbean, RCL, nice tumble in this today, almost 7%. I re-shorted this one yesterday, and because, like I said, the damage was done to that trend line, and so that's worked out nicely. Axon, we talk about this every single day, it seems, down again, over 3%. Look at that. Red, 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 red. Even on Tuesday, red. Amazing. JP Morgan, this one's got a bit of a hammer going today, so it might have some fight left in it. It is down about 1 2/3%, and we are beneath that top right there. But it's got a bit of a hammer, so it might have a little bit of a pushback on that. Our constant companion Monroe, MNRO, for the 50th day here, this is down again, almost 10%. Look at this. Look at that. Is that amazing? Like so. Just beautiful. Absolutely terrific. I keep getting tempted to cover it, but I'm looking for, here's a reason to cover it, I guess. I just noticed this, if I can find it, right there. Yeah, getting very close to that gap. That might be a good reason. Maybe I'll cover half of it or something like that, because I don't want to get greedy with that. That's been doing just really well. Qubit, QUBT, also down almost 4%. STX, one storage company, Seagate Technology, down almost below this cute little right triangle pattern, which I have not emphasized there. And then similarly, WDC, Western Digital, almost exactly the same percentage drop there, cracking below that broken channel. So all that's looking really good. Couple more real quick. BAC, Bank of America, down over 3% today, below its distribution top, looking really nice there. And then CRDO, Creative Technology, also down just about 3% below this very well-formed top. So I'm out of time. You kind of get the idea. And except for maybe covering some Monroe, I think I'm going to just stay put. So it's been a crazy week. Tomorrow, one last day of this, and I'll see you then. We'll see what other revelations we might have in front of us. Good night. See you Friday.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, and we've got a little bit of a pullback here in the market. You've got E-mini S&P 500 futures down to kind of the lows that we were seeing just a couple days ago on Monday, or kind of the close on Monday. 67,000 basically on the dot. We're down 79 here. We're about 15 handles off the low that has just been put in place about 15 to 20 minutes ago, right at the 2 o'clock hour here. You got the NASDAQ down 350, the Dow down 558, and the Russell down 45. The Russell and the NASDAQ, the weakest of the group today, but it seems to be selling across the board here. Oil catching a bid. /CL 96 on the dot here, up 876. Got as high as 97 and change here, so about another $1 higher. You have volatility futures at 23.92. They're up 97 ticks, a little over 4%. Bonds down 17. You got a 114 handle, 114.08 near the lows of the session. Gold and silver both getting whacked here. Gold's down $79, down about 1.5%. Silver down 43 cents, about 0.5%. Bitcoin down 300 on the futures spot, up 700. Ethereum up $43. I will say, into the close here, at least into the end of the session, oil volatility has come in a little bit. We're back to the 120 handle. Got as high as 125.99 today in oil volatility, through the roof. Craziness in oil. It seems to be that oil is the new VIX of the market. Oil up, market down. Oil down, market up.
Yeah, it's been it seems to have been the case here over the last couple of weeks, and you're seeing a ton of movement in oil and energy names, XOP.
Yep.
Chevron ripping higher, BP, all these companies. You had Trump come out yesterday and announced the $20 billion 20-year, I think it was actually $30 billion 20-year program, pumping out 60 million barrels a year from U.S. soil. So it's craziness across the board. But yeah, I mean, this conflict isn't ending anytime soon, and the oil markets are telling us just that.
How was the vibe on because you and Jamal were at the CBOE today.
Correct.
CBO, I should say.
Yeah.
CBO, not CBOE anymore.
CBO. Loud. It was loud.
Was it loud? Was it
Yeah.
a little bit more active?
Very active. Yeah.
How was because you guys are in front of the SPX pit, but the VIX pit is not that far from there.
Yeah.
I'm sure that gets a little rowdy in a 24 handle vol.
Yeah. This is actually the first time where I heard like people yelling on that side.
Yeah.
Normally it's pretty calm, they're doing what they're going to do. But yeah, to your point, we're in backwardation now in VIX futures. The VIX is popping. So we had some crosstown yelling, if you will. But SPX is always super loud during these periods of time, bouts of volatility, big orders coming in, and it's crazy. But yeah, VIX popping off a little bit here, up 2 points, 8%, trading on the upper side of the range of today. But vol futures in a pretty decent backwardation now.
Yeah, you got about a point between the contract, which expires next week, actually on Wednesday. So you'll have a roll in all the UVXY, VXX stuff like that has been happening throughout the last couple weeks here. But this does help. You can see the front volatility 2508. You get into the back months at lower volatilities that is backwardated. So you got higher volatility in the front versus lower volatility in the back. Usually a sign that, things are kind of goofy, not goofy, but there's a little fear right now. You would expect volatility in the future to be a lot higher, which it typically is. It's contango. But here it's fear right now.
Yeah. And you're seeing a similar situation with USO.
Yes.
Relative to the crude oil futures markets, because the crude oil futures markets are also in backwardation, in a much more steep backwardation. You've got 95.6 in the near term, 94.3 in the next contract, 95 in the next contract. So big backwardation in these two active contracts. This one's about to fall off next week as well.
Yeah.
But a 4-point backwardation between the K and the M contract in crude oil. And that's only going to help a product like USO stay afloat here and continue to rip higher if crude oil prices continue to increase as well.
Yeah, especially if they stay this high in the front.
Yeah.
Actually, I raised this question to Vecchio this morning because, when you look at the curve of oil, you would expect if this was going to be like a long duration issue, I would expect oil to be at a little bit higher level than 75 at the end of the year, right?
Oh, yeah.
So if I think right now the oil market is kind of projecting that this is kind of a short term issue. Obviously that can change, but that's just from looking at the curve, that's kind of what it is looking like at this moment.
Yeah. And I think that's fair. I mean, if you look at where it drops below 80, you're looking at August, September. So it's still a good chunk of this year is priced above 80. But yeah, to your point, if this does continue and becomes a much more long-term thing, then you'll see those back months rise in price for sure.
Yeah. Have you been trading any oil or MCL or anything like that, or just kind of staying away in general?
No, I've been diving in.
Have you?
Diving in head first.
Scalping it? Just gonna be trading some MCL?
Not scalping right now.
Okay.
I guess I wish I was scalping MCL, buying it when it drops, because that would have been nice.
Yes, of course.
I have an iron condor in crude oil that's completely in the money right now. It was at the money yesterday.
Yep.
But I also have a short call spread that I sold into the previous rip, the 98.99 short call spread in April.
Okay.
So that's fine for now. Yeah. We'll see where it goes. But I've added new positions in USO and XOP.
Okay.
So USO, I placed a downside diagonal. It's I'm long the 90 put in the June cycle and I sold the 75 put in the April cycle against it.
Almost like a poor man's cover put because of the duration.
Yeah. Yeah. So that one was a $7 debit, and it's a 15-point wide put diagonal. So I have that on in case this thing just like completely falls out of bed here. And then XOP, after the news yesterday of the U.S. soil oil news, America First Refining, I believe is what it's called here, 180, 165 call diagonal. So I did the 165 June contract, and I sold the 180 in April against it yesterday for $8.95. So another one that's 15 points wide, paid $9 for it. It's up $150 right now, but I kind of have both exposure to both sides of the coin here.
Yeah.
But XOP is interesting because, especially for a debit trade like a diagonal spread, XOP's implied volatility is just way too low for this kind of move. Like,
you haven't seen like the oil names. Like if you look at XOM or CVX, and this kind of plays into that what you're talking about. The move, they've had an upside move, but it hasn't been, 20% to the upside. You're not seeing like the actual companies having this sort of volatility. It's really the commodity itself.
Yeah. But yeah, I mean, if you think that XOP will continue to move in a big way, 40% IV is just not high enough, in my opinion. So that, for me, that means buying premium strategies like a diagonal spread where you're inventorying long-term delta at cheap implied volatility and then still selling something against it in the near term, because the near term is still elevated.
Yeah.
But longer-term premium feels a little cheap when you can get into a 15-point wide diagonal for less than $1,000.
Can I give you something spicy? That I think you might like.
Sure.
So you have a ton of volatility in the oil markets, obviously.
Yeah.
I've been doing these in CL as well as MCL in different variations. But what you can look at is doing like a super wide call ratio spread in MCL. So here's what you can do. And this is kind of what I have on here. So you can buy like the 100, 105, or the 100, 110, something like that, call spread, 35 days out is what I'm looking at. And then you can sell like the 150 call. And you could do that for a net credit.
Yeah.
So this plays into the upside skew, the upside volatility. It's obviously has some risk. You can even get spicy with this and do like, one call spread to 2 naked calls on the upside.
Yeah.
Just to play into this upside volatility. You got to keep your, using MCL is an easier trade than using CL, obviously, because the volatility exposure that you have there. But it's a pretty interesting trade that plays into not only like a slightly up move in oil, but really that volatility on the upside. That 120% implied volatility, that's all priced on the upside tail calls.
Yeah.
That is not priced into the puts at all. That is all call volatility.
Yeah. No, I like it. And it is nice for sure because you get this, if you're willing to take this risk, you get this 10-point wide call spread, and then you have this window between 110 and 150 where if you are filled for 75 cents, your max profit over the next month is $1,000.75 in the middle.
Yeah.
And then really the risk is, well, the nice thing about this is that if you're tested on the risk, which is 150, if you get a move to 130 or 135 or 140, the call spread, you could sell out of the call spread, buy back this call, and roll this out to like the next cycle and move it up to 250. Like
you would expect, to have there would be the curve of oil would be a lot higher in the back than it is right now. If we were back at 150, or at least stayed at 150 for a prolonged period of time.
Yeah.
But the other benefit is if you get kind of choppy, but we stay here at like 80 to 95 or 100, and you stay kind of in this zone, you have that at the money call spread that's actually going to gain value and then out of the money short call that's going to lose value. And so you could do this credit. You could put this on at like, $1 or $2 credit and close it at $1 or $2 credit.
Yeah, definitely.
So
yeah, especially if we chop around here and volatility comes in, the volatility, like you said earlier, the volatility that comes in or the premium that comes in is going to be these tails. Yeah. These $3.50 tails that were trading for 50 cents 5 days ago are going to go back to 50 cents. And that's where you can then sell out of your remaining call spread for some kind
or
of
buy back that call and have a free call spread. There's a lot you could do with this. Obviously the risk is there. So just don't go crazy here, but I do think those are interesting trades.
Yeah, the further out of the money you go, the more you take advantage of the implied volatility expansion, because it's kind of like a situation where regardless of where the stock price goes, as long as it doesn't go, or the futures price, as long as it doesn't go close to 150, it's all just decay. And, implied volatility can expand and that premium can expand too. But any kind of sell-off here paired with the vol crush would be resulting in this 150 call pretty much getting decimated. Look at this sell-off here into the close.
Yeah, a little bit of a sell-off here. We're at the lows of the session here. E-mini S&P 500 futures 66.83 down 96 right now. NASDAQ down 400. It's the weakest. I guess the NASDAQ and the Russell, the weakest of the group here. Volatility upticking 24.26. Definitely seems. I was kind of surprised because of the stuff that I'm trading, the moves haven't been all that big. Like, and I'm looking at some of my positions, like AMD's down 7. That's like a normal day for AMD. Like it moves 5 to 10 points every single day. On the other side, you got like CRM up $3. It's a random move there. AVGO is down 5. Amazon down 2. Microsoft has been mostly unchanged all day. It's down 2 points here. You have Meta down 17. I guess that's pretty decent move in Meta. Netflix down 35 cents. Nvidia down $2 or $3. That's a bigger one on the group. On the upside, you have like Palantir up $1, PanW up $3. It feels like it's kind of just not all that big of a deal, but it's a big move in the market.
Yeah, Palantir is really interesting because Palantir announced a further partnership with Nvidia and defense names. So that's interesting because now, if you think like the markets are selling off because of war fear, Palantir is now an AI name that's connected to the upside of war. Where like, your Northrop Grumman would be like the stock that rips when
or Lockheed or
exactly
RTX.
Now all of a sudden, now you have this name that's like pretty clearly with these deals that are in place now is pretty clearly, especially with this move today, it's ignoring the market move. I think that's interesting if you are looking for like an AI name that's connected to military.
Sure.
Which Palantir now is. So, yeah, Adobe has earnings after the close.
They do. Adobe has been a dog. It's trading at 169 here, down $3 and change. It's been nothing but downside. Are you guys playing this name?
Yes, I just have an upside calendar, small. So I bought the 290 April call and I sold the 290 one day. The one day call is trading for $300. The April call is trading for $900. So big cost basis reduction. If you get any kind of rally closer to 290, even if it's like 275, 280, it'll be a profitable trade because you'll get all the premium out of the short option. You'll have the long option stay flat or gain a little bit of value, most likely. And that'll be a nice trade if we can get it. But I don't know.
There's not a lick of good news there either. It feels the same way. It feels the same way as Oracle fell, which so I'm in agreement with you on the upside play here. I did a April, and then the weekly I sold the 300 strike call against it into earnings this week. Relatively small trade. I think I did it at $600 ish.
Yeah. But yeah, this one like
671 is what I did it. The April 290 against the 300 in the. I'm sorry, I did it in the 8 day, so I went a little bit further out in time here.
Yeah, I think it's less probable that Adobe really rips to the upside because of the general market weakness now.
I would agree with that.
So like, I think even if they report good numbers, I don't see a scenario where there's a blowout upside move. So I think that's going to be good for the short premium that we've sold against it. But we still needed to kind of flutter around here or go up in value. But long option out in April, plenty of time, and so much volatility in these markets that you'll have hopefully an opportunity to mitigate that risk if it does sell off, if you have a bullish stance.
For sure. If you got some trade ideas, tastylive.com/fastmarket. We'll be taking those tomorrow. So please give us your favorite picks of the day. I mean, it's always fun to look at these trade ideas from the previous day when you have a huge move like this. So it'll be interesting to see some of those trades, how they have changed going into the market tomorrow. But tastylive.com/fastmarket. You can send us your trade ideas, preferably liquid stuff. But we're open to anything.
Yeah. Last week, when Jamal and I did the morning show, we had a fast market trade in Rivian, and that was a 50% winner like 3 days later. So the people,
they don't need us.
No, they submit the good stuff.
Great.
Yeah. But tastylive.com/fastmarket. Submit those trade ideas. SPX, I've been playing with a lot of different positions in this thing, but I really like these butterflies. The butterflies are cheap to the downside specifically. You can get a 100-point wide butterfly for like $500, $600. It's so much more expensive to the upside.
It's almost a short vol play with volatility this high.
Yeah.
Because the trade's so cheap that if you kind of stay here and volatility contracts, and this goes to skew because we talked about skew this morning on Market Measure, so it was a really good segment. But that short premium position is going to be further out on the tail, comes in a lot faster.
Yeah. I'm trying to route a 50-point wide butterfly in the 7-day cycle to the upside. The 6,800, 6,850, 6,900. So slightly inside the expected move, but the short options wrap right around a short put spread that I have that's already in the money. So I'm trying to just kind of mitigate some of that risk. If we already get somewhat of a reversal here, closer to like 6,775 or 6,800, that butterfly will eliminate a lot of that put spread risk. But yeah, I already have one to the downside. The 66, 65, 64, 7 days to go. I'm leaving that on because that one can be really nice. Yeah.
There you go.
Right at the money. And if we continue to sell and we get down to 6,500 next week, that would be a huge buffer against all of my risk in SPX because it's 100 points wide, and I bought it for like $6.
I will say we did just break the SPY 66666 mark. Does that spook you?
A little bit.
E-mini is about to be down 100. Here they are, down 100 on the E-mini, 66.79. We've broken the 6,700 mark, and as we've been talking about, oil catching a bid here, 96.35, up $9 and change here. Volatility up to 24.40, so you got a little bit of a bid in volatility here into the highs here of the session. Doesn't look good. What are you thinking to tomorrow and the weekend?
Well, we get PCE number tomorrow.
Okay.
Which, I mean, after this week's...
Who cares about that?
Funny numbers. I mean, the CPI number was like literally to the 100,000th decimal the same exact as the estimated. Which is like, someone just copy paste this?
Because no number has been like... at or near any sort of estimate.
Exactly.
Ever. So you're surprised when it actually is sort of correct.
Yeah. But it's like almost too correct.
Yes. I feel that.
But yeah, SPX is pricing in volatility into this sell-off, of course. Yeah, it just ripped up 10 points. But yeah, 75-point move implied for tomorrow, which is a lot.
Huge.
One day, yeah.
Yeah, it's one of the bigger we've seen.
And then next week you have expiration, so that's going to be crazy.
Expiration, vol expiration, as well as option expiration, FOMC on Wednesday. So it's going to be an action-packed week next week.
Yeah. I was talking to Vecchio earlier, and who will be on in 5 minutes. I'm sure they have a lot to say. But he said that the probability of no rate cut is now under 50% for this
Going
year.
all the way out the curve. Yeah.
Yeah.
I mean, bonds are telling you that. Bonds have been getting absolutely killed over the last 2 weeks, really since this whole war attack, Iran situation started. You've had a move from 118 down to 114. It's a huge move in the bonds. I mean, we're at the lows that we've seen with rates at the highs. So it's telling you that rates are going to stay up here.
Yeah.
Fortunately.
Stagflation. Fears.
Scary
word.
Yeah.
Do you have any TCFX positions that are working out?
They
for
all
you?
stink.
The dollar's ripping today.
Is it?
Oh yeah.
Yeah. I still need more.
I mean, so do I.
I guess I got some that are like.
Insert the Star Wars meme. Ooh, I was just filled on SPX into that sell-off.
Oh, there you go.
So Jamal had a working order too, so I'm sure Jamal was filled as well.
Mm-hmm.
But I just got filled for $5 on the 6,800, 6,850, 6,900. I was just working it for $5 exactly.
Okay.
And it just got filled.
Oh.
Love to see it. But yeah, what was I saying?
TCFX.
Oh yeah. The dollar. We're violently long the dollar.
Yeah.
Dollar franc.
It hasn't been good. You're getting a little bit of a bounce, but it hasn't been fun.
Yeah. But yeah, I mean, a couple more days of the dollar increasing in value, relative strength, that would be good for this portfolio for sure. But yeah, I've got long dollar franc, long euro franc, short the Aussie dollar, short the Aussie dollar euro, short the dollar yen.
Oh.
And I'm long the euro.
You got to be careful with that boy Glenn.
Yeah.
He has these ideas made for 2-minute traders, okay? So you got to be careful.
Yeah.
It's like, you got to do this and then get out in an hour. I'm like, what?
Yeah.
Talking about? Too quick.
But if you don't, you end up like me with 3 tranches of a dollar franc position that I've had on since November of last year.
That's what I'm saying.
But hey, I'm getting paid to hold it, so whatever.
There you go. E-minis as we go into the close here, down 1.5%, 66.78, about 100 points to the downside. NASDAQ down 432. You got the Dow down 715 and the Russell down 56. It's a bloodbath across the board here. Oil up $9, above 96 right now. You've got oil or volatility up to 2440. Bonds down 15 ticks. Gold and silver both looking icky here. Silver down to 87 cents. Gold down to $86. Bitcoin really hasn't been much of a story over the last couple months here.
Holding its ground though.
Yeah, holding 70,000. That's good. We'll take it. Need more.
Yeah. Tomorrow, I think if you were to twist my arm.
What's your call?
Down.
Down.
I'm
inside down. Outside down.
Inside down. Inside down. Yeah, inside down.
I think that's probably a good call. I think I feel a very similar way, just because you're going into the weekend, got the volatility here. You got to expect some stuff to pop off over the weekend. So
I think it's a risk off.
Maybe a little risk off.
Yeah.
I think you've had a pretty good move the last couple sessions here. I think this is a good spot.
Yeah.
For them to chill out a little bit.
Yeah.
What was that little thing we had up there? We'll go quick. Refer a friend.
Indeed.
Both you and your friend.
Yes.
Couple shekels.
You love to see it.
Yes.
Yeah. This is a nice little promo. If you invite your friend, they use your promo code or referral code, I should say, and they deposit $2K, you both get $100. So go check that out. Scan that little QR code with your little smartphone.
SPY closed 66604.
Wow.
666 on the dot.
And do you know what tomorrow is?
Scary.
Do you have any idea what tomorrow is?
Is it Friday the 13th?
Yes.
No.
Yeah.
Oh, shoot. All right. Close all watertight doors here. We're a little scared here.
Insane.
That's it for us. We're going to take a quick little 90-second break, come back with more Tasty Live. You got Chris and Ilya coming up with Overtime. You're listening to Tasty Live. Stay tuned.
The market market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom.
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancelleri. Bam!
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
It's not over and it's getting worse. It is now Thursday, March 12th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the final, well, at least 27 of the final 60 minutes of the trading day here as we wind things down. Another memorable trading session where oil jumps by over 10% right out of the gate. We're getting news that there are efforts to keep the Strait open. The U.S. Navy is open to working with other countries to form a coalition of ships to keep the Strait open. Of course, these little $500 floating mines aren't really making the situation passable, navigable, Ilya. And so it doesn't really matter who wants to join in. The oil is just not flowing. And it's oil among other things now, as the concern is spreading to other parts of the market here.
Oh, yeah.
Soft ag is going up. Food prices are going up. We're seeing knock-on effects in other commodities and beginning to weigh on the equities of some companies that ultimately are very reliant on the commodity supply chain. So we're going to be looking at semiconductors again, Ilya, in a little bit here. But oil prices yesterday on the show, Josh, we can go to the charts. We were on Overtime yesterday. We were looking at $88 oil. We're now up to 96. It's a clean 10.6% move to the upside. There's a certain gravity and reality of the situation that's kind of meeting the market here right now. We've seen the oil diverted. We know where the emergency flows are coming from, and it is just not nearly enough to offset the oil itself that won't be leaving the Gulf region. And that's to say nothing of the fertilizer, helium, urea, name some other product.
Not gas. I mean, come on.
It's a huge compounding problem with each passing hour.
European gas prices have gone up by something on the order of 50% in a week.
Yes, the Dutch TTF contract, which is the European benchmark grade, since this whole thing started here. I mean, year to date, the Dutch TTF contract's up 78.5% right now. So you're talking about potential energy problems coming down the pipeline for Europe. Yeah. Well, Ilya, $96.42. Yesterday on the show, we were looking and making the case to have more long deltas in oil, given how things were moving. Short put spread, long out of the money call spread. Today, it's working swimmingly. What do we do now from here as this agitation spreads into other parts of the market?
I think if you're sitting here and you're saying, what should I put on? You're maybe thinking the wrong thing.
Or take off.
I think that's the kind of thinking that you need to have here. I think you need to look at your portfolio with an exacting, unemotional eye and go, how much of what I'm holding am I holding on the basis of hopium? Because you should always buy the dip, they say, because everything will be fine, they say, because I haven't seen a meaningful drawdown, because I haven't seen a crisis, because crises don't happen because the government is going to print the money, all the other nonsensical idiocy that people have heard basically since 2010 and have been conditioned to think is real. All those things people need to re-examine because they need to learn their history. These things happen. They spiral out of control quickly. They become fire sales quickly. That's not to say that this is a fire sale right now. It isn't. But the momentum here is not to be ignored. And there will be a shopping list of things to buy as long as the eye can see if there is a fire sale. And you're going to want money. You're going to want to have that cash on hand.
There were a few places that went up in today's market, Ilya, as we see most of the market down. Sector by sector, it's an ugly performance across the board. 4 notch green days, but these are not the 4 sectors you want to see having green days. XOP, XLE, IYE, and XLU. Your oil and gas, energy, and utilities. And then the least negative ones are consumer staples and real estate, which for those that remember the 2022 market, real estate, it got hit because of the higher interest rates, but home prices are typically, homes are typically a historically good inflation hedge. And has the housing market become any more affordable since 2022, even if rates have come back in? Absolutely not. Absolutely not here. I bring up FTAG on the screen. It's not an ETF that we usually look at. It's not immensely liquid. There's 2.8 thousand contracts traded today. So we're not talking about a heavy hitter here, or maybe even something that's too tradable, but it is the first index or first trust index global ag ETF that has a whole bunch of those scary names in them that are doing things that, I mean, really make me concerned beyond the theoretical and into the reality. CF Industries, fertilizer, Nutrien, fertilizer, IPI, fertilizer, Mosaic, guess what that does? Fertilizer. These names are up 7.5, 10.8, 5.8, 13.3%, working from back to front there. You're starting to see that this is not just what were we doing last week in these names? Moving sideways, not a significant supply chain disruption. What are we doing the past 2 sessions? Something different has changed. The market calculus has changed. We're beginning to realize this is not going to be, as we've joked, the Rick and Morty 20 minutes in, 20 minutes out. What's the worst that can happen? It's happening. It's not spectacular. It's real and it's not spectacular.
Right. Right. I mean, this is, again, not to beat a dead horse here, right? But the markets have been screaming at the Fed, there are too many risks. Give us rate cuts. And the Fed has said, well, until you give me inflation comfortably approaching 2% or employment that I can fix with rate cuts because there is a weak economy and people are getting laid off and I can boost demand with cheaper credit, until you give me those 2 things, why am I going to cut? Show me why. The labor market got a little bit soggy at the end of last year. What did we hear from the Fed this year? Look, we can't do much about most of this. We gave you a few cuts. That's really it. We can't fix demographics for you with cheaper credit. We can't fix immigration for you with cheaper credit. The labor market is what it is at this point. Not much we can do. It's not exactly a weak economy. The problem with labor markets isn't that demand is gone. And so not much we can do. What if the markets retorted? It's not that we need. There's just too many risks. Back us up. We need credit if one of these things is going to go wrong. Feds retort, well, it's going to have to go wrong then for us to act. You're going to have to crush demand, and then we'll be here. Behold, one of the plates that the markets were spinning has fallen, and the Fed now ostensibly is going to have to wait for it to crush demand.
It's looking less like a transitory supply shock and more of a bigger issue that ripples through the economy, which makes me think, Ilya, I mean, usually the Fed would look through transitory inflation, as their literature suggests that they should.
Well, and this would be classic for a transitory inflation kind of thing, were it that.
The markets are getting a little unglued here. The Russell itself looking a little bit worse, down 2.1% today. Yesterday on Futures Power Hour, we went through the exercise of taking the inverted Russell and saying, Ilya, Jamal actually at the time, here's the 1 week moving average. We broke out, we came back in, we retested it. We had clear horizontal support, and we bounced from the 1 week to move into breakout territory again. Is that a buy or a sell? It's an obvious buy. That's exactly what the bull in me would be screaming, probably mocking and belittling bears along the way, preaching the fact
and rightly. Rightly.
The bears that I put up on the wallpaper in my son's room, it was a reverse jinx. See? No, but the Russell is, so you inverse the chart, right? And what does it look like? That is just bearish momentum. Bulls have no business from a technical momentum perspective right now, as they didn't yesterday, to try to pick up a falling knife when MACD is declining through its signal lines, stochastics are declining, vol's creeping up. We can't get a close through our 1 week moving average. There's no reason to play hero ball here. If you're trading this directionally, it's down now. Before it was looking more choppy, sideways dispersion-y, Ilya.
Yeah.
But every time we see red ticks in this market, the correlations tighten up. So
that's right.
Dispersion and choppiness on green days, and then just everything selling off on red days right now.
Yeah. I mean, this is the sort of thing that, and when at the beginning of this week, we had that wild reversal. I mean, obviously, you and I were on first call. The markets looked, to say panicky is an understatement, at the open of the week. And then, of course, we got that rapid turn. And when we got the rapid turn, there was a lot of dancing around and a lot of happiness out there. And that day on Macro Money, I was pulling up all these charts and going, but look, bonds haven't crossed back over their breakout point. But look, neither has the Russell, neither has the S&P. The NASDAQ has not confirmed that it's coming back in. The dollar has not capitulated. Wait for it. It's not over. Because this was a problem before this war started. Oil has been going up since the beginning of the year. Well, here we are, all those levels held.
They've all held. Ilya, there's something else that popped up today that's equally concerning about the structure of this market, and you're starting to see things behave in a way that they usually don't behave unless something serious is going wrong. I bring up the banks here, which we know from a few weeks ago started to break down. They tried to get back into the consolidation area above 51 or so, and then they failed to do so. They started to break down here. But with today's move lower, we're now down 1.63% today. That now means XLF, the financials, are down 10.85% year to date. The quarter's not over. But history. Why do I bring this up? Some context. For those that haven't seen it yet, it's going to be out shortly. I had a great chance today to speak with Helene Meisler, the original technical analyst that Goldman Sachs ever hired. She's now over at The Street, but she's had stints at Cargill Cohen as well. You've probably seen her on Twitter as ChartFest1. She talks about the importance of using indicators and price action to identify extremes in the market and changes in behavior so you can get your bearings about where you are and what kind of situation you're in. And so in spirit of that conversation, when it's out, go check it out. It's worth the 15 or 20 minutes. What was the last time that XLF was down more than 10% in the first quarter? 4 times before in history. And gosh, those are not good years. 2002, 2008, 2009, 2020, right? 2020 obviously was a good year, and 2009 ended up being a good year, but there was a heck of a lot of pain first on the way down before the market found its bottom. And yeah, the market found its bottom in Q1 2009. March 6th, 2009 is when the S&P 500 found its bottom in the global financial crisis at 666, interestingly enough. Ilya, that's not to say that the bottom isn't now. No. Certainly that's not the case I'm making. I'm not saying this is going to be like 2009 or 2020 where there is a big rip in the second half of the year, although who knows, that could very well happen. But the point is that when XLF is down by more than 10% in the first quarter, it's typically admits something disparaging happened, dislocating happened, something that is destabilizing the system, broadly speaking. So we talk about, deploying capital today. I've been saying I'm thinking about capital preservation more so today than I was yesterday, leaning further in that direction of being defensive, of thinking about ways to protect capital and take risk off the table if something's not working quickly, because these markets are moving very, very fast.
Speaking of quality conversations this week, I had one with Phil Palumbo over at Palumbo Wealth Management, and he brought up 2 interesting points for fans of seasonality, as you are.
I can't believe I missed this convo. Go on.
Tell for fans of seasonality, he mentions that the first 6 months after a new Fed chair is installed, average decline for the markets is about 14%. Now, obviously, that's contingent on whether we are ever going to get a chair wash, because the block from Tom Tillis, the chairman of the banking committee in the Senate, remains as long as Chair Powell remains under this ridiculously spurious investigation. And so who knows? But for the moment, we are looking for a new Fed chair named Kevin Warsh, due basically within 2 months' time. And then the other little bit of seasonality there is that the midterm year, especially the second half of the midterm year, is the worst year for a new presidency, markets-wise. Now, you could say that the Trump administration is a break of the pattern, because he didn't have consecutive terms, but this is not the first Trump term. So you could say that the seasonality and the historical analog here isn't valid, but it is something to keep in mind.
You mentioned, and I don't need to fat finger the print button here, Ilya. This comes from Ryan Detrick. He sent this over. This was back in January. It's an old chart that was sent out, but
over at Carson.
I'll see if he has another updated one for us. What I will point out is that if this is the midterm year, right? We've broken this down previously, that depending upon how you slice it, if you're looking at year 2 of a president's term, it's different than year 2 in their second term, which you could call year 6, so to speak. Year 6 is usually good. Year 2 is usually not so good. And you can kind of see that here in the chart where the market meanders sideways for like the first third of the year through the end of April. And then April through October, it declines. And then even October, November, right? Then you get, okay, we have clarity around who's going to be in charge again. We have better understanding of what the governance structure will look like. We can price in things with a little bit more certainty. And then bam, outside of midterms, you get a rally. And then pre-election year, everyone's panicking about, ooh, I have to stay in power. What can I do that's popular now immediately to butter up the markets?
Yeah.
So then the markets usually rally and all the unpopular things are out of the way. And then, election year, you kind of just meander and float higher, because that's just what we've done historically speaking. But it's year 2. And it's year 2 from, if we're following the year 2 path, not the year 6 path, it would be sometime in the next few weeks, the market has its last good push higher in terms of seasonality. and then faces headwinds, which, midterm year seasonality offset by the regular seasonality, what happens from April 1st through July 31st, stocks typically rally. You see those forces at play and you go, oh, geez, we're just going to get a ton of chop. But then you sprinkle in the Iran and you go, okay, maybe we're getting a little bit more downside.
Yeah.
It's not great.
It's not great. It's not great. The 5-year break even is now at the highest since April of last year. The 10-year break even is now at the highest since October or so of last year. That's matching highs that we saw in February. The 10-year obviously a little bit more constrained because of duration. But as we look at the way that this is all working out, I mean, it isn't difficult to see what's going on. You look at where the turn in crude oil is at the end of February, obviously, is when it really becomes a rocket ship, though, of course, it starts building higher right from the beginning of the year. And by the way, inflation expectations move higher with it right from the beginning of the year. But what we've seen since, obviously, late February has been much more dramatic. Inflation expectations are flying here. And not surprisingly, bonds are down. Not surprisingly, rate cuts are fading away. I mean, 18 basis points now priced in for this year. Few more, and we're going to get into less than even odds that anything happens at all on easing.
Just see here, Treasury Secretary Scott Bessent says absolutely not when asked by Sky News whether there was a price that could cause him to confront President Donald Trump and say the Iran war was no longer affordable. That is, of course, a very obvious answer. That is the correct answer. What do you say? No, yeah, if we get back to $125 a barrel, we're going to have to call this thing off. Then the Iranians have every incentive to turn the screws until oil it's 125. So, you don't tell your opponent, yeah, I do have a tap out point.
Like, okay, yeah. If only you do this, then you win. Really?
Why would they?
Is it within my power to do it? It is? Oh.
It's just a very silly. That's the only correct answer. So I don't know. People are going to be like, I'm looking forward to the media cycle around that. But Ilya, it's a 114.4 IVR. It's another day where we hit new highs and volatilities. For the uninitiated, when you have an IVR of 114.4, as you're going to probably hear me say the next few days, as I've been saying, sorry, Ilya, for putting you through this, that means you are 14.4% above the trailing 52-week high. So that means even with yesterday's push into new highs for oil vol, we are continuing to build up into new highs for oil vol. And that decimal point call out goes out for the production team, who honestly, chat, they hate when I do round up or down. So game plan, Ilya. Yesterday at the end of the show, you and I were looking to get more long deltas in oil. Yeah. What's the game plan now?
I think you look at this now and you start to look at what hasn't broken and what gives you some ways to go. I think the first place you look is the dollar. Because it is approaching some key breakout levels in the yen, in the pound, in the euro. And you go, okay, well, if we're going to have higher interest rates and we're going to have risk aversion, I can't own enough dollars. And so then you start looking at opportunities to buy some or buy more. I've obviously been loaded to the hilt with dollars. In fact, the only thing that's giving me persistent agita this week is the Australian dollar, which can't decide which way it's going. Obviously, it's going down today. I've been long. I've been short. It's really been tossing me around. Thankfully, it's been doing these swings in relatively tight ranges. So I've only lost a little around the edges as I'm trying to nail down which way this thing finally wants to go. But it's got a couple false breakouts in both the directions here, which is very annoying in the past several days. But thankfully, the core of my position here, short euro, short pound, short yen, that's working. And so I'm looking at these range bottoms that we're now scraping and going, well, if these range bottoms break, then you got to layer in. And we're testing the range bottom in the euro. We're testing the range bottom in the pound. We're testing a huge level of resistance in dollar yen or bottom in 6J futures. So there are very clean levels from which to operate here. You get these breaks, buy some dollars.
The euro
that's
looks,
one idea that I'm looking at.
Looks like it's getting ready.
Yeah, it really does. And I'm going to be adding in. You can't own enough liquid cash in scenarios like this if the situation really goes. To this day, by the way, my best year in the markets was 2008.
That's a sickness.
by far my best year, which probably colors the way I think about the world.
Yeah.
But
actually that's so true though. And I say this all the time. Like if I was trading through COVID, I would have had a very different attitude than when I had come back with a clean slate in early April 2020, having been on paternity leave and being like, well, the Fed just said they're throwing all this money against the wall. Like why isn't everyone super bullish? And it's like that you have that lived experience, that PTSD almost of saying I shouldn't act. And I didn't have that. So like it colors you good and bad. And that was probably why I've been so unrelentingly bullish, because I haven't needed to really face those demons in several years.
No, I mean, and I was born as a trader in 08 in the sense that like that was the first year I put any real money behind an account and really put some real skin in the game. And it was a tricky year. And I learned things both good and bad. I learned that I was a fool for not buying banks in the single digits when they got there in 09, or in early 09, because I was, as an economist, looking at the economy and going, this is terrible. But when the price of JP Morgan and Citigroup is such that you could add up all the paper clips they own and end up with a higher share value, you got to buy that. That's panic. You need to buy that. You need to mortgage your house and buy it. And so that was a terrible mistake.
If we get to a place where like the price to book ratios fall, where it's like, okay, like this firm is no longer being valued at what the assets and liabilities on its balance sheet suggests it should be traded at. Like you net everything out, it should be worth $10 and it's trading for $2. Like the thing
that's a generational opportunity, and you're
we're not there. We're nowhere near that yet right now.
Nowhere near that. No, not even close.
No, this is more about defensive posturing and battening down the hatches now. And instead of taking like, let's see if this trading sideways and we could sell vol, be directionally neutral, there are now increasing reasons to not be so neutral and be a little bit more defensive. And maybe that means not deploying things, Ilya, as you said. And Jamal says this too. Like, you know, it's not that you have to put capital in the market. Maybe it's about reducing exposure. So that way, if there is a flush or a washout, you have something to play with.
To work with. Yeah.
You mentioned other opportunities, the dollar there. We talked about this earlier today too, but let's bring it up for this crowd. SMH, a name in particular, right? Thinking about Qatar and all the gas that they pump out of the ground. One of those gases is helium. They produce about 35% of the world's helium. TSM consumes about 20% of the world's helium because of a lithography process that they need to use in order to get the teeniest, tiniest bits of imprints done on their silicone wafers. So no helium, no wafers being printed. No wafers being printed and sold, Ilya, no revenues. There are potential supply chain issues coming down the pipeline for lots and lots of places that you normally wouldn't look or expect because the Strait of Hormuz and oil flow has been disrupted. It's become so much more than that. So, Ilya, stay defensive, stay risk defined.
Yeah.
Don't take risks that you want. If you don't like the market, you don't like the prices, you don't like the tape, get away from it. Go for a walk. I wanted to do that today at a point, but you know what, Ilya? It was snowing here in New York again, even though it was 74 degrees yesterday. Please make up your mind.
72 degrees and sunny here in San Francisco.
With that, overtime's out of time. We'll be back, well, not tomorrow because tomorrow's Friday. So Monday, every Monday through Thursday, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. Be sure to stick around, though. Ilya has some macro money for you coming up next here on Tasty Live.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day one, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It is a bloodbath in financial markets. Not surprisingly, that bloodbath stems once again from what's going on in crude oil. So, have we seen enough pain, or will the beatings continue before morale improves? That's what we're going to try to figure out here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And as always, of course, the first thing that we're going to do here is take a look at the price action and try to figure out what these markets did today and how it factors into the overall equation. And then see if we can't figure out what next steps might look like, because this is getting quite feisty, to say the least, in these financial markets. And not surprisingly, it is again pulling us into the same narrative that we've been watching. For the better part of a year now, the conversation in markets has been, why do the markets want rate cuts? When the economy seems to be doing okay and inflation seems to be moving toward the Fed's target. And the answer we've offered here on Macro Money has been, they want insurance. They're spinning so many plates and there's so much uncertainty that what the markets want is a cheap money backstop in case one of the plates that they're spinning drops to the ground and shatters. Well, We've dropped a plate, everybody. And at this point, the markets are concerned that they're not going to get the cheap money backstop that they need to buy a new one. Here's the essence of the issue. This is crude oil. It's pushing back higher, closing that downside gap we saw earlier in the week when everybody was so enthused about the idea that maybe the war was going to end quickly, that maybe the release of reserves from the G7 countries would paper over the tightness created by the effective closure of the Strait of Hormuz. Obviously, those things have not been sustained. Not only that, but we're in a situation where the market is increasingly doing the arithmetic and saying, well, we got the IEA release, 400 million barrels. We got the commitment of the major economies to feed that. The president is out here saying we've bombed Iran so hard that there's hardly anything left to target, seemingly again suggesting that this could be a faster off-ramp. Nobody cares. Because clearly the shut-ins of crude oil and everything else, frankly, that transits the Strait of Hormuz, be it natural gas, be it a number of other things, for example, lithium coming out of Qatar. So the situation is becoming increasingly hectic, and crude oil is really front and center here. And we can see that despite yesterday's IEA release, despite all of this would-be news flow that earlier in the week, just days before, cheered the markets and took them from triple-digit oil back in the vicinity of 80 and even scratching under it a little bit, well, we're back on approach to triple digits. And of course, the issue has been one and the same. It is that it takes about 1 month for a move in crude oil to end up in CPI. Of course, we just saw CPI earlier this week, but the markets didn't even bother to read it, it seems, because that data was stale on arrival. We can see here, though, there's some spice to that CPI data because of this run-up in crude oil prices that's almost certainly now on the menu in the months ahead. And that's having the understandable effect on policy expectations. We're down to 45 basis points on priced-in rate cuts for this year and next. That's less than even the Fed has been forecasting. And let's not forget, for the better part of a year, the markets and the Fed have been fighting because the Fed's been less dovish than the markets have wanted. Well, now we've turned a corner, it seems. Now the markets are baking in just 19 basis points for this year. That's not even a full rate cut. Now, it is, in fairness, still better than even odds, 76% chance that we're going to get one cut this year. Lots of good that's going to do when the markets were not happy with even 2 cuts for this year. We can see where we were just weeks ago, easily looking for 50 basis points, and then looking out to what might happen next year and looking for 75 basis points in a cumulative move over this year and next. And we've now shed easily 30 basis points of that. So at least one cut is out of market consideration, maybe no easing this year. And as we can see clearly, rate cuts building into next year. In February, there were no rate cuts for 2027. We can see this yellow area is above the zero line. Well, now it's down here. And at least one cut is now on the menu for next year because we're pushing those cuts out in time. Not surprisingly, bonds are sinking against this backdrop as interest rates surge. And the US dollar is up and on the verge of a breakout, it seems, against its major counterparts. This is the dollar index here, all around the idea that, first of all, we are getting a boost to the dollar because one person's borrowing costs are another's lending income. So if interest rates on the dollar are going to be higher, as we can clearly see right here, well, then it makes sense to want to own it because you can extract a higher yield. Currencies are yield-bearing instruments. But of course, the other reason the dollar is up here is just outright panic. When people sell off assets and cash out, what is their cash of choice? Most usually the dollar, because it is the most liquid and thereby the easiest to move around in, easiest to buy and sell, easiest to not get wrong on the way in and out as capital flows come out of riskier parts of the market. And so not surprisingly, the dollar is also catching a haven bid here because this is what all of this is meaning for stock markets. The S&P 500 coming off that resistance line that we've been looking at all week when we got this seesaw at the start of the week. Of course, initial panic when the week opened, then back up here as we got the rumors of that G7 reserves release, which ultimately had to wait a few days to actually go down, as we got the president talking about maybe a sooner end to the war. And our position then was, here's a series of lower highs and lower lows. Until it's broken, it isn't broken. And what did we end up seeing? We held right there. And we're now coming back through this level of support here and ostensibly aiming back toward 6,600, the bottom of the range that we've seen in place since October. So why is this? Well, this is a familiar chart for watchers of macro money. The stock market hasn't gone anywhere since late October. And it's really to the day when Fed Chair Jerome Powell came out after that late October FOMC meeting, stood at the podium at the press conference after the sit down and said, you all think we are going to be on dovish autopilot and just keep feeding you rate cuts. No, that's not what's going to happen. We're not there. And the market stopped rallying and hasn't rallied since. It's been stuck in a choppy range since that statement. And we can see here that as the market has gone sideways, so too policy expectations have been anchored because the market's lost the impetus for more dovish speculating. Boy, have they lost it now. So as this accelerates higher and we get rapidly unwinding rate cut expectations, so too the stock market seems to be rounding off a top. Now, we have no shortage of macro data to spice up the festivities here into the end of the week. We have GDP data, the second revision for the Q4 number. We've got the PCE inflation data. That's the Fed's favored inflation gauge. We've got somewhat of a dated JOLTS job openings number. That data is always a month behind, but the expectation there is we're going to come down for job openings from 6.7 million down to 6.5. And of course, my favorite, the University of Michigan Consumer Confidence Report. So let's take these one by one here and benchmark them and see what they might do. For the GDP number, of course, we've already seen an initial estimate of the Q4 result. It is a steep decline from 4.4% annualized growth in the third quarter down to 1.4% in the fourth. That's the worst result since the economy shrank 0.6% in the first quarter of last year. Thank you, tariff news. Obviously, the market at that point was already seething with anticipation of the tariffs that would come, and we have a significant decline in output because of it. And of course, now we are looking at a GDP number that's the weakest since then. We can see the recovery from that tariff shock in the second and third quarter. Markets are treated to robust growth here. But if we look at the breakdown of GDP, the easiest thing to focus on and the most important, clearly, is this little blue area. And that's consumption. And the reason this matters in such an outsized way is because consumption is 68% of GDP. And so it's cute and all that there's all these big swings that we can see in the first quarter and the second in inventories, in imports. And of course, that's how we end up with those negative numbers. We get a vast negative influence on GDP in the first quarter from a surge in imports. That's that big brown bar for January 20 to 25 that you see on the screen. That's because all of the importers know that the tariffs are coming at that point, and they're trying to front run them. They're trying to pack in their inventories with goods at a pre-tariff cost. Makes perfect sense. There's that surge. There's the increase in private inventories, so the stockpiling of those goods into warehouses waiting to sell them. We can see that this inverts by the second quarter, so imports fall apart because ostensibly we've packed the warehouses as much as there is to pack, and inventories start to get drawn down. So once all of this is washed over, we get a much more normal quarter in the third quarter. It looks much more like something you might see before. But it's this consumption bit that's key, because all of these things, they're really just tinkering at the edges of GDP, whereas the blue area is 68% of the total. And what we are looking at here so far for the fourth quarter, we'll see what this breakdown looks like, but it is the weakest that we'd seen consumption since this first quarter. And so that's, of course, the biggest issue. That if consumption is falling apart, and certainly this kind of wild surge in prices that we're seeing here, coupled with higher interest rates to contain them, is not a very powerful inducement for consumers to splash out, well, then we have a much bigger issue than just an oil shock. Then we're looking down the barrel of something a lot more sinister. And in order to kind of illustrate this in a more timely way, of course, the University of Michigan will give us consumer confidence data that is a much more timely thing than the GDP numbers. This is going to be March, the initial March survey. It'll get revised a little bit later, but typically that March number that you get initially, and frankly, any Michigan survey number that you get initially, the preliminary one, is very close to what it ultimately ends up being, at least as far as direction. The expectation is that we're going to come down to a 3-month low on sentiment. And the reality, frankly, might be worse, because we can see here that ever since the end of COVID, sentiment has really been a function of inflation expectations. And within that same report, you get the 1-year outlook from these survey takers that populate the answers for the University of Michigan here. And you can see, here's the inflationary run-up after COVID. Sentiment is decreasing. Fed gets serious about rate cuts, starts driving inflation down. Sentiment improves. The tariffs come out, start driving inflation expectations up. Sentiment deteriorates. We've been watching months and months now of inflation expectations normalizing after this, the tariff shock. And we can see sentiment has been kind of idling here, waiting to see what'll happen and if it'll all work out. Well, if we get another big push higher in inflation expectations in this survey, depending on when it was conducted, of course, or at least we can anticipate from the way that the survey ends up looking, that the next one is going to have a big jump in inflation expectations because of all these shenanigans with oil, well, then sentiment is going to crater. And if sentiment craters, what does that say about the pathway for consumption, whatever the GDP revision ends up giving us? Well, it's not going to look good. And that, of course, raises the question not just of a war, not just of a shock, but of stagflation. An economy that's moving into some sort of a downturn in the business cycle at the same time that the Fed is powerless to do anything and has to wait for the economy to well and truly crack so that inflation falls apart for lack of demand so that it can act. And that is not good news, clearly, for risk sentiment. Now, we are going to get this PCE inflation number. That's the Fed's favored inflation gauge. The expectation here is for the headline, we're going to stay at 2.9%. For the core, which excludes energy and food, we're going to come in from 3.1 to 3%. But this is very dated data. In fact, we got the February CPI report earlier this week. It was non-controversial in the data itself. We can see steady at the headline at 2.4, steady at the core at 2.5, some welcome disinflation in services and in goods. Nothing terrible going on in food, although we're a little bit spicier. And although the increase is already starting to happen by February in the energy component, it's still very, very modest. So when you look at the overall setup here, the Fed's core argument that goods inflation is putting in some sort of a plateau, that services inflation continues to trend in the right direction, and that what this will do once the tariffs rebase out of the calculation is give you 2% inflation or very close to it. All of that was comfortably on display in this CPI data, and the markets looked at it and said, well, that's cute. We know better. Look at what's happened since. This data is too old to matter to anyone. And so when you look at the PCE result, if this was too old, that is certainly too old and almost assuredly does not matter for what the markets do next. In fact, we can see here that as crude oil has been surging, so too have the 5-year and 10-year break-even rates. Those are the inflation expectations baked into the bond market. Not surprisingly, they've been rising since the beginning of the year because crude oil has been rising since the beginning of the year. And as we got this rapid acceleration in oil, they have followed. And so perhaps the larger and more interesting point here is where PCE is going next. Here's the Cleveland Fed's model here. This is the Cleveland Fed's nowcast. They cover PCE and CPI. And we can see that for March, we're heading higher, where the headline PCE number is within a sliver of 3%. Now, that's clearly more in line with what we're seeing out there than these expectations. And so, although we might get some shifting in this, depending on what comes out tomorrow, anything short of a crazy upside surprise seems unlikely to mean much. And of course, the JOLTS number is from January. So that too looks like it's probably stale. Again, unless the numbers are so shockingly off forecasts that people are forced to pay attention. And otherwise, this entire situation is a crude oil story. And so from a positioning perspective here, I'm still short a little bit of gold on the futures side and long a little bit by selling a put vertical, obviously with a lot more duration, 64 days on this position. Now, clearly today, the futures are working. This isn't, but that was the whole idea, to be long gold in the long term and short gold in the short term. Short because the yields rise is going to pressure a metal that yields nothing, making it unattractive. Long, longer term because the deglobalization narrative that's been feeding gold has been entirely independent of anything having to do with yields or the dollar. Frankly, gold hasn't cared about its usual foils. That deglobalization narrative has been the primary driver. And so I'm looking here to kind of straddle both sides of the market tactically, outright short the futures near term to capture some opportunistic opportunity, but ultimately looking for any weakness to be a reason to buy gold. Now, in the dollar, some frustration with this Aussie dollar, which has attempted to break out higher, failed, attempted to break down, failed, attempted to break out higher again, failed, and is trying to break down now and isn't giving confirmation. So this has been a frustrating thing. I'm currently a little bit long, but I'm also, of course, as my core position, long the dollar against the euro, long the dollar against the pound, and in the spot market, long the dollar against the yen. So I have a little bit of short dollar exposure here against the Aussie. It's been annoying to nail it down, but nail it down we will eventually. At this point, I'm straddling both sides of the market, and that's probably not the worst thing given how volatile things are, but very biased long dollar in terms of aggregate exposure. Still short risk, short Bitcoin through the IBIT ETF, own the put vertical there. Still short the stock market broadly. IWM is the Russell ETF, own the put vertical there. I added duration into my NASDAQ put vertical today. It was up to 15 days to expiration and making a little bit of money. So I took the profits and reestablished with now 49 days of duration. So reloaded the chamber there. Still very long oil, still plenty of time on the SPY put vertical that I own here. And of course, still nibbling on a few out there ideas from a knock-on perspective, still own the put in KIE. That's the insurers ETF, looking for all of this consternation to be a pressure on credit markets. And in particular, that private credit story where weakness and malinvestment are already on display because the insurers are a great secondary order effect. They own a ton of these private credit exposures. And if the private credit, which has already been hampered, is going to get hurt, this ought to come next. And we're seeing weakness there. And also own the put on IEF. This is the middle of the curve bonds ETF, 7 to 10 years. Of course, short that, looking for yields to keep climbing. So very leveraged here to the higher yields, risk off, stronger dollar, higher oil narrative. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go thereafter. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, please like and subscribe. Macro Money is back next week. I'll be back with Chris for Futures Power Hour tomorrow, where we'll try to make sense of these markets and, of course, for Last Call as well. So come and join us for that. In the meantime, good luck out there. Be careful. Happy trading.
Get tasty, free market. Come on, you know it, can you feel it?